Hey, break a leg.
All right. Thanks. Hey, everybody. Hope you're doing well. Sorry that we're starting about 3 minutes late, but we had a little bit of a technical issue. No big deal. I'm sure everything's working great right now. What could go wrong? Anyway, I want to say thank you for coming to the Online Traders Summit today. If you're watching us on YouTube, like and subscribe. It helps us a great deal, and we really appreciate it, and it'll help us keep bringing great content to you. If you have any questions as we go today, make sure to ask them. In GoToWebinar, you can ask them in the questions box, and we'll be able to see them and chat them out to everybody and all that kind of stuff. If you're watching this in YouTube, just ask us in the actual chat. So, welcome. We're gonna have a great day today. I'm very excited to kind of kick today off. And you're going to get a legal disclaimer to start as well. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. Again, I want to say thank you for coming. As you come in, say hello, say hi. If you have questions, make sure to ask them. If you have comments, all that stuff is very, very welcome. Before we start, I want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a long-term sponsor of all of the events we do, the Online Traders Summits, the Traders Conferences, all of those stuff. You can get a free issue if you register for today's event, metastock.com/traders-summit. So if you haven't yet, I'd encourage you to join the Traders Forum, our second sponsor for today. In the Traders Forum, you can get live market chat. You can learn a lot about the markets, learn a lot about technical analysis. It's a community of traders helping other traders, and you can join for free. And thetradersforum.com. I hope to see you there. So, and of course, we're Metastock. I'm going to talk more about Metastock as we go. Metastock's been the highest rated software in its price category for 32 years in a row, and we really appreciate all the people that have been using Metastock over the years. Great technical analysis software platform. I'm going to be talking a little bit later about kind of how you can use it to help you with your trades. But let's get started for now. John and Jack Kosar have done a number of presentations for Metastock now, and I think that number is maybe like 5 or 6. It could be higher though. They always do such a good job. I always kind of like their take on the market, what they have to say about the market, all that kind of stuff. And we keep bringing them back because they just do so dang good. So let's go ahead and get them started. And there you are. I can see you guys. I can hear you guys. I can go ahead and stop sharing my screen. And then I'm going to make you guys a presenter, which should allow you to share your screen. And we'll make sure this works. All right, I'm just waiting for it to come through. Okay. All right. Very good. Well, I'm going to go ahead and get out of the way here. I can see everything. Hope you guys are doing well. Kick us off today.
Good. Thanks, Jeff. Thanks, everybody. Good morning from Chicago. And what we're going to do today is just kind of go through our approach to markets. It's a little bit different, I think, than your classical technical analysis approach. So the question everybody wants to know is, we've already had a rally, right? Are we going to keep going over the fourth quarter? That's the question that we're answering, or we're getting asked by our subscribers. And so we're going to try to answer that question the Asbury way. And that's looking at a lot of models that Jack and I have built over the past 10 years. And my background, for those that don't know me, is a little different, I think, than your typical technician. I spent 17 years on the trading floor at the Chicago Mercantile Exchange back in the 80s and most of the 90s. before there were computers on the floor. We used to walk around the floor with a pencil, and we used to make point and figure charts. And you could tell all the smart guys because they all had their heads down looking at their charts and they kept running into each other on the floor. But so my approach is very practical. And as I went through my career, I started to rely a little bit more on building models than focusing on one indicator. And that's kind of the genesis of what Jack and I have done together. Jack went the academic route, which I wanted him to. He's got his master's degree in finance from Illinois Tech here on the south side of Chicago, one of the best business schools in the country. And between us, we've got some experience and we have some know-how on how to really see what works. Everybody finds their favorite indicator and they fall in love with them. And I think it's very easy to let your mind play tricks on you. You think your indicator is indestructible until you start putting some real money behind it. And then you usually come to the rude awakening that you may be better served to use a bunch of indicators and not just one. So I've been around a while. We've spoken at a lot of various events over the years, which has been great for us. A lot of media coverage. I'm still doing Schwab once a month, and I do an educational webinar for Fidelity Investments a couple of times a year. Jack just did his first solo on Investor Business Daily on a podcast there. So, you can find us around. In fact, if you go to our YouTube channel, which is highlighted up here, all of the ones that we can possibly put up on the YouTube channel are there. If you like our approach and you want to get more stuff from us, you could subscribe to that. There's a ton of videos in there. I just did a bi-weekly podcast yesterday, Sunday. That's about 30 minutes long. So again, if you want more information, that's a good place to go. Our approach, purely data-driven. I do a lot. I'm still looking at the indicators that you all are, indicators that we can get through Equus, get through Metastock. The only difference is we're back testing them and we're putting them together like a lineup. If you've ever seen the movie Moneyball, both of my kids, Jack and my other son, Brett, they're both college baseball players. So we look at a lot of things in the context of baseball and building a lineup. And just if you've seen the movie Moneyball, they were quantitatively picking these guys that nobody else would have picked because they were the guys that were probably the least, they looked the least like athletes, but they found quantitative qualities about them. Like the guy, the leadoff guy, wasn't he a catcher? He was a catcher. He was overweight, but the guy got on base all the time, either by taking a lot of walks or just getting hit by the baseball. So we kind of do that here with markets. We back test all these different indicators, and if we want an indicator to show fear, how fearful the market is feeling, we'll pick one indicator. If we want to see market breadth, we'll pick another. Just like building a baseball lineup, each of those indicators has its job to try to either keep you from losing money or to show you when the market's particularly strong, or a million other aspects to markets. But that's kind of what we do. We just try to answer two questions, basically. Either risk on or risk off. Am I in the market or am I out of the market? Am I taking equity exposure off or am I putting it on? And then what do I buy? When the market's going up, what should I be buying? So ideally I get the market direction right, which isn't that hard to do because the market goes up most of the time. But then where can I be so I can try to outperform my benchmark? Our benchmark is the S&P 500. So it's just kind of a systematic approach is what we do. So we built these various models. We're going to go through them. I'm not going to rattle them off. We're not going to go through every one of these models. But what do we got here? 7 models that we've built. We've also built 4 model portfolios that we use to manage money. Our model portfolios, I should say, and we'll take a look at these in just a little bit. Um, they are used to manage money for individuals and also for other RIAs. So we're kind of servicing both sides, the professional side and the individual side there. This is where to find us. Substack, we have a free Substack. So again, if you like us and say, hey, I'm not ready to buy anything from you guys, but I'd like to follow you, you can sign up for Substack for free here. Or you go to the YouTube channel and you can subscribe there. You can contact us and we'll give you links to whatever you need so you can get more Asbury research if that's what you want to do. I'm going to let Jack take the glossary of terms. There's a lot of terminology we use that we like to hit up front.
Yeah, so just a couple of key things because we're going to be shooting these off ad nauseum over the next 45 minutes or so. So maximum drawdown, it's really a peak to trough in terms of how much you could lose, how much a model or how much a stock has lost over a time frame. So if you go back over a year, you take from the top to the very bottom, you would have the maximum drawdown of as a percentage of how much you've lost for that particular indicator. Standard deviation, really just kind of the wiggle you can see in your returns. A lower standard deviation is more consistent returns and lower risk. So you really just kind of want to see the ebbs and flows of your portfolio with the standard deviation. With beta, a stock with a lower beta suggests more stable investment, less volatile. Beta is just going to tell you with a market move the expected movement of that particular stock. So if you have a higher beta, the market's moving up, you would expect that stock to move up higher than the market. If you have a lower beta, it kind of works on the reverse. Risk-adjusted return, that's really important to us. We really focus very heavily on keeping our risks down. We tend to have older, wealthier clients that can't really take the big risks. So we take a risk-adjusted return. This allows us to understand not only what returns you're getting, but what your returns you're getting per the unit of risk. Sharpe ratio is kind of another way to look at that. You're taking your expected return of the portfolio, subtracting it from the risk-free return and dividing that by the standard deviation. That kind of gives you a excess return divided by your risk type metric. A good Sharpe ratio is going to be at 1 or better. And then annualized total return, just the average yearly growth of investment over a specific period of time. And correction protection model. This is kind of our flagship. This is the model that my dad built, and then I've helped somewhat update over the years. This is a dynamic, data-driven model. We kind of use this model as a risk-on, risk-off understanding of kind of a wealth preservation tool. We want to be able to get into the market when the market is trending upward and get out before it starts to go down. It is a series of several indicators. I guess the kind of the key concept of a lot of what we're doing is we don't like to just rest on, takeaways that you guys can have from us is we don't want to rest on one particular indicator. One indicator could fail any percentage of time and can kind of leave you exposed. But when you can kind of key several indicators that are not necessarily correlated with each other together, you could end up having a little bit better of a idea of what's going on with your models or your trading.
Just real quick here, when you're trying to explain a model to people, a picture is worth 1,000 words. So this is CPM, risk on and risk off. This is going back 2 years, since October of 2023. When we go risk on, we don't find out about it until about 2 hours after the close because it's based on the closing data. Then 90 minutes before the NYSE open, all of our subscribers get a notification from us via email that says we are now risk on or risk off. When we're risk on, we're green. You can see this really starts with the November bottom that we made in 2023. The last transaction, let's call it, is we went risk on here on April the 24th. We actually, this was a this is maximum drawdown. 18.9% this year from the peak here in February all the way down to the low. This was April the 7th. Our maximum drawdown here in the CPM was 9%. Was it 9?
It was 9.9.
So a little better than half. We just went back to risk off. Now, risk off does not mean sell everything out, go hide under your bed. It just means that for what you're doing, it may mean you go from 100% equity exposure to 50 or to 75. We have model portfolios that we've built, so when CPM goes off for us, we move from SPY over to BIL. BIL is a ETF that tracks the 1 to 3 month yield of a U.S. Treasury bill, currently yielding in the 4% neighborhood right now, maybe just a touch less. But you get an idea of the cadence. When this goes risk off, it doesn't know if it's going to be risk off for 2 weeks or 2 months or 2 years. It can't see the future. It's not a crystal ball. It's a math problem, but it's an algorithm. But that's generally what we're trying to do here, is capture the upside and get out of the way when the market goes down.
Yeah, it really it takes away the interpretation a lot of times. Sometimes you see some of these indicators on charts and you're trying to interpret them. And what the CPM does, because it's data driven, is it takes its inputs and it kind of spits out the answer. We look at it as a dynamic stock bond kind of portfolio instead of a traditional advisor putting you in 60% stocks and 40% bonds. This kind of tells you when to be in the market, when to be in stocks, and then when to be in bonds instead of statically holding that position. CPM is not super active. It has 5 round turns per year. A round turn is a buy and a sell, so about 10 trades. No shorts, no derivatives, just kind of clean with the S&P 500. And in general, CPM has had better risk-adjusted returns than the S&P 500, according to Sharp. It sticks very closely with the S&P 500, but it does so with less risk.
So again, it's dynamic rather than static. It never made sense to me that when you go to an advisor, I know a lot of you are self-directed, but typically when you go to an advisor, they ask you about a dozen questions, then they determine what your allocation should be, and they set it and forget it. That's a static asset allocation. It usually looks something like a 60-40 portfolio. Coming off the trading floor never made sense to me. It was like, wouldn't you want the market to tell you, whether you should be risk on or risk off, and not some guy in a suit that you saw him 3 years ago and he buys you a steak when he's in town? How do you guys use this, right? So that's nice. We've got this model. How do you use that? You may have half a dozen favorite indicators. You don't have to be super sophisticated with this. We've got software that does all this for us. But take your 5 or 6 or 8 indicators that you use with Equus, whether it's a stochastic or it's a Wells Wilder tool or whatever it is. Start to plot them. See how they do together. See if you have 5 of them and one of them is giving you a sell signal, but the other 4 are green. Start to track that. And you can kind of start to quantitatively use the tools that you like. Put this in Excel. You could put it with a pencil and a legal pad, but start to bunch up your indicators. That's the premise of that kind of Moneyball thing, is where you pick your best players and you put them in a lineup.
Drawdowns. We talked about maximum drawdown. What the CPM has allowed us to do is really avoid the major drawdowns in the market. 2020 was a big one, 33.9% in terms of the maximum drawdown for the S&P 500. Our CPM model allowed us to only have a drawdown of 9%. What does that really mean for us? As you can see, CPM has consistently been able to avoid larger drawdowns this year, 9.3 for CPM, 18.9 for the market. Why is that important? Why drawdowns matter? This is a chart we like to show people just so they understand. When you've lost, when you have a drawdown here, so for example, we got a 40% drawdown, it takes 67% of appreciation in the market to get it back. And when you're an older investor, when you're younger, in my maybe age cohort, you have some time. When you're a little bit older, it's harder. These 67, 100%, 100% returns that you need to get back just to get back to even can take sometimes up to several years. Obviously, those people in the financial investing during the financial crisis understood that there were several years before you got back just to even. So that's why we think having these models built that avoid drawdowns are important to keep your capital in your pocket.
Yeah, just real quick here, just for context, the max drawdown during COVID, which was based, I think it was February to March. It was really fast and furious. That was 34%. So at 30%, you need a 43% move the other way to get back to break even. S&P's up 40% right now from April. In 6 months, it's gone up 40%. So we're in this neighborhood now where, let's say if we have a 40% correction, 67% to get it back. So if you're an older investor, again, if you're young, it's different. If you're an older investor, it's like football, right? Bears won yesterday, by the way, as you should all know that. But if you're older, it's like being in the fourth quarter of your investing football lifetime, your football game of your lifetime, if you will. When you have a lead in the fourth quarter, I'm in the fourth quarter, certainly, of my investment time horizon, my investment football game. I don't want to be throwing the ball up in the air. I don't want to be doing flea flicker plays behind the line of scrimmage. I want to give it to my big fullback, have him take whatever the market gives me, but don't turn the ball over because I've already got a lead. That's when this is especially important, is when you're in that fourth quarter of your investment lifetime.
So yeah, just CPM, in terms of how we performed, like I said, we have stuck really close with the S&P 500 going back to September 29th of 2017. That date isn't random. That is, we have a couple of our indicators where that was the earliest data point that we had. So there's no cherry picking here. That's just exactly the length of time that we've tested this particular model. As you can see, we stick with the market. Our inception look back, we're right around the S&P 500. Trailing 2% a little bit here in 5 years. And again, the goal for this model is not necessarily to outperform the market, but is to give you the market with significantly less risk. And you can see here that this is kind of what we've done. Standard deviation since inception, about 4% lower, which means a little bit less wiggle in your portfolio. And the keyness, key one here is maximum drawdown. We're a big maximum drawdown company. 20.2% for the CPM and 33.9% for the S&P 500. Really, again, this year we're about half in terms of this, in terms of the drawdown. So S&P 5 performance, like I said, we stuck right with the market, but we did so with less risk. What we've also done, and it's kind of, something that I talk about a little bit more with some of our models, is trying to generate a little bit more alpha, doing so with leverage. In this case, CPM Ultra, what is it? It's a mix of trading SPY and SSO. SSO is a 2-time levered S&P 500. And the reason we feel comfortable sometimes using leverage, which kind of normally we would otherwise be a little bit hesitant to do so, especially with our clientele. We just talked about fourth quarter and not wanting to turn the ball over. But because of the defensive metrics that we built using multiple indicators to try to keep ourselves on sides, we contend that we can outperform a little bit here. Historically, going back to our inception date, about 5% of outperformance. And this year we're looking through the third quarter of about 4%. Why are we comfortable doing so? The risk metrics. We have similar now risk metrics to the S&P 500. So using a levered product, which should theoretically be double in all the risk metrics, we should be a little bit high, significantly higher in standard deviation, double in the max drawdown. But because we using multiple indicators to keep us on sides. Remember, we have these models are built on combining kind of a lineup of indicators. It allows us to stay on side and allows us actually to take on a bit of extra risk. If you're comfortable with trading with S&P 500 like risk, you can take on using something with a little bit of leverage to be able to outperform. So it's kind of playing with numbers a little bit, understanding that when you have a good offensive line, you can take a little bit more risks as long as, again, you're comfortable with S&P 500 like risk.
And one thing, just one final note on CPM, the CPM signals do not change. Those arrows, the red and the green arrows, those are the signals. That stays the same for both CPM and CPM Ultra. The only difference is CPM is strictly trading SPY. we're going from SPY. If we're risk off, we go to BIL. In CPM Ultra, when we go risk on, we're going, if we had a hypothetical $100,000 account, $50,000 of that would go into SPY and $50,000 would go into SSO, but the signal remains the same. We're not playing with the signal. All we're doing is we're jacking up the amount of risk that we use. The reason we can do that is because the models are built to have substantially smaller drawdowns and still stay really close to the S&P 500. Very hard to do that. The Asbury 6 is probably the indicator that people know us for, just because of years of doing interviews. Everybody wants to know what the Asbury 6 is, right? Because I'm going to show you in a minute. It's colorful. It's a little box. It's easy to read. But what we did was, excuse me, allergy season here in Chicago. What we did 10 years ago, it was different, very much different. You could look at the S&P 500 and put an indicator or two on top of it, maybe volume, maybe a MACD or some kind of like a momentum tool. And you could maybe look at it in 2 or 3 different time frames, have a pretty good idea of what the condition of the market is, what the near-term health of the market was. You can't do that anymore. Last week, I think 3 of the days last week, we had 100-point trading ranges, like where there was one when we open up 80, up 80, and then we were down 30. It's the Wild West out there. So it became more difficult for me, even though I've been doing this all my life, to not get faked out of my shoes trying to chase the tail of the S&P 500. So we said there's got to be a better way to do this. I took all of the indicators that I had success with on the trading floor and then off the trading floor, and we made a list of them. It's actually sitting right here. You can't see it, but it's something that we update all the time. It's kind of a roster of players, going back to the Moneyball analogy. So we started to back test them like a lineup, right? We back tested them in groups of 3, in groups of 8, in groups of 5. We finally came up with 6 that worked really well as a team. And by that, I mean when 1 or 2 of those indicators wasn't working well. Nothing works all the time. I don't have a favorite indicator because they all have an Achilles heel. But we found 6 that were different enough that we didn't get thrown off very often. This is a day-to-day measure of the market's internal health. It's like an EKG for the market. It shows every little wiggle. It doesn't mean it's time to go to the hospital every time you look at it, but it shows you every little wiggle in 6 different dimensions. We're looking at relative performance, investor asset flows, volatility, volume, all these different things that tell you different aspects of the health of the market. It's updated every day after the close, about 2 hours after the close. It's available on the research center of asburyresearch.com, which is a paywall for us. You can see it's a heck of a lot more active than the CPM on purpose. It does a pretty good job of picking off these tops here that we had, and a really pretty good job of also trying to catch the lows, but it moves around a lot. We want that EKG. I want to know every day if the market, here we go. This is what it looks like. So there's 6 of these metrics. When they're green, they're positive. When they're red, they're negative. Those numbers are the dates when that particular metric either turned green or red. You can see there's a lot of activity around here. 10/16, 10/17, which was the end of last week. That means for a lot of these indicators, we're kind of at a balance point where the market either has to get off the dime and resume the move higher from April. We're up 60 here, so who knows? We might be down 60 by lunchtime. But right now, it looks like it's starting to turn back higher again. When all Asbury 6 are positive, when all the Asbury 6 metrics are positive, market internals are the most conducive to adding risk to portfolios. Each negative reading adds a new additional element of risk to participating or existing in new investment ideas. We kept this internal for a couple of years, and then we back tested the heck out of it and really fine-tuned it, changed some of the indicators, changed some of the metrics. This first thing that I do, this is the last thing that I do, is an hour or 2 after the close, when the market is done and all the data is in, I want to see what this looks like for the next day. So I want to know if it's all green, I'm not worried too much. It's cruise control. There's not a lot of digging for me to do. When we're 3-3 or 4-2, kind of like we are here, I know the market's at a tipping point. So I'm spending a lot more time trying to figure out which way it's leaning. There's a lot of different ways to do that, but this is my EKG. This is what they look like. And again, for those of you that are using the Metastock product, I started using Metastock, I think, in the 80s. My number, my Metastock number is like 3 or something. I've been doing this for a long time. But what Metastock is really good at is setting up a template for all of these metrics that you look at every day. So this is set up for me every day, and I look at it. It's the monthly rate of change in the S&P. It turned underneath its 21-day moving average on October the 9th. That means the monthly momentum is negative or down. That's why we're near-term negative up here. And just something as an aside, the zero line in a MACD is very important. It's kind of a line of demarcation. Note that on June 18th, we tested it, bottom in the S&P. We tested it on August 1, another bottom right there in the S&P. Hopefully you can see my mouse move. August 21st, bang, another bottom. Now we had another one on October the 10th. So as long as we continue to move higher from here, we're going to get another leg up. If we roll underneath this zero line and move lower, that's when you know the trend has changed. It'll be an indication that we've got a top here up at the recent highs, which is about 40% off the April lows. So that's one of the A6. This is the relative performance of stocks versus high yield bonds. We use SPY and Junk for that. Note how well it's defined the trend in the S&P 500 down the lower panel. Note that we're sitting right on that 21-day moving average. Does this relative performance, relative comparison know where the 21-day moving average is? No way. Can it be manipulated? I think it's impossible to try to manipulate two different assets to line up on top of a moving average. But it's telling me right now that this is in balance. We either resume from here, or if we roll over and go into the negative side of this 21-day moving average, this particular metric has turned down. Again, for those of you that are using the Metastock product, if you've got your favorite charts, set them up into templates, put them aside, put them into a separate folder, start to look at them as a unit, like you're building a baseball lineup. Your leadoff man gets on base. Your two hitter is going to hit the opposite field and move the runner. Your three hitter is going to hit for extra base, and so on and so forth. But you can do this. You can create that kind of an analogy, but for investing by picking out the indicators that you feel comfortable with and build in them into a lineup. This is ETF asset flows. The AUM of the S&P 500. Note that it's expanding on a 21-day basis. Why are you using 21-day? That's Asbury Research's tactical time period. You should know what yours is. It doesn't have to be what ours is. Our tactical time period is 21 days, a business month. Our strategic period is 63 days, a business quarter. John, does that mean you'll only take trades that only last a quarter? No, I hope it lasts 30 quarters and I'm a millionaire. But those are the time frames, so I can determine what indicator is used for what. When I've got a 21-day moving average, that is tactical for me. This is a tactical tool. If I want to find where the trend is, that's strategic for me, and that's 63 days. If you're a day trader, yours might be 1 day and 3 days, or it might be 2 hours and 2 days. Figure out what your time frames are, know them, and separate them into different categories, so you're not conflating one with another. Then you've just got a bowl of spaghetti. You don't have any. You need hard rules. You need to know what your tools are for and use them in that way. This is volatility. This is just the VIX. The VIX moved up above the 21-day moving average. There it is again on September the 29th. And that is typically when the market struggles a little bit. And we're doing that now. We've been inside of last Friday's range now. This is last Friday. not yesterday, the Friday before, for 6 days in a row. That is indecision. Volume. CVI is cumulative volume above the 21-day moving average, positive, below it, negative. Look what it's doing. Banging around on either side of it. More indecision. This is a balance point for the market. Either we're going to resume, take out the old highs and continue higher maybe into the end of the year. The seasonality starts to get better at this time of year, or it's going to roll over and we're going to go into something negative. So the next best thing to know and what the market's going to do next, which nobody knows, it's guessing, is to know that we're at an inflection point. The Asbury 6 is telling us that we're at an inflection point now. Finally, market breadth. Market breadth underneath, this is an AD line for the NYSE. Underneath the 21-day moving average, it's negative. So we're 4 and 2, but look at tactical decision point, tactical decision point, tactical decision point. Tactical 4 of these 6 are on the line, so to speak, which means maybe this week, we'll see if we get the CPI data out on Friday, if that's going to be postponed or if we're ever going to see any real data again. But right in here is a tactical decision point for the stock market.
Another way we like to try to group the market is kind of from a top-down approach, and we've done that with our sort report. So our sort report goes into bringing into 3 very important things that we find in when we're looking at making investments. First one is trend. What does trend mean to us? Trend is price. We want to be purchasing things that are going up. So, we do this just with the simple moving average. And in this case, it's a longer term moving average, but we want to see assets that are moving up. Once we find and kind of filter out for the assets that are moving up, we go to relative performance. We always use a relative performance versus SPY, as we see the SPY as the market. Because I don't want to be invested in anything that is not outperforming the S&P 500. And on top of that, we then go to money flows, which is then conviction. And I kind of build these in that order in terms of how I'm looking at this. Money flows is making sure that investors are actually voting with their dollars and sticking into those particular ETFs. As you can see here, we have got a little bit of a mixed bag. But again, I say use this as a top-down approach for people to highlight where they want to look for investment opportunities. We've also can use this particular thing as a filter for your ETFs. We mainly trade ETFs at Asbury. A little less volatility on the kind of intraday movements. Stock prices can be a little volatile, especially in the current dynamic that we are with stocks kind of being memes. What this table is telling us right now is, and as many of you are probably very aware, gold is trending, outperforming, and showing asset appreciation. We are also seeing that in U.S. tech, emerging markets, and ag. One of these things is kind of not like the other. Seeing bonds kind of start to come up. I try to read this thing a little bit like tea leaves at times too, as I watch things move up and down throughout the throughout the table. Right now we don't trade crypto. We also don't recommend people trade crypto. But what I do like, the reason I have Bitcoin on here is I kind of use this as a risk gauge metric. When I see it as all green, it tells me that investors, largely are willing to take on risk, as I see Bitcoin as being one of the riskier assets. When I start to see that start to pull off or underperforming, flows are coming out of crypto, it tells me that full-on willingness to take on unbridled risk is starting to weaken. And then also seeing ag come up also kind of highlights to me potentially, as bonds are starting to outperform the S&P 500, that we could see some things. So we use this table in kind of multiple different ways. Again, could use as a filter for ETFs in general.
Let me jump in here real quick. Global equities, ex-US. That means developed markets, not including the US. There's going to be a chart on this later, so we can see it here. 3 green all the way across. So global equities, ex-US, means that the rest of the world is starting to strengthen versus the US. Oftentimes, that's an indication that the U.S. market may be getting tired. The rest of the world might be getting a little concerned about whatever they think is happening here in Washington or geopolitical relationships, whatever it might be. So I'm going to show you the chart of this a little bit later, but I wanted to point this out.
Next thing we have is our SEAF model, which is our sector rotation model. We kind of built this in order to try to track money flows going around the S&P 500, where are investors voting with their feet. This is really tracking the velocity of money through 3 time periods. We have our trading week, tactical month, and our strategic quarter, and we rank these kind of like a golf score. The lower the score here, the better. In this case, right now, we are aligned with utilities, tech, and communication services. I've been joking that utilities has been playing kind of on both sides of the fence all year. When it's lined up with technology and communication services, it's an AI play, and when it's aligned with something like consumer staples or industrials or energy, it might be a little bit more of a defensive play, so because people need to keep their lights on. This is one of our rainbow charts. So what we did here is we wanted to track the daily SEAF score up top for the particular sector. In this case, XLK has been doing very well lately. On the bottom here, we have a relative performance versus SPY. What you can see here is when we are upper favored in terms of the ranking for technology and SEAF, we tend to see nice relative outperformance. We went roughly risk on for technology September 9th after having kind of a brief little interlude, and we've been up roughly 6% in relative outperformance versus SPY during that time period. The SEAF model, what it really does is it tells us kind of where to be invested. How do our clients use it? Some use it as a model. So as a model, we have top 3 are always invested, but other users use it to kind of put on their individual trades. We have some clients that are using it to trade equities, so they know that they have momentum of asset flows at their back for these upper, in terms of favored ranked sectors, and they can maybe increase their positions or increase their exposure to these sectors. But they also use it as places to avoid. If you have some financials or energy that you have a lead in, and you can now see that we're at the bottom, that means money is largely leaving these sectors. You could pare down those positions or avoid buying stocks in those particular sectors. One thing I wanted to note for this chart, it does go back 1 year, so we kind of just tracked this for a year just to see exactly how these particular sectors have reacted over that time frame. What has SEAF done for us? Outperform. It's really kind of our alpha model in terms of our exposure. It is always invested in the market. Some people ask us if CPM or A6 is risk off, do we pull our trades from SEAF? And that answer is no. We believe that a lot of managers are forced to be invested in the market at all times. It's their investment mandate. And even in bear markets, there are sectors that can outperform. We've seen that with energy over the years, where the whole market was down, but energy was up, and it made better returns for us. As you can see since inception, and again, this isn't a random date, communication services was added to the 11 sector spiders. And as by the time we normalize the data, that's kind of where this goes back to, which is why we also believe that when we're backtesting models, staying in a 5 to 7 year range is important, because we want to know what our models and what our indicators are doing with the current market environment, and not necessarily what the market environment was 20 years ago. Nice relative outperformance over that time frame, about 8%, and as of this year, doing pretty well with 3% outperformance through the third quarter. What is it doing? More importantly, always to us, is what it's doing on the risk side, mirroring the S&P 500 and standard deviation, keeping your drawdowns slightly lower than the S&P 500, and again, we're doing so with outperformance. So keeping those risk metrics down, if you're willing to take S&P 500 like risk, and again, these things don't make money every quarter, but what we found is over time, with consistent investing and consistent rules, which is really the takeaway here, is finding the systems, finding the indicators that you like, and sticking with them over a long period of time, and not necessarily, obviously if you're consistently losing, you kind of mix it up, but if they're sticking with something that is true, a lot of you guys are seasoned, experienced traders. sticking with something and kind of being consistent with it with these rules.
Okay, now we're going to look at some actual charts. I wanted to break this up a little bit and kind of show you, we've got a report that we do once a week. It's called Keys to This Week. Probably look at 100, 120 charts, something like that, a ridiculous amount of charts at the end of the week. And we pull out 10 that we think are the most germane to what the market's doing right now. So here's 4 of those. This is NDX, which is big cap tech. Big cap tech is, that's where the Mag 7 live. And down here is NDX versus the S&P 500 on a relative performance. This is daily relative performance going back to April. So since April 23rd, which was like 2 weeks off the bottom on April 7th, NDX started outperforming SPY. That told us the market was getting its leadership from tech, which is where the leadership typically comes from. Maybe secondarily semis, but generally tech. August 19th to September 11th, that trend turned. That made us pay a lot more attention here. And we had a flattening period, right? We didn't roll over and die here in the NDX, but we did go flat, started to lean down a little bit. We recovered on September the 12th. Look where we are right now. We've kissed that 21-day moving average a couple of times last week. And now it's either accelerate and move higher or we roll over. We're right on the line, just like the A6 showed us, 4 and 2, 3 and 3, in terms of what's red and what's green. That's what this chart's showing us. Watch NDX this week. If this right now, NDX is up 1.35, S&P is up 105. So you're getting a little bit of outperformance, not a ton, but for this trend to move higher, we need to get that leadership back. You're going to see it in the Mag 7. You're going to see it here. Watch NDX. That's going to tell us whether we've got another leg higher and a fourth quarter rally that's starting to build, or if we're going to roll over and have a way overdue correction. How do you equate that to the price of the S&P? 65.69 to 65.51, which is a couple of percent below the market, is these 2 lows that we made in September. This is the right side of the chart now, and the 50-day moving average, which is a major trend proxy that was tested a few times in here in August. That's your level. If we break through there, likely that will happen on weakness in NDX relative to the S&P 500. Where's the next stop? 3% lower than 65.50 is 63.50. So that's what we're looking at. If we break 65.50, we roll over in the NDX, we're looking at least another 3%. The next one, which I alluded to earlier, is SPDW, is the Spider Portfolio Developed World ex-US ETF. They make these names like sentences, but SPDW is develop global markets without the US. Note that from February 5th to the middle of June, SPDW was outperforming SPY down here in the bottom. That's when our market was weak, from Feb 5th to really April, but it extended a little bit further on the relative performance chart. Then on June 17th, SPDW started underperforming SPY. SPY was outperforming. That's when the market started to do better. Look what's going on here now. We're starting to outperform again. Not a ton, not enough to bet your mortgage on, but it is starting to outperform. If this continues and you see more, and we have a model that looks at this, it's called US versus the world. It measures the US market versus 25 equity markets in 6 geographic regions all over the world. Watch this chart. If you continue to see relative outperformance by the world versus the S&P, that's another signal that we can have another move down like we did in February, March, and April. This on the right is stocks versus bonds, SPY versus TLT. When stocks are outperforming bonds, the market is happy. It goes higher. When you see underperformance by stocks versus bonds, which we're just getting a little bit here, again, don't bet the farm on this, but we're starting to roll over. If this continues and bonds start to outperform stocks, now we're going to be in a situation that you would expect when the market peaks. So you've got all these different indicators, relative indicators, A6, all the stuff we've showed you today that are all saying the market's in balance and it needs to shift into another gear if we're going to keep that April trend intact. If it does not, opportunity knocks. We like when the market goes down because our CPM will get us out of the stock market. It'll get us into T-bills. We'll wait. We hope the market drops 30% so we can buy that. If you buy them down here and sell them up here, or you sell them up here and buy them back again down here, you still make what's in the middle. You're just doing the equation backward. So we're cool with the market going down. I'd love to buy the S&P 10 or 12% lower than it is right now. These are some individual trade ideas that we put out using those same three tenets that Jack talked about: trend, relative performance, and asset flows. We got out of a couple of ideas here on Friday. We actually got out of XME. We bought XME at 828. We got out on Friday, took out 27%, and most important to me, outperformed the S&P by 26%. Palladium. We bought Palladium on 10.6, short little trade, only in it for 10 days. We took out 13% on that trade, outperformed the S&P by 18%. We're still in our gold miners. We bought Ring on 8.6. That was our first trade into precious metals, and this is what that trade looks like. So we bought Ring on August 5th because we broke a resistance level, started moving higher, and AUM in Ring started expanding on July the 21st. So going into this breakout, we had expanding AUM, and we also had relative outperformance down here in the lower panel as of August the 1st. So on August the 5th, after the breakout, I felt really comfortable with this one because we already had asset expansion. We already had relative performance. So these are the criteria that Jack and I use to find high probability trades. You never know how far they're going to run, but so far we've got 36% open trade profit in Ring and 31% of relative outperformance in the S&P 500, which in a bull market that the S&P's been up 40% in 6 months, that's a big ring the cash register one for us, and we're going to ride it as long as these criteria stay intact. This is why our system works. 2.5 years, 111 trades, where 54% of our trades are winners. Average profit per trade is almost 2%. Average winning trade is more than 2 times larger than the average losing trade. The winner is 2 times larger than the loser. Average winner, 5.4%. Average loser, only 2.4%. The winning trade length in days is more than double the average losing trade. 18 days for our winners, just shy of a month, and only 8 days for our losers, which is about a week and a half. Sharp ratio on these trades is a crazy good 1.7%, and our maximum drawdown was only, where's maximum drawdown? 2.8%. So when you're building a system to trade stocks, to trade ETFs, you want to know what these numbers are. So, get out the Excel spreadsheet and start saying you got to have more winners than losers. Your winners have to be bigger than your losers. And if you know all of these numbers, you can actually put options trades in on these ideas because average winner is 5.4% and the average trade length is 18%. So you can be buying calls that have 30 days left till expiration, get most of that expensive time premium out of there, and you buy calls 5% out of the money, and you roll this over and over and over. Buy some cheap calls with not a lot of time left. That's another way to use this.
Lastly, I know we're running almost perfectly on time, which is
never happens.
So anyway, model portfolios. What we did was we took our models and we kind of put them together in various fashions to get different risk profiles. We have our Asbury aggressive model, which uses a little bit of leverage and blends our models to be again, generating a little bit more alpha. And then to the other extreme, our ultra conservative model, which keeps our drawdowns under 10%, or historically has, these are historically backtested models. The key here, though, is really just we get a lot of questions from our clients. How do I implement these various strategies? And really the answer is you bucket your money. You bucket your money based on your financial needs and what you're doing, and you're really just trying to understand that you have different ways to put them in categories. You have your safe money, so you could put some money, like, for example, in ultra conservative. That is the money that you want to keep the principal. You're trying to grow it, but you're not trying to lose it. And then you could have your Asbury aggressive. That could also be you just trading your own book a little bit, but having various buckets that you know what you're doing and being systematic with it in each particular bucket with a different goal. Just kind of how we've done a little bit. The key note here is this AOR is a 60-40 stock bond portfolio in terms of its return. And we just kind of wanted to highlight here. The blue is the S&P 500. Green, Asbury balanced, and then purple is Asbury aggressive. We can keep, with these systematic data-driven approaches, kind of turning them over and over again. We could outperform not only a 60-40 that you're going to get put into, we can beat the S&P 500, and we can do so, again, being systematic and dynamic with our approach, and we do so with less risk. And it is just, again, it's important to know that the reason we combine all these indicators, the reason we build these portfolios and these models in a way is so that we're not always flying at the seat of our pants. We let data kind of drive us, and it allows us to outperform.
We have investment research. We have money management. We have premium subscriptions, which include all of our models. We also have Substack, which is our entry level. Our basic is $25 a month for the pay, and it's free. Go to asburyresearch.substack.com, and you can get a free version of Substack. We also manage money. We use Charles Schwab, $250K minimum investment, 1% annual management fee up to $1 million. We're managing money for both RIAs and for individuals. So there's your commercial. There's your feeding of the lawyers. And contact us if you want a copy of the PDF. We'd be more than happy to send it to you. And now we're right on the nose, 10 o'clock, so let's turn it back over to Jeff.
I did have one question for you guys from YouTube, if you don't mind.
Please.
Okay. Let me find it. Mike wanted to know, does the CPM model use the Asbury 6, or is it a different set of parameters?
Different set of parameters. We keep those in-house as kind of our secret sauce, but the concept is similar. You're using a set of indicators that we've put together to achieve a goal. Those indicators tend to be disparate from each other. We try not to have several indicators that are the same, several price indicators, but it's similar. There's a little bit of also money management type rule sets in there too. A6 is meant to be raw, and CPM is built to be a lot more stable and a little bit more clean, I guess.
Okay, perfect. Great. Thank you very much, guys. That was great. Appreciate you guys kicking us off today, and we'll hear from you again real soon. AsburyResearch.com.
Have a great conference. Thanks, Jeff. Good to see you.
All right. Thanks, guys. Okay. Let's go ahead and do this. All right. As we kind of get to the next presenter, I want to say thank you to our sponsors today. I'll talk a little bit about Stocks and Commodities Magazine. They've sponsored us since the beginning of when we started doing these events. And we really appreciate all the work that they do. So if you haven't registered already, all of the speakers today have bonuses you can sign up for, including Stocks and Commodities. If you go up there, you can get a free issue just by registering at metastock.com/traders-summit. They've been publishing articles. They've done about at least 17,000 of them. They've got 1.3 million subscribers, and they've been publishing since 1982. So we really appreciate all the work that they've done over the years. We super appreciate them. So we are, of course, Metastock. We're going to start talking about scanning and testing and the ability to use stuff. And we'll be using Metastock all day today. If you haven't tried Metastock, what I'm going to say about it right now, it's been rated the best software in its price category for 32 years in a row. And we're going to offer an extended trial where you can try it for 3 months basically as low as $75. So if you have any questions about any of the products we're offering today, you can go to metastock.com/summit deal. You can give us a call, 800-882-3040, or we can send you some information if you want to kind of ask questions, that kind of stuff, metastock.com/sales chat. As always, if you have questions, put them in the questions box, and we'll try not to miss them. And if you're in YouTube and watching us, go ahead and type them in the chat. So in any case, the next speaker, I like to refer to him as the mad scientist of trading. I'm like, always has some pretty good ideas in terms of how to kind of optimize and how to kind of fit strategies, and kind of has done a lot of work in auto optimization. Very, very smart guy. Very, very good presenter. And Daniel, do you have anything good you'd like to say about yourself?
I don't know about myself.
Okay. Uh-oh. Daniel?
Yeah, that's not just you, Jeff. He's having some issues.
Yeah. I see Nicholas. Okay. Yeah.
Hello?
Yes. Okay, there you are.
Oh my goodness, what happened there? It
I
must be
don't know.
the
I
new
don't know.
webinar software here we're using.
Yeah, we're just a new interface, for GoToWebinar. We decided to kind of use it after about a year of it being around.
Yeah, it's been freezing up a little bit here, but let me just try to.
Daniel, are you at your home studio, or are you on the road?
I'm at our office now, a business center, so
Okay.
it should be oops, that's not the right. I guess that's the right one.
We are starting to see you now.
Okay, perfect. And Jeffrey, if I cut off, let me know, and I'm gonna disable the camera. Should that be the case? Cool, perfect.
Sounds good.
All right.
Yeah.
Perfect.
I think we just had our technical issue for you, so we're good. No
Perfect.
more.
Great. Yeah. So welcome everyone, also from my side, to this Metastock event. It's always so nice to be with the folks from Metastock. We've been collaborating with them for many, many years. I don't even remember how many years it is. Probably 5, 6, maybe 10 years even. We love Metastock for its scanning capability and its computing power. And what I'm going to show you today is something which works fantastically with the Metastock software. We call this AI, artificial intelligence powered trading, to make smarter indicators, which ultimately will help you make better and smarter trading decisions. Now, how this works, we're going to see throughout this presentation. But first off, I want to review a little bit.
Hey, Daniel, we did lose you again.
Beautifully, it was a great win. It hit its target very shortly after we.
Hey, Daniel.
Yes.
We did lose you just briefly there, so I think just maybe let's do it with the camera off.
Yeah, I'm so sorry, guys, for this. I'm not sure what is happening, but hopefully it will continue to be stable from now on. And Jeffrey, please don't be shy to interrupt me should I drop off again. Cool?
Yes, sir. Yes, sir.
Great. So what I was to say is that we found this winning trade using the Metastock software and our indicators. And as you will see today, and this is what we're going to cover today, is that everyone in this room can find these trades in just a couple of minutes. And guess what I've done this morning? I once again used the Metastock software to find another interesting trade idea, another big name, another Mac 7 company. It's a long trade of Google, Alphabet. I can see it here. A long entry signal came in with one of our indicators, which would suggest a long entry around current price levels. This is the wrong level here. And a long entry around current price levels with a stop loss just below the swing low here and the target around 300. And what I'm going to show you today in this presentation is I will show you how I picked this trade, and this only took a few minutes, and most importantly, why I picked this trade. And the beautiful thing about this is that at the end of this presentation, everyone in the room will be able to follow these steps, because these are actually quite mechanical. They're very repeatable, they're very systematic, and perhaps most importantly, they're not very complicated. especially if you use the right tools. Now, let's back up just a little bit. Who am I? Who is this guy suggesting these trades? Well, my name is Daniel Sinnig, and I'm with TradingIndicators.com. In fact, I'm one of the founders of TradingIndicators.com, which happened more than 10 years ago now. And as our name suggests, we specialize in building innovative trading indicators. We've done this for many years. We've done this for clients all over the world, and we've counted them up at some point, and we have built more than 1,000 trading indicators for all kinds of scenarios. So this is really our bread and butter. And with everything that we do, we always try to give it a little extra push, a little bit of extra help, which will help you, the trader, make better trading decisions. And some of our flagship indicators we're going to present today. And in fact, these were the indicators which we used to find this trade of the day in just a couple of minutes. Now, before we get into this, I need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, back to the topic at hand. First off, a quick reminder, we specialize in creating indicators. And as I mentioned before, we always try to give it a little bit extra. We were asking ourselves the question, all right, so there's so many indicators out there. Many of them give us, buy signals or sell signals or some levels and so forth. But couldn't there be something in addition to all this? Isn't there more than signals that an indicator could provide? So we were asking ourselves the same question back in the day, a couple of years back. And, at that point in time, poker, playing poker was a big thing. It was televised quite a bit. And I stumbled on something. I saw, these little statistics which were typically broadcasted on TV. The win odds of a player winning the hand or winning the pot, or the odds of losing it. Now you can see it here for this guy here. This guy, the odds of winning this hand is 80%. Huh. And I was thinking, wow, that's actually really cool. What if I knew these odds if I was playing poker? How would I play poker? Well, obviously, I would only play the hands when the odds are in my favor, and I wouldn't play the hand if the odds are not in my favor. And then I thought, what if we could translate this principle of knowing your odds before entering into a trade? If you could translate these odds into the world of trading, what if this was possible? If we knew before entering a trade what our odds are to having a successful trade, how would you trade? And of course, I think the answer to this is very obvious. You'd only take a trade if the odds are in your favor, and if the odds are not in your favor, you would stay on the sidelines. You would not take the trade. And oftentimes, not taking a trade is the best trade advice that you can get. Now, wouldn't that be beautiful? Wouldn't it be cool if you knew the odds of having a successful trade before? That's the key point, before taking it. Yeah, how would you trade? Now, I think the answer to this is obvious, but what was not so obvious is, can this actually be done? Is it possible to predict to some degree of certainty the odds of having a successful trade? Can this be done? Well, we rolled up our sleeves in our laboratory here in Montreal, and we tackled exactly these questions. And we came up with a technology, we call this the instant efficiency technology, which is able to display directly on your price chart, or in case of Metastock, directly in the expert commentary, the odds of having a successful trade. You can see it here. We even split this up in terms of the odds of having a successful long trade if a long signal comes along, or the odds of having a successful short trade if a short signal comes along. And this turned out to be an absolute game changer to us and to many of our clients, because suddenly, with these odds displayed to you directly on your chart, we are now in a position to make a truly qualified trading decision, a decision of whether we should take the trade or not. This was a great help. It was a game changer to us and to our clients, because it allows us, as mentioned before, to make truly informed trading decisions, only to trade when the odds are stacked in our favor and when market conditions are right for this trade. And sometimes market conditions are simply not right for a certain trade. And these statistics, they would show us if these conditions were right. And on top of all this, these parameters, so these odds, these percentages would also allow us to find the best parameters for an indicator. Yeah, every indicator comes with parameters, with settings, like a moving average comes with the MA period, or the RSI comes with settings as well. And there are better settings and worse settings for a particular symbol and time frame. But how do we know what the best settings are? Well, with these percentages displayed on the price chart, we could actually find out by changing the settings and see how these percentages would change as well. What are the best settings? Now, this will give us some hard facts to find the best settings for a particular indicator. But I have to tell you something. When it comes to tweaking the settings, there's one problem. Not a problem, but it's more like an inconvenience, because finding these best settings, even with these percentages displayed on your chart, can be a challenge for most traders and investors. Why? Well, because it's so tedious. It's so time consuming. Tweak a setting, check out the odds, tweak it again to find better ones, and so forth and so forth. And when you change symbols or when you change time frames, you would have to do the whole thing over again. So we realized this as well, and when we thought there must be something better out there, something that could help us with this. So we invented what we call auto optimization. Now, auto optimization is a feature which we have integrated into our flagship indicators, which will find the best settings automatically for you as soon as the indicator is applied to the price chart. This means that whenever you apply the indicator, it will auto-optimize itself, making sure it's completely dialed in for the symbol and time frame at hand. When you change symbol or time frame, it will re-optimize, making sure that you use the best settings for this particular symbol and time frame, and so forth and so forth. And then this webinar, I'm sorry for all this long explanation, in this webinar, I will show you and we will discover together how these two breakthrough technologies can dramatically enhance the performance of any indicator. It doesn't really matter what kind of indicator it is. It could be a stop and reverse indicator, a trend indicator, a divergence or reversal indicator, a breakout indicator, or a confluence-based indicator. Any of these types of indicators which give you signals will benefit from these technologies. I'm going to prove this to you today in this presentation. Of course, I'm going to show you also in the end how you can get hold of this technology. Let's start with stop and reverse. So stop and reverse is a trading concept, basically, which tells you, okay, we are always in the market. Either we are long or short, but we are always in the market. And the principle works as follows. We take a trade, let's say it's a long trade, we stay into this trade as long as we get stopped out. And once we get stopped out, we reverse our position to the short side. Then we stay in that short position until we get stopped out and go long again, and so forth and so forth. So this is a trading principle. There's an indicator, a very famous indicator called Supertrend based on this principle. It was developed by a French trader called Olivier Seban. He even wrote a book about this topic. It has become one of the most influential trend following indicators out there. It's available for most platforms, including Metastock. And what it specializes on is the early detection of trend reversals. We can see it here. We have these long entry signals, these short entry signals, and as soon as we get into a trade, there'll be a trading stop placed as well. And a trading stop is called trading stop because it only tightens, it never loosens. So as the trade unfolds in the direction that we want it to, in this case the long direction, you can see the trading stop, this green line, will only go up. It will never go down. It will never loosen. It will only tighten, meaning it will only lock in your profits more and more until, and that's the kicker, until it gets stopped out. You can see it here. Now we get stopped out at it, and at this point we get a sell entry signal, and we are reversing to the short side. Also we use a trading stop. You can see this red line here to lock in our profits. And this continues over and over again until basically actually it continues to eternity. Long is replaced by short, which is replaced by long, and so forth and so forth. Now, lots of theory out there. Let's check it out on the price chart. So I'm gonna switch over to Metastock. There we go. And Jeffrey, am I still broadcasting properly? Can everybody hear me without cutting off too often? Just making sure.
You sound great, Daniel. Thank you.
Ah, perfect. Okay. All right. So here we have MetaStock open, and I decided to start with the S&P 500, the SPY ETF, which traces basically the S&P 500, and we are using the daily time frame. And what I've done here is I went ahead and applied the traditional super trend indicator to the price chart. And we can see it here. We have these, the short entry signals and these long entry signals and our stop loss level, this green line here, either for the long trades or for the short trades. And then when we go all the way to the right-hand side here to the current price action, what do we see? What do we see?
Daniel, your audio is cut out for about 15 to 20 seconds so far for me.
Yeah, that was me too, but I wanted to make sure it
Pull back.
was not just me.
Jeffrey, are you muted?
You're back now. I'm not sure about what's going on with Jeff, but your audio, as your partner pointed out, cut out for about 15 seconds. But you're back now.
Oh my goodness, I have no idea what's going on, guys. Actually, let me try one thing. I'm gonna go to my
Okay,
VPN.
to be sure you're sharing your screen so we can see your log. Well, we can't see the password though.
Yeah. The password is not shown. 1 second, guys. Maybe now it's gonna be better. Can you guys still hear me?
Yes.
Okay. Sorry for this. I'm not sure why our technology is letting us down today. But what I was about to say here for the S&P 500, and you guys can see my screen, right? It's still visible?
Yes. Currently, you are broadcasting AV perfectly.
Okay, great. Oof. Hopefully it will hold on. Okay, so what I was about to say is that we have this reversal signal on the traditional super trend on October 10th. This big down bar, which we had on that Friday. That was a Friday. A big bearish day, and we had this bearish signal. But I saw this on super trend. And I thought, I'm not sure I agree with this. This to me, for many other reasons, seems to me just a regular pullback within an otherwise strong uptrend. And I probably wouldn't reverse here my position if I was long on the SPY. And then I thought, wow, this is just a regular super trend. What if we configured this super trend indicator with the optimal parameters for this particular symbol? Because here we just use the standard default parameters for super trend. What if we are using optimized parameters? Would we get a different picture? Let's try it out. So what I'm going to do now, I'm going to switch on the auto optimization feature for this indicator. And don't worry if this seems confusing right now. What I'm doing, this is all explained in the bootcamp that we have. It's actually quite straightforward. And in real life, basically, you will only use optimized parameters from now on, I promise you. What do we see here once this reloads? We can see, all right, with these optimized parameters, we are actually still in this long trade. Look at this. This pullback on that Friday, on October 10th, didn't cause a trend reversal. Why? And for good reason. Look where we are right now. This uptrend seems to continue. We shouldn't be reversing here. And with these optimized parameters, we wouldn't have reversed. Because now, with these settings I've chosen, I told the indicator, hey, from now on, use optimized parameters. Use the parameters which are best for this particular symbol and time frame, the SPY on the daily time frame, instead of just using the default parameters. And you can see what kind of difference that made. Now, finally, we are still riding this uptrend instead of reversing on that Friday bar, which we shouldn't have. And this is possible because now Supertrend is using optimized parameter. So that was one of the key features which we have integrated. But of course, there was another key feature, if you remember. What about these, odds prediction technology, which would tell us what are the odds of having a successful next trade? Where are these? Well, for these in MetaStock, I'm going to be open up the expert commentary. So I'm going to go here to expert advisor and switch on commentary. This will open up in a sub panel right here. You can see it here. We have all kinds of information about the super trend indicator, which we actually call super trend bullseye because it always optimizes. If you scroll down, you can see, okay, um, these are the odds of having a successful trade for the long direction and the short direction. We can see here for the SPY, the odds of having a next successful trade if a new signal comes along are 80%. And to the short direction, only 33%. And this tells you something. This tells you as a trader, when a new signal comes along, whether you should follow the signal or perhaps you should stay on the sideline. And as I mentioned before, you would probably only take a trade if the odds of having a successful trade are in your favor. All right, we can also see if you scroll up a little bit here, what actually were these settings used, the optimal settings used for this particular symbol, for the SPY on the daily time frame. And guess what? Whenever I now change symbols, let's say I go to the QQQ here. All right, I'm going to refresh here as well, reload it with using our auto optimization technology. It will now use optimized parameters. Here we have the QQQ, the NASDAQ 100 ETF. And as soon as this loads, we can see, okay, for this particular symbol, a setting of 6 for the multiplier and 40 was used because they're optimal for this particular symbol. And once again, you can see the quality of these signals. Yeah. Also here, we are still in this long trade. This Friday down bar, which we also had in the QQQs, didn't stop us out. We'll continue to grind higher for good reason because we're pushing all-time highs right now in the QQQs once again. We should not have reversed our position at that point. And this is possible because we are using optimal parameters. And look here where it says for long trades, 100% win rate so far. Every single long trade with these optimal settings has worked out so far. And change it up one more time. GLD, another very strongly trending signal. Gold, yeah. These were the non-optimal settings. Look at this. Up, down, so many trades. Probably not the best idea to reverse your position so many times. What if we were using optimal parameters? I'm just refreshing this chart. So the optimal settings are being used. And you can see once this loads, what kind of difference we get in terms of signal quality. There we go. We are staying in these trades. We are riding the trend exactly as you should be doing for a symbol like gold, which has been going up for a long time just in one direction. You don't want to go jumping back and forth. You want to be riding these trades and getting into these big long trades early on and ride them up. And this is possible because we are using optimal parameters. And once again, if you use the settings used, they are different from the ones used for the QQQ and different from the ones used for the SPY. Why? Because it's a different symbol. The SPY has different price data, has different characteristics as the QQQ or the SPY. And guess what? Whenever you change symbol, it doesn't matter what it is. It could be a stock, it could be an ETF, it could be a futures contract, an FX contract, a crypto contract. This will work on any asset class, making sure that you will always using the best settings possible. This is how our auto optimization technology, along with our win rate prediction technology, can make such a big difference to any trader. So just to quickly summarize, what have we seen so far? Back to my slides real quick. So we've seen a new version of Supertrend, which we call Supertrend Bullseye, which is equipped with auto optimization technology, meaning you always use the best settings regardless of what the symbol is and what the time frame is. You can also see our performance statistics showing you directly in the expert commentary what are the odds of winning your next trade. Again, invaluable information which will help you to make a truly qualified trading decision. And there's so much more, which we couldn't cover so far. We have 2 different reversal modes when it comes to Supertrend, on close and on touch. You can choose your trading style. Perhaps for some symbols you only want to trade long because that's all you want to do. Maybe it's an account where you can only take long trades, not short trades. You can configure Supertrend Bullseye with these settings. We have a whole boot camp on this topic, which shows you how to take advantage of all these extra features. So this is Supertrend Bullseye, an indicator which has been basically revamped and put on steroids, so to say, with auto optimization and our performance statistics. But there's so much more. It doesn't have to be a super trend indicator. It could be any other indicator. What about a trend trading indicator or a divergence indicator or a breakout indicator? Let's check these ones out. I'm going to show you the difference it can make by using these auto optimization technologies. So introducing our Power Bundle 360. So this is a bundle that we created maybe 5 years ago, and it is called 360 because it consists of 3 indicators, one for each market condition. So we can go for a round circle. So we have one indicator for trending market, one for finding reversals, and one for trading the sideways markets and finding breakouts. So real quick, what are these indicators? The first one is called 1, 2, 3 strike, our trend trading indicator, which will give you strong trend entries or entry signals if 3 things are coming together: an increase in volume, an increase in volatility, and we need to have directionality. If all these 3 parameters come together, you will get a strong entry signal, either short or long, depending on what the overall trend direction is. So that's 1, 2, 3 strike. Then we also have a divergence indicator or a reversal indicator called divergence cloud. And as the name suggests, it is built on the principle of divergence. And real quick, divergence basically is a technical concept which shows you a disagreement of price with an underlying indicator. So if they show different things, then this could be a telltale sign that, hey, something is up. Something is about to happen. And oftentimes, this could be an early sign for an upcoming trend reversal or at least a pullback. What we've done with Divergence Cloud is we have built this indicator on a completely new form of divergence. And there's so many forms out there like a stochastics divergence or MACD divergence, RSI divergence. We have used and invented a brand new form of divergence called volatility momentum divergence. And to us, at least in the test that we've run and in our trading, this is the most telling one, the most accurate one to actually find pullbacks and trend reversals. Then we have one more indicator called volatility crusher. This is our breakout indicator, which shows you directly on the chart when a breakout above a key level has happened. And oftentimes when such a breakout happens, we call these strong breakouts, price will continue in the breakout direction for quite some time afterwards. And you can imagine that how you as a trader can take advantage of this. Well, we would simply enter in the direction of the breakout and then take a bit more of the market as price continues in the breakout direction. Now, enough theory, let's check it out on the charts. So once again, I'm going to switch over to Metastock. There we go. And in this case, I'm going to open up a new symbol, which is G. Okay. Also on the daily time frame, but these indicators, they work on any time frame. And what do we see here? Well, we see our 1, 2, 3 strike indicator applied to this chart. From now on, by the way, I will be using only optimized settings. I won't use the default settings. Auto optimization is enabled for every indicator I'm going to show from now on. Why? Because it simply makes such a big difference. And to us, we never trade with the default settings anymore. We only use auto optimized settings. And by the way, this AO at the end here, 1, 2, 3 strike AO. AO stands for auto optimized. Okay, so what do we see here?
Hey, Daniel, I think we lost you again. I can see your mouse moving, which is the weirdest part of it.
These candles, not these candles,
Daniel?
they are green.
Hey, Daniel,
Yes.
we lost you for a second, but you're back now.
Yeah,
my
could you go back, Daniel, to when you mentioned what AO meant and you went to explain the chart? That's when you cut out.
Okay, I'm so sorry. I'm not sure what's happening. I need to probably restart my computer, maybe buy a new one altogether. Yes, what I was mentioning is AO stands for auto optimization, meaning that from now on, all the indicators I'm going to show you are equipped with this auto optimization feature, and it's being enabled. So we don't trade with the default settings anymore. From now on, we only use the auto optimized versions. So we can see here on the chart is these bigger green arrows and these red arrows. These are long entry signals. They're green and pointing upwards, and the red ones are short entry signals. And this is a trend trading indicator, meaning a long entry signal can only occur when we are on an uptrend, and the short entry signal can only occur when we are on a downtrend. We can see this by the bar colors here, either green or red. Green means we are on an uptrend. The indicator sends us an uptrend, or red means we are on a downtrend. And only in those trends, these long or short entry signals can occur. But of course, entering into a trade is one thing. Yeah. Well, once you're in a trade needs to be managed. So for this reason, we have also equipped, just like Super Trend Bullseye, we've also equipped this indicator with exit suggestions. You can see it here along the way. After this long entry sequence, for example, you have this little red arrow facing downwards, and another one here, and another one here, and another one here. These are partial exit suggestions where you can book partial profits as the trade unfolds in the direction, in the intended direction. And you can configure how many partial exits you would like to have. In this case, the indicator is configured with 4 partial exits. 1 here, 2, 3, arrow. This can happen for the long side, but also for the short side. Now, short entry here, partial exit, partial exit, partial exit, and the trade is closed out at this point here. And once again, as mentioned before, this is an indicator using auto optimization, and it is equipped with our win rates. Yeah, our predicted win rates. You can see it down here. So for the long entry signals, for example, our win rate is at 88%, and for the short ones, short signals, it's at 62%. Once again, allowing you as a trader to make truly informed trading decision. In this case, both are fairly high, but not equal. So long signals have been working out better than short signals. And once again, you can use this information to make a decision for yourself. So what if another short signal comes along? Should I take it? Yes or no? Perhaps you only want to trade the signals where the win rate is the highest. So you're going to wait for another long signal coming along. And you will skip the short ones. And that's a decision that you can take as a trader based on these statistics. All right. Another example. Let's look at Tesla. Everybody knows Tesla. Also here on the daily time frame, and also here we have 1, 2, 3 strike applied to the price chart. It's the same principle. Now we have our long entry signals with the exit suggestions and our short entry signals. And look how beautiful this indicator has nailed these moves in Tesla. The big move upwards after the elections last year, all the way up here, and then we closed at the trade at this point, right before we had this big drop in Tesla. We even got a short entry signal here, which was completely tradable, which we closed out here. Then here another long entry signal, which would have worked out beautifully. So this is what I meant, that the indicator intelligently figures out what are the current market conditions and then optimizes its parameters based on what it figured out about the market conditions. Auto optimization. And also also for this chart here, we have our win rates for Tesla, 84% win rate for the long direction and 76% for the short direction. So it works really great for Tesla. And for some symbols, in all honesty, these win rates will not be as high. Maybe they will be even less than 50%. So what do you do with these symbols? Well, you would simply skip them. You would not use this indicator to trade that symbol. There's so many fish in the ocean, you don't need to trade every symbol with this indicator. But at least now you know which symbols are tradable with this indicator, meaning for which symbol the indicator gives trustable signals, and perhaps for which one it does not. One more example, IBM. There we go. Oh, actually, yeah, this is IBM. Actually, let me go back one more here, just a second. Amazon, I meant. All right, Amazon. Actually, there's also a different indicator. Okay, let's change context. Sorry, I thought I had one more example for 1, 2, 3 strike. Let's change context. Let's talk about our reversal indicator. Okay, so what do we see here? This is Amazon. And here we have applied a different indicator to the price chart. It's called divergence cloud. And the first thing I want you to see is this red ribbon or green ribbon underneath the price chart. These are areas of price where we either have bullish divergence, if it's greenish, or bearish divergence. And as I mentioned before, a divergence happens if there's a disagreement between price move and an underlying indicator, oftentimes leading to a complete trend reversal. As we can see it here, this long trend was replaced by this downtrend, which then again was replaced by this uptrend, or the end of a pullback. So here, for example, we were in a long trend. You can see it here. We closed the trade here. Then we went up a little bit more. Then a pullback down to this level. And then this entry signal here signals the end of a pullback within an uptrend. That's possible too. Okay. And then we had a short entry signal a bit earlier last month, which would have been tradable as well. This is how divergence cloud works on Amazon. And also here we are using auto optimization and with our win rates displayed directly in the expert commentary. And once again, also divergence cloud, it works for any symbol, any time frame. I'm using the daily time frame here, but if you're a day trader, yeah, you can use the indicator just as well, because it will always optimize based on what is the symbol and time frame at hand. And we use different settings for the current market conditions for that symbol and time frame. And if market conditions changes, guess what? The indicator will re-optimize to always make sure you are trading with the best settings for the current market conditions. So here we have IBM, same principle, our short entry signals with the exit suggestions, our long entry signals, and so forth and so forth. And of course, sometimes, as this long entry signal here, a trade does not work out perfectly. And with a long entry signal, at this point, price goes up a little bit, a tiny little bit, but then it reverses to the downside, and we get this short entry signal. And guess what? If you had entered here long, then the short entry signal comes along, what do? You will close out this long trade for a small loss, well, maybe lost a couple of percent, and then you entered short. Look how this would have worked out. Yeah, of course, not every signal can be a winner. That's impossible. But using auto optimization, along with our win rate prediction feature, you can at least put all the odds in your favor to make a truly informed trading decision. All right, and one more indicator, if you remember, we had our breakout indicator. Let me switch over to Meta, Facebook, or formerly Facebook. Here we have our breakout indicator applied as soon as the chart loads. There we go. Okay, so what do we see here? Well, we see our entry signals. For example, here, long entry signals and short entry signals here, the bluish ones and the yellowish ones. And we can also see that we also here have our targets and stop losses. For example, here for this long entry signal, entered long, price went up a little bit. You probably could have taken something off the market here, but then we get stopped out. It happens. And not every signal will be a winner, but in trading very much, it's a numbers game. You want to have more winners than losers, and in the end, you want to have positive expectancy. And if you do, over time, you will make a profit. And once again, trading is about putting all the odds in your favor and having auto optimization enabled, AO, once again, along with our win rates, which are very high. You can see it here for this indicator. The reason for this is it's a breakout indicator, and the aim for this indicator is just to get a little bit more off the market after a breakout occurs. Because oftentimes, the breakout move will continue for a bit more, not forever. That's why you want to get out very quickly, but it will continue a bit more. So the targets typically for this indicator are a bit closer than the stop loss, explaining the very high win rate of this indicator. Okay, one more. Broadcom, AVGO. Once again, with our breakout indicator applied to this symbol as soon as the indicator loads. All right, there we go. And same principle. The indicator optimizes for this particular symbol. That's why it takes a second to load. And once done, it will use optimized settings moving forward in the long direction and also in the short direction. And sometimes, as mentioned, these breakout moves, sometimes they're short-lived. You can see this one here. It went up a little bit, but then we got stopped out afterwards. Here we hit our target right away. Here with our target. Here we are still in this trade, waiting for the target to be hit. Okay, so quick summary, and then we're going to have one more topic, and we're going to go round circle afterwards. What have we seen so far? Well, we have seen our 3 power bundle indicators, all equipped with clear entry and exit signals. I've shown you the daily time frame so far, but I can guarantee you and assure you these indicators run anywhere, on any symbol, any asset class, and any time frame. So if you're a day trader, you can use these indicators, no problem. They're also coming with our real-time statistics and, of course, with auto optimization, our game-changing technology, making sure you always trade with the optimal settings. But there's one more thing. Okay, let's push it one more step further. What about confluence? This is a trading concept which basically looks for the case where multiple indicators are lining up and forecasting the same price move. Or in like more esoteric terms, it's a fancy word for when the stars align. Everything is aligning for one particular price move. Multiple indicators are forecasting this. Here's an example of this. Let's look at this price chart. What do we see here? Well, we have a descending trend line, this black line here. We also see this blue line, which is an SMA. which is going downwards, descending as well. We see price retrace near the 61.8 FIB level from this downwards move up there, and we can see we are overbought. So what do all these signs are hinting at? Well, they're hinting at that this downtrend, this downwards move is about to continue. They're all bearish signs. And this is what we mean by confluence. Multiple indicators are forecasting the same future price direction. So I always like this concept. And what we decided is that, hey, let's build an indicator based on confluence. This indicator, we call it super signals. It's looking for confluence based on our 3 power bundle 360 indicators, the ones I just introduced. And depending on the degree of alignment, we get bronze, silver, gold, or platinum signals. Our bronze signals are fairly happen very often because we don't need too much alignment. Gold signals, for example, are quite rare, and then very rare are platinum signals. So the more we go to the right-hand side, the more rare, but also the more powerful the signals get. Let's check it out real quick. So back to the chart. I'm going to open up Metastock once again. There we go. And let's look at Caterpillar. And here we have applied our super signals indicator. What do we see? Okay, so we can see, first of all, we have many bronze signals. You can see a bronze short signal, bronze long signal, short, long, and so forth and so forth. And you can see these are working out very quickly, very nicely. Oftentimes nailing the move very nicely, and they happen quite often. But sometimes you also have these big arrows here, gold signal, which look for a lot of alignment. And look, this powerful move we have after gold. Upwards here. Here, also a nice move upwards. Yeah, this is what we mean by confluence. Confluence between our 3 power bundle 360 indicators: 1, 2, 3 strike, divergence cloud, and volatility crusher. And of course, also these signals are auto optimized, and you get your win rates with these signals as well. Let's look at another example. Eli Lilly, LLY. Let's check it out. Also here we have our super signals applied, and look at these moves. Gold signal, nice move downwards. Here, gold signal that didn't work out. Here, gold short signal, nice move downwards. A gold long signal, nice move upwards, and so forth and so forth. So these indicators, once again, they work on any time frame. So this is the power of confluence. And also these indicators, once again, have been enhanced with auto optimization and with our win rate prediction. But there's one more piece, and then we're going to wrap it up. There's one last piece remaining. So back to the chart real quick. What is this last piece? Well, obviously in trading, it's nice to look at charts where sequences would have worked out in the past nicely. But what you really want in trading is you want to know which symbols currently have signals. Like right now, this moment, which symbols do have signals. And ideally, you also want to see directly in your scan results, we can scan for these, of course, in your scan results, which of these signals are the most likely ones to result in a successful trade. I can imagine probably on any given day, maybe, I don't know, there's 50 symbols which currently have a signal. If you trade on the daily time frame. But which of those you should be trading? You can't trade all 50 of those. You shouldn't, probably. You only want to trade the ones which are most likely to result in a successful trade. Well, we have come up with a scanning concept, which we call Generation 3 scanning, which allows you to bring scanning to a completely different level. And this works beautifully with Metastock, probably the most powerful scanning platform out there. So what do I mean by Generation 3 scanning? Well, let's back it up a little bit. What's Generation 1 scanning? Well, that's basically just scanning for plain old signals. Using the same parameters per symbol, just seeing which symbols currently have signals, either buy or sell signals. All right, that's Generation 1. That's the typical way of scanning. But we can push it further. Generation 2 scanning is a scan for signals and being able to see directly in your scan results which of these signals are most likely to work out in a successful trade. That's Generation 2. You can see this directly in the scan results, allowing you to sort and rank your signals, saving it once again time. But then there's one more thing. Generation 3 scanning not only shows you which signals are most likely to work out, but we will also use auto optimization within our scanning process. Meaning, for every symbol that we're scanning through, the optimal parameters will be used by the scanner, which can make a huge difference. And guess what I've done this morning. Well, I've used Metastock to run a scan, actually a whole bunch of scans, but the one that I really liked is are the results of our 1, 2, 3 strike indicator. Remember the trend trading indicator. So I scanned through the S&P 500 stocks, so 503 stocks currently, and the results are shown here at the bottom. And the first one that popped up is Alphabet Inc. You can see it here, Google. It has a long entry signal on the last close bar, on Friday's bar, and a whopping win rate in the long direction of 89%. By the way, this scan only took perhaps 15 minutes to run. And even if it would have taken longer, that's something that can run in the background. You can do other stuff while the scan is running. So I found the signal on Alphabet, a long entry signal on 1, 2, 3 strike with a win rate or projected win rate of 89%. Let's check it out. So I'm going to go back to my chart right now, and I'm going to open up Google. There we go. All right. You can see long entry signal in the last completed bar. That was Friday's bar. Yeah. And you can already see, had we taken the signal, we would have been already up a bit in profit because today's bar went up. So long entry signal here. And if we scroll down to our expert commentary, here we can see 89% long efficiency in the long direction. There's one more factor, which I'm going to discuss in 1 second afterwards. You can see this little heat map below the chart. We're going to get to this in just 1 second. But mainly for the reason of having a long entry signal, along with a really high win rate in the long direction, gave me the confidence to call out this trade as my trade of the today, which I announced in the morning. So this is my trade of today, a long trade of Alphabet, Google, entry around current price level around 256 with a target around 290 and the stop loss just below the swing low here around 220, perhaps 225. All right, my trade of today, which I picked using Metastock scanner and the scan results on our 1, 2, 3 strike indicator. All right, now just to wrap it up real quick, who are these indicators for? Well, it doesn't really matter if you're a day trader or a scalper or a swing trader investor. If you're any of these, you can use these indicators because they will work on all time frames and all chart types, period. It also doesn't matter if you trade stocks or FX or futures or cryptos or any other asset class. These indicators will work on all asset classes and all symbols. And if you are a bit of an engineer like me and you believe that good tools can make your life easier and good trading tools can make your trading life easier, then these indicators are definitely something for you because they will do all the heavy lifting for you. They will find the best parameters for you. They will show you directly on the price chart what the projected odds are, and you can scan for signals. It can't be much more straightforward than this. All right, now as a big thank you to listen to me speak today, we have put together a special offer for all Metastock attendees today of this beautiful Metastock event, which will include all the indicators which I've talked about today, plus one bonus indicator. In summary, you will get our Power Bundle 360 indicators consisting of 1, 2, 3 strike, divergence, cloud, and volatility crusher. You will also get our super signal indicators, our confidence indicators, if these beautiful gold signals, for example. And you will get our super trend bullseye indicator, the auto optimizing super trend indicator. All of these indicators equipped with auto optimization and instant performance statistics. And we're going to throw in a bonus as well, our trend radar indicator. So typically, the lifetime license is offered as a discount for only $1,997. But as a big thank you today for being here with us at this Metastock conference, we decided for a limited time to cut down this price by another 50%, and we offer this entire bundle of all our flagship indicators, all these beautiful technologies for only $997 for life. And if you want to take advantage of this offer, all you need to do is to go to tradingindicators.com/mega. We call this the mega special. And Jeffrey or Nicholas, please put this link into the chat box, tradingindicators.com/mega. All right. I want to quickly talk just briefly about this bonus indicator, Trend Radar. It's this heat map that you saw before on the chart. And this heat map allows you to get an instant glance of the current market conditions. So let me bring this back real quick of how I use this market condition indicator below the price chart to further increase my confidence in this Google trade, which I just pointed out. So one more time back to the price chart, we can see here, okay, we have our long entry signal on Google, but what do we see here on our trend radar indicator? Well, first of all, we can see it's mainly green, pretty much all green in the last months and weeks, meaning we are on a strong uptrend. Green means it's an uptrend. But every once in a while, we have these little red patches coming in here. And a little red patch here, another one here, and then another one recently here. Okay, these are pullbacks within an uptrend. And after this red patch recently, we've went all green again, indicating to us, okay, this pullback has come to an end. And chances are the overarching long trend are about to resume. And this combined with our long entry signal, which have very high win rates, gave me extra confidence that, yeah, this is a great trade to take, great trade idea in the long direction. Because as I can see it clearly here on our trend radar indicator, this pullback that we had momentarily or temporarily has come to an end. And with this long entry signal, it is likely that the overarching long trend is about to continue. So this was just a little bit about our trend radar indicator. So in summary, if you want to take advantage of this great offer, for only $9.97 for a limited time, and the indicators are for lifetime, by the way, but this offer is for a limited time, all you need to do is to go to tradingindicators.com/mega. All right. So Nicholas or Jeffrey, do we have questions coming in? I hope I was clearly to hear for the rest of the presentation.
Yep, Daniel, we have, yeah, it was pretty clear most of the time. And we have, well, 2 symbol requests if you can look at a chart.
Yeah.
Okay,
Sure.
so the first one is going to be JP Morgan.
Okay, let's check it out. JP Morgan. Let's open up a chart. Let's see if our super signals here. I think that's JPM. Just a second. Loading up. Come on, come on, come on. There we go. Select. Okay, let's check it out. JP Morgan. I'm assuming it's going to be the daily time frame. All right. Yeah, it's taking a little while. I think there's something off of my computer today. That explains probably the technical difficulties that we were facing. I'm going to get to the bottom of this afterwards. Okay. So here we have JP Morgan. We can see we have our super sequence indicator applied to the chart. And let me just quickly have a look. Yeah. Beautiful signals along the way. Bronze signal here. Here, gold signal. Look at this big move afterwards to the upside. Here, gold short signal. Look at this follow through. Yeah. No, it's a great signal. And recently we had a bronze long signal here, which would have worked out nicely too. Yeah, I like it. Works nicely. Any other symbol?
Yeah, there's Microsoft.
Microsoft. Okay. MSFT, I believe. There we go. Just taking a little time
And
to
while you're going there,
load.
Daniel, we also have a question. What kind of support can you expect for new users?
Oh, that's a great question. Yeah. Let me just quickly talk about Microsoft first as soon as this loads up here. But yeah, in terms of support, I know I went very fast through all these indicators today, and I could only cover, some of the features of how to use these indicators. But we have boot camps recorded for every single indicator. So if you come on board and you take advantage of the lifetime special, you get all the support that we have, all these videos, boot camps. You also get enrolled into our members community. We have a Discord channel. We have a weekly member sessions where we can ask questions, where you learn tips and tricks and so forth. So yeah, you will not be left alone with our indicators. Okay, so what do we see here? Yeah, we can see our super signals indicator also applied here. Here, beautiful gold short signal that worked out beautifully. This one, not so much. A nice long signal here, bronze long signal here recently. So yeah, also Microsoft, pretty much every indicator works quite nicely with our super sequence indicators because they really look for confluence. Many things are forecasting the same price direction, and this occurs oftentimes. Again, not always like this one here. Oftentimes, really powerful signals are generated. All right, perfect. So let me go back to my slides one more time. A quick reminder, it's tradingindicators.com/mega to take advantage of this webinar mega special, where you get all our flagship indicators, Power Bundle 360, Super Signal, Super Trend Bullseye, and Trend Radar for life for only $9.97. And if there's any questions which weren't covered today, and I apologize for the audio problems that we had, simply go to tradingindicators.com, go to support and to contact, put your question into the contact form, and I'd be happy to answer any other questions personally afterwards. Perfect. With this, Jeffrey, I'll take it over to you.
All right. One question we had from the chat as well was, do you have do these have system tests in Metastock? I wasn't sure.
Do. Yeah,
okay.
they come with system tests as well. Mm-hmm.
Brad wanted to see if there was a way to see if there's performance stats on them. Do you support Thinkorswim?
Yes, we do.
Okay.
We do Thinkorswim too, but not. We don't have super sequence for Thinkorswim due to platform limitations, but all the other ones are available for Thinkorswim as well. Yes.
And then Stuart wanted to know, I'm assuming all bars are at the end of the bar, or all signals are at the end of the bar?
The signal is confirmed when the bar closes. You will get signals intra-bar, but it may go away. It may flicker off until the bar is fully closed. But you will get signals intra-bar as well. Mm-hmm.
Cool. All right. Yes, you will get signals during the bar, but as with anything, if the sentiment changes during that bar, they may go away, but they won't repaint after the fact, right?
That's right. Yeah.
Mm-hmm. Cool. All right, Daniel, thank you very much. Appreciate it. Great job today. Thanks for coming and spending some time with us.
Thanks, Jeffrey. Thanks, guys. Have a great conference. Bye-bye.
All right. Thank you. Go ahead and do this. We'll go ahead and turn on my camera so you're not looking at just a blank screen. And then we'll turn on my mic. We'll share my screen as well. So let's go ahead and do this. This is a screen that I want to share. And I assume Greg will tell me if there's any issues. But you can, $9.97, great price on this. I do want to kind of reiterate, we do offer this with a 30-day money-back guarantee. So if you don't try it out, give it a go, see how it works for you. If it's helpful, you'll definitely want to keep it. We'll give you 30 days to make that decision. So you can do that at metastock.com/TI bundle. You can call it, if you have questions, metastock.com/sales-chat. Or if you're in the US, Canada, you can give us a call, 800-882-3040. So a big thank you to Daniel. Apologies for the technical issue. I just think he probably had a poor internet connection today, but it happens. So let's go ahead and kind of move on. Metastock.com/TI bundle, 800-882-3040. If you have any questions, we'd love to talk to you. And metastock.com/sales-chat. So there you go. I wonder if there's a way I can look at there's a lot of questions in here. So I'm going to do my best to I think they're coming in descending. I wonder, anyway, it's my turn to go. All of the add-ons that we're going to talk about today, including the ones in this one, are available as part of an extra special discount. It has all three of the Sinnig indicators in there. The new price action pivots, a year of access for that. The master trader method, that's included as well. JBXC complete, the red green knockout. Everything we're going to talk about today when it comes to Metastock indicators, with the exception of Sunny Harris. With Sunny Harris, we're giving you 7 days free trial to actually look at those. But everything else would normally cost about $9,530. If you want to get all of them, we're going to give you a super big discount, $36.36. So you can do that at metastock.com/sales-chat, or you can call us at 800-882-3040. So as we get started, I'm actually the next guest. Before we get started, though, I want to say thank you to Stocks and Commodities Magazine for sponsoring the event. Great magazine. They've been supporting us for a number of years. I really appreciate all the work that they do. Metastock.com/Trader Summit. If you go there and you register, you can elect to get a free magazine sent to you. And I'd recommend you do it. I love Stocks and Commodities. I've been getting it for about 28 years. Greg, your camera just went on, but it looks like you're in the dark to me.
Yeah, I don't know what's going on there. Give me 1 second. I bet I can fix it if you'll just keep on talking whilst I.
Wow,
don't
that.
mind the man here behind the curtain.
Yeah, I do want to say, I think he has a power outage. I think that's what. Wow, there you are.
Yeah, Yeah, it's a little bit of A/B trickery.
I want to invite everybody to join our Traders Forum, thetradersforum.com. You can join for free. We do daily lessons, or not daily lessons, we do weekly lessons where we'll talk about technical indicators. Last week we talked about MACD, which I'm going to talk about again today. But we also have special guests. We had Rahul Arora come in, and we just do a little bit of a market chat. A couple of events every week, in addition to usually about 3 a week. In addition to that, there's lots of free education. You can chat with other market traders. It's designed to be a community of traders helping traders, and you can join for free at thetradersforum.com. I'm in there every day talking about stuff. We have dumb jokes that we tell, all kinds of good stuff. So there you go. I'd encourage you to join it. Greg, did you pop on so you could introduce me?
Yeah, I did. Well, I did. So I did a little calculation. If you take 15 years times 52 weeks, times 5, that equals how many times you've probably done live presentations. How many times do you think that's been, Jeff?
Oh, I think there's thousands, for sure.
The answer is 42 million. You've done 42 million live.
Oh,
check the math. It's just math. I can't. I'm just telling you the math. Okay. No,
we did some math, and I think it was more realistic.
Take a moment to
thousands.
Yeah, we want to take a moment to, of course, anybody listening to our presentation now or that has listened to many of our presentations in the past knows Jeff. Jeff is with Metastock for in excess of 25 years. You can do that math as well. He's currently the business development manager as well as the sales manager at Metastock, has been for some years now and done very successfully. He's also a very, very active trader and probably one of the world's top experts in Metastock. Am I missing anything important? Oh, he also is. He also plays bass and guitar. He's a fantastic family man, and he does enjoy his dogs.
Oh yeah, for sure, definitely. And
did I miss anything important, Jeff?
No, not at all.
Okay.
Nothing.
He can also do the disclosure at the beginning of every presentation by heart, but I won't put him to task on that right now.
I pretty much wake up in a hot sweat almost every night saying it. So, thanks, Greg. All right, let's do that, though. Today's demonstration is designed to instruct you on using Metastock and the accompanying software programs. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information provided contained in the presentation should be construed as investment advice or the solicitation to buy a security. All right, very cool. Actually, I do want to make a little bit of a change here so that if I can see YouTube questions coming in real time. So if you have questions, if you're watching this on YouTube and you have questions, let us know. I'll be happy to answer those. And as Greg said, I'm not going to read this slide. As Greg said, I started here. Actually, it's been about 27 years. So I started in inside sales. I talked to a lot of traders over the years to talk to them a little bit about how they felt like their market, their trading could improve. A lot of times it came to kind of a few core areas in terms of what they needed to do. A lot of times it might have been stock selection. They just didn't know what stocks to buy. They couldn't find the right opportunities in the market. Sometimes it might be the lack of knowledge. They didn't know what they were doing. And a lot of times it was that. And a lot of times they just needed kind of some direction. And I'd talk to people, kind of figure out where their holes in their strategy was, and kind of show them how Metastock could help them make better decisions, find better securities, find the best trades that kind of exist in the market. I've been an active trader for, a long time now. I don't know exactly how long it's been, but it's been a while, and I absolutely love it. I use Metastock on a daily basis to trade. So let's go ahead and kind of get started. I hope you read all this information. A couple points on here. We do get our data from, it's now the London Stock Exchange Group. I should probably add a bullet about that. The London Stock Exchange Group was part of Reuters, which became Thomson Reuters. They sold the data and news division to Blackstone, who then sold it to London Stock Exchange Group. The core piece there is everything I'm going to show you today. You can use on stocks, you can use on futures. We have one of the biggest market datas in the world. There's several 100,000 issues. If you're in India and you want to do this, you can do what I'm going to show you today in India. You can do it in London, you can do it in Singapore, you can do it in Asia, you can do it in Italy. There's hundreds and hundreds of market data or exchanges that are available. And some of the best data and some of the best news that's available. It's literally the data that we use is literally a competitor to the Bloomberg terminal, which is about $20,000 a year. So that's about what I want to say about that. The other thing I want to say is, and we've said this a few times, Metastock itself has been rated the best software in its price category, and it's been rated the best software in its price category for 32 years in a row. So let's go ahead and get started, though. Today, here's kind of what I want to talk a little bit about, and we're going to try something that I haven't tried in the new interface. So what could go wrong, right? But I want to talk a little bit about the importance of a trading plan. I want to talk a little bit about how to understand a trading plan and how to use it. And to do that, I'm going to talk about MACD. Okay, I'm going to explain to you how MACD is calculated, how you look at it, the way that it's been classically interpreted. I'm going to talk about 3 different interpretation methods. And then we're going to see how well it works against stocks and that kind of stuff. So, and then we do have a special offer. So let's go ahead and kick it off. To start with, though, what I want to kind of do, and here's where I'm going to kind of play a little bit. What do you think is the best profession for trading? And I'm going to go ahead and do this. This should be a poll I can put up. I'm going to launch it, and we'll see kind of what happens real quick. Okay, I'm going to want to answer this question. So there's a study done. It's like, what is the best profession for you to go into trading from? And so I've kind of created some options here. I want you to vote. Do you think it's teacher or educator? If you're on YouTube, you can just answer this question. Do you think it's an engineer or an architect? We have 1 vote so far, psychologist, psychiatrist. And Greg, I think your mic might be open. Somebody's mic is open.
That's not me.
Okay, let's see who it is. Okay, I see it. Sunny's in here, so let me go ahead and just mute her mic real quick. All right, is it a pilot? Is it a performer, an artist, musician? And we do have quite a few answers. Quite a few, actually, we're 33%. So if you want to vote, let's go ahead and vote. And if you're in YouTube, the poll probably isn't presenting for you because you're just kind of seeing the actual thing. I'm not sure what you're going to see in YouTube. So I'm going to go look at the recording after the fact and see what you're seeing. But if you're on YouTube, just say what you think it is, what you think this is. So, and then I will share the results here too. So A, B, C, D, E if you're in YouTube. Or if you're in GoToWebinar, just click on the button. So, all right. Here, I think I can share the results with you. Last chance to vote. If you want to vote, it's your last chance. Let me go ahead and end and share the results. Okay. All right. I don't know if you can see that. But, oh, now somebody just ended it on me. View. Okay. Here we go. We've got, so about 50% or half said engineer or architect. 25% said psychologist, psychiatrist. 25% said pilots, and nobody thought teacher or educator. That wasn't a vote anybody did, and nobody thought performer, artist, musician. So let's talk a little bit about this. I thought this was an interesting question. Let me go back to the questions tab in case you ask a question. Because over the years, one of the things I've done is I've worked with a lot of people that have strong backgrounds. Some of them in math, like Sonny Harris. Some of them are engineers or architects. Some of them, like a couple of people that come to mind, Dr. Alexander Elder, a great technician, wrote Come Into My Trading Room. And another book that just jumped out of my head. He wrote, he was a psychiatrist and a psychologist. So same with Jake Bernstein, who's coming up to speak after me. He is also actually a psychiatrist, I believe, for the government. Has some pretty crazy stories about kind of the working that he did there. Pilot's the actual answer, and I think that's interesting as well. A couple people I know that have been pilots. Greg Morris, who's retired now, but he was a literal Top Gun, and he was a Top Gun in the war, in the World War II. He's retired, a good friend of Metastock. He wrote a book on candlesticks that kind of looked at all the candlestick patterns and did a bunch of statistics on it. And then the other person, Chuck Hughes, who we work with quite a bit. But the correct answer, according to this article at least, was pilot. And so over the years, I kind of wonder why that is. I kind of think about kind of a little bit why that is. And generally the consensus is discipline. A pilot is going to be disciplined when they take off, for example. They're going to have a complete checklist that they follow. They're going to, when they land, they're going to have a complete checklist that they follow. When there's an emergency, there's going to be a complete checklist. There's a lot of discipline that's involved in being not only a pilot, but like a Top Gun. So I think that's kind of the reason for that. So, in fact, Richard Dennis, if you know Richard Dennis was friends with a gentleman by the name of Bill Eckhart. Richard Dennis, just to kind of give you some information on him, he was labeled as the Prince of the Pit. And he borrowed some money. Actually, I might have some notes here. I do. Okay. Let's look at my notes real quick. He borrowed $1,600 and made it into about $350,000 in about 6 years. He's a famous trader back in the 80s. And he believed that you could teach trading. You can read ahead in the notes. You'll see where I'm going with this. Bill Eckhart, him and Bill Eckhart, they trained a group that they initially called the Turtle Traders. If you've heard about the Turtle Traders, this is what they did. They funded them with their own money. There was about 23 traders. Interestingly enough, there was 21 men traders and 2 female traders. They were very, very successful. Over the course of about 5 years, they aggregated about $175 million in profit. And what they said, what Richard said is, I always say you could publish rules in a newspaper. The problem is nobody would follow them. The key to trading is consistency and discipline. So that's why I think it's an airline pilot. Today, what I want to talk about is kind of using technical analysis to kind of build out a trading plan. So I think one of the keys to consistency is every time I take a trade, I know exactly why I'm going to get into that trade. I know exactly where I'm going to get out of that trade. And I try and kind of keep consistency and discipline in the rules that I do and in my mind at all times. And I think technical analysis is a really good way to do that because it allows you to build a business plan around trading. So let me take a sip of this coffee so I can stop waving it around at you. And we'll just kind of talk about Gerald Appel. Okay. Now, one of the things I'm going to say as I kind of introduce Gerald Appel, I don't come into a lot of these things with like optimized signals and stuff like that. If you have symbols you want to look at, throw them up here. We'll use your symbols to kind of teach you about MACD and kind of how it works. Gerald Appel, to give you a little bit of an introduction to him, he died, I think it was just a few years ago. I think it was 2023. But he developed the MACD system about 40 years ago. A very, very popular technical indicator. One of the videos that gets the most views on our website is the one about MACD. Over the course of his career, he wrote about 17 books on investments. He published a newsletter called Systems and Forecasts for about 46 years continuously. And interestingly enough, he wrote a book on photography, or 5 books on photography as well. So very, very good technician. If you're familiar with the MACD, a lot of you are, you'd be familiar with his work. What surprises me is how many people actually use the MACD, but don't really understand how it's calculated and how it's used. So my goal today is to kind of teach you more about MACD, kind of help you understand it a little bit more. And in addition to that, kind of go through the main things that it kind of covers as well. So when it comes to MACD as a technical indicator, there's some things that I like about it. Objective. Okay, I like the fact that when you look at technical analysis, it's generally objective. Okay, we're not looking at kind of like if the rate cut is going to make a difference, or if unemployment is going to kind of finally catch up with the market, or all of those kind of things that are kind of generally subjective and not objective. A pure technician is going to talk about how MACD, or not MACD, but how technical analysis is a shortcut to looking at the sentiment of the market, because everything that's known about a specific instrument is priced in. But what I like about technical analysis is it is objective. Everything we talk about today, you can duplicate. Everything, when we talk about how buy signals are formed and sell signals are formed, you can look at it. You're going to come to the same conclusions because we're looking at the same data. And we're not trying to guess what the market is doing. We're trying to look at, in the case of MACD, the trend of the market and the momentum of the market. Okay. It's also pretty easy to interpret if I do a decent job, and that's what I'm aiming for, decent. If we do a decent job today, you'll be able to understand what MACD is, how it's used, and you'll be able to understand the three things. And everybody in the room should agree if I do my job properly today. Okay. Some of the disadvantages of MACD is it is prone to whipsaw because it is using moving averages and it's a lagging indicator. So let's dive into it. Again, I don't see any symbols. Give me some symbols, and that way we can kind of look at some of the symbols. And let me look over here. Scott in YouTube said pilot. Okay, give me some symbols. Give me some symbols, so we'll look at your symbols. Okay. All right. If I wanted to tell you how to calculate the MACD, I would tell you that the MACD, they didn't use, and when Gerald created the MACD, he didn't use a whole moving average. Okay. He used a 0.075 and a 0.15 exponential moving average. I can't explain that to you because I don't exactly understand it. But what I will say is the closest that they line up to is a 26 period and a 12 period exponential moving average. Oh, there's questions up here. Okay. Paula wants to look at Tesla and Pony. Okay, we'll do that. Let's open up the chart. And I want to kind of go through, there's basically 3 lines in the MACD. We're going to talk about all of them one at a time. And since Paula chimed in with Tesla, we'll start there. Okay, so I'm just going to open up a chart here. We'll look at Tesla. And I have actually I should have applied a clean template with this, but let me just clean up this chart a little bit. So I want to go in. I'm going to detach the expert advisor so that the buy and sell signals will go away. And I'm going to take off all of the indicators. So all we're going to be looking at is just the chart. Just the chart, please. Okay. And I'm going to we're going to go ahead and construct the MACD. Okay. I'm going to show you how to. Bill said he had an issue getting in today. I'm sorry about that, Bill. I'm glad you joined us. I'm glad you were able to get in. Okay. Welcome. Also, hopefully you haven't been trying all morning to get in. Hopefully you've got in now. But I do see you're in. So good. All right. If I wanted to show you how to calculate a MACD, what I'm going to do is I'm going to throw a couple indicators on here. Okay. There's a couple hundred indicators in Metastock. I'm going to grab the moving average. I'm going to put it on the chart. I'm going to do 26 period, and I'm going to do exponential moving average right here. And I like to make sure you guys can see it real good. So I'm going to make it red, and I'm going to make it a little fatter than the default. Okay. So there you go. That should be pretty visible for you. Okay. I'm also going to put a 12 period. That's the other one that we'll be using. And so I can call it by the blue line and the red line. I'm just going to change it to dark blue. I'm also going to make it a little bit thicker. Okay. Now, if I wanted to tell you how to calculate a MACD, you're going to be taking the shorter term moving average and subtracting it from the longer term moving average. Let me put a MACD on here. Okay. I'm going to do the histogram version of it because I prefer that one. Okay. And that way I can talk about all 3 of the lines. Okay. So let's go ahead and do this. And I meant to make it a little bit thicker, but we'll do it one at a time. The first line I want to actually talk about, I'm going to make that one larger, is a red line. I'm used to seeing this a little bit different. With Metastock, it's easy to move everything around. It's just drag and drop. So when I want to move the indicator from the top to the bottom, I just drag it to the top. Okay. This red line is what we're talking about now. We'll talk about the other 2 lines in just a second. This red line, though, is just a subtraction of this shorter-term moving average from the longer-term moving average. That's all it is. So when I subtract the shorter-term moving average from the longer-term moving average, what I'm going to get is this red line. Okay, and if I do that every time, I get the MACD over time. Okay, I think it's important that you understand how this measures both trend and momentum. So if we're in an uptrend, Tesla had a really big post-election pop last year after the election went up. If the price of the security that you're looking up is moving up, like it is right here, what's going to happen as a result of that is your shorter-term moving average is going to move up. Your longer-term moving average is going to move up as well, but the shorter-term moving average, if it's moving up rapidly, is going to move up faster. So that's how we kind of look at momentum here, right? So the more it's moving up, the faster moving up, the bigger the difference between the shorter term and the longer term moving averages. Okay. If you're familiar with a moving average crossover system, a lot of the lessons that you have from that moving average crossover system can be kind of incorporated as part of it, right? But what we're looking at is we're looking at just the difference between the shorter term and the longer term moving average. Okay. If the market starts moving down, the opposite applies, right? Your shorter term moving average is going to drop down below, and the faster it's moving down, the faster it's going to drop. Okay. Very, very simple, straightforward. Technical analysis. I really like some of the technical analysis that you look at. Can be fairly complicated, but I like the stuff that I can understand. It helps me with discipline around it. If we're in an area that's kind of sideways, and I'm going to call this chunk of area sideways, where we've had right here. If I just take my measurement tool and kind of measure where we've been over this period, it's kind of pretty flat and channeled out there. And when that starts to happen, what you're going to get is much smaller peaks and troughs. Your MACD is going to kind of center around the zero line. So that's basically what you're looking at. If you're in an uptrend, it's going to go up. Your MACD is going to go up above zero. If it's down, it's going to kind of head back down and eventually cross down below. And the bigger those peaks and troughs, the more momentum there is in the stock, and the littler they are, the less momentum and the more channel bound you are. Very simple stuff. Okay, I think that's what I'm going to say about that for now. Let me know if you have questions. I'm going to clean up my work here. Okay. The next line I want to talk about, so that covers this. Well, we just spent a bunch of time just talking about this red line. It's the difference between the two moving averages. When Gerald Appel developed the MACD, he also developed what he calls the signal line, which is this blue dotted line here. I'm going to make it a little bit bigger now too, because that's what we're going to talk about now. Okay. The signal line is very simply a 9-period exponential moving average of the MACD. So if I took the difference of these two moving averages for 9 days and made it an exponential moving average, that would give me this blue signal line. Okay. Gerald Appel called it a signal line for a couple reasons. Okay. When we let's just kind of I'm going to zoom in a little bit on this chart. Okay. There we go. When the MACD crosses up above its signal line, so when the red line comes up above the blue line, the MACD goes into a bullish phase. Okay, what does that mean? That means when we anticipate, right now MACD is in a bullish phase, so we anticipate the price of in this case, Tesla is going to rise. And when that happens, that's actually a buy signal. Okay, here we crossed down below the signal line and we went into a bearish phase. That bearish phase didn't last very long. It crossed back up into the bullish territory, gave us a signal to go long. Okay, here it came back down, and kind of you can rinse and repeat. Okay, I'm going to attach a tool right now to kind of help us understand exactly what that is, but that's what we use the signal line for. Okay, let me attach this Expert Advisor. Expert Advisor is a tool in Metastock, and it just allows us to kind of visualize some of these things. There's several hundred of those as well, but what I'm going to do is I'm going to go MACD right here. I'm going to attach the MACD Expert Advisor, and right now I'm going to kind of move this. Again, I just drag and drop it to where I want it to be. But if we're up above our signal line, you're going to see that it's in a bullish. When it goes down below our signal line, you're going to see that it goes bearish. Here's a bearish ribbon right here. When it goes up above, we see bullish, bearish. Okay. Easy. It's objective too, right? Like we can see it on the chart. We can see where our buy and sell signals come in, which means I can say, okay, well, if I got a buy signal right here at 244, maybe I bought it at the open of the next day, which was 256. Okay. And if I held that to where I sold, let's say we sold here because of the sell signal at 336, that would have been a pretty good trade. Okay. If we went short here, we would have lost some money. The idea here, though, is I know where that is because it's objective. Okay. So that's actually the first way you can analyze, of the three ways I'm going to teach you, that you can analyze the MACD. Now, the thing I like about it is it's totally objective. Okay. Before I kind of go into the second and third ways that you can look at MACD, I want to just kind of talk about the last line. Okay. The last line, this is the histogram. I'm going to make it a little bit thicker now. The histogram wasn't developed by Gerald Appel. It's actually developed by Thomas Asprey. But all it is it's the difference between the MACD and its signal line. Okay, so if there's a cross under here, it's going to cross down below 0 because you're subtracting the MACD from its signal line. So you can look at the histogram to see when the crossovers happen and how bearish and bullish things are, or you can look at the MACD. It doesn't matter. It's just basically what you're looking at is the difference between these two lines up here. Okay. Interpretation. I talked about how you can use it as a buy and sell signal. You can see where it's showing a buy and sell signal. Okay. You can see that on the chart. And again, we can kind of go in and test them. We can kind of go and say, well, okay, if we went long here and closed that long position, that was a good trade. Here was a not so good trade. That was a pretty good trade. If we went short there and we didn't cover until right there, that was pretty good, right? We can kind of get an idea. Of course, when we get over here to where, and this is where the MACD could be prone to whipsaws, sell, buy, sell, buy, sell. At that point, we're kind of getting a little bit of whipsaw, and there's a lot of signals where we might get in for just a tiny bit of profit out. That's one of the things that happens with the MACD. Okay, and that's something you want to account for. So the first thing I wanted to talk about is the three interpretation methods. Number one is buy and sell signal. So we covered that. That's MACD. That's its relationship to the signal line. If MACD crosses up above its signal line, it gets bullish, and it's a buy signal. Okay. The two other ones have to do with, well, the second one happens to do with momentum. So I'm going to come in here and I'm going to kind of zero in on the chart a little bit more here. Okay. We'll talk a little bit about momentum because we're measuring, and that's one of the things MACD does really well. We're measuring momentum. We're measuring the difference between the shorter term and longer term moving average. What happens is if there's more momentum, there's more likely going to be a move to the mean or a reversion to the mean type of a play. And that's the second way you can use MACD, is to determine if you're overbought or oversold. And I always caution people when they're looking at overbought and oversold, there's a saying that comes to mind. That saying is, the markets can stay irrational for longer than you can stay solvent. Okay. So when we're looking at a momentum indicator, it's important to understand that just because something is in a trend doesn't mean it's going to revert to the mean. We can use it as a bit of an early warning signal, but you should always use it something else to confirm it. That could be like price activity. If you start to see some momentum start to move into a security and it starts to get overly momentum, you could look to move your stop up a little closer to kind of preserve some profit. But it's important to kind of note that even just because something is overbought or oversold doesn't mean it's going to necessarily revert to the mean. Okay. When we start to see momentum in Metastock, I want to, here we've got your standard green, red candles based on, the open and the close relationships and all that kind of stuff. I want to point out that right here, we've got all of these, and I'll circle them just for fun. We've got all of these blue candles. And what we're kind of pointing out is that MACD is starting to get extended to the top side, meaning there might be a bit of a reversion to the mean play. Okay, and we had a few right here as well. You can see those. We'll point them out when we start to get on the downside as well. So right here you saw a couple, which is kind of interesting. It kind of drew those in, and then there was a little bit of a temporary pause. Went back up to its moving averages and then kind of pushed down, and you can kind of see here where it was overbought. And even if you started paying attention to that right there, there's a lot more downside again left. So again, with momentum, it's important to use it maybe as an early warning indicator, but also in conjunction with price activity. Okay. And the way that they worded this, there's a tool I'm going to open up here that's called the expert commentary. The way that they worded this in the commentary, it wasn't me. This was put together when I started, but I like the way that it was worded. So I do like the fact that we were blue here right before it kind of really ran into some trouble in the case of Tesla. Okay. The expert advisor, it just basically will analyze a bar based on kind of the candle that you're looking at. And right here, I've just moved that expert advisor to this day. So you see this little triangle that points down? It's looking at that particular day to kind of give us this expert reading. Right now, we're in a bullish phase. You can see the bullish phase here. It's been in a bullish phase 7 periods. And since the MACD crossed above its moving average, the price increased about 23%. Pretty good. Gives you a high-low range as well. Okay. When we start to talk about overbought, oversold, though, it's saying, hey, we're in an overbought range. Prices may continue to move higher for some time. Wait for prices to move lower before considering any short positions. So in this particular case, they started to move lower. And what that means to you in terms of kind of that, you could just wait till this sell signal came in and you went bearish. That might be kind of the confirmation that you wanted. You might want to tighten up your stop. You can play with kind of how you interpret that. But I do want to point out, it was giving readings from here to about here before you finally had that price reversal and that reversion to the mean. Don't use it. Use it in conjunction with other indicators is what I'm really saying. Looks like we have another question coming in here. Paula says, in terms of momentum versus oscillation, is MACD does trend and momentum. So the trend is in conjunction with a signal line. Paula, thanks for the question. I hope this is a decent answer, at least. As I said, at the onset, I'm going for decent today. But if basically there's 3 different things that we're going to look at. We're going to look at trend, which we talked about. We're going to look at momentum, which we're just wrapping up now, and then divergence. So there you go. Let's talk about divergence. It will look for divergent signals. There is actually a quote, and I thought this was kind of cool. A good friend of mine, Dr. Alexander Elder, does some events with us from time to time. I want to get the quote exactly right. So you can tell I love to stick to my script, right? Okay. All right. Divergence. So Dr. Elder wrote, great technician. Absolutely love Dr. Alexander Elder's book. I've read his Come Into My Trading Room, and it was probably one of the more interesting books, just the way that it was kind of written and technical analysis. I remember there's one chapter where it says, I woke up in a cold sweat and I was thinking about this at a hotel room, and I just remember that. But in his book, A New Trading for a Living, Alexander Elder says that divergence is among the most powerful of all signals in technical analysis. Because of the work, I read the book after we started doing some work with Dr. Elder, but because of the book, because of the fact that he always talked about divergence and MACD, I always felt that he was talking about MACD divergence in specific. But when I read the book, he's talking about divergence with any indicator. Okay. He happens to use MACD divergence, and when he comes in and talks about MACD divergence, he's talking about, well, when he talks about divergence, he's looking for MACD divergence, and he calls it the most powerful signal in all of technical analysis. If we see a divergent signal today, he literally calls it a bearish divergence, breaking the backs of the bulls. It's one of the biggest things that he looks for when he's looking at the market is that MACD divergence. So I'm going to show you how he looks for divergence, and it's something that the software will pull out for you as well. Okay, let me go ahead and come in here. We'll keep on Tesla. There's a couple things that I'm actually going to come back in here and see if we can kind of see a divergence. No, I don't see a huge divergence. Okay, we'll just do it from here. Okay. When Dr. Alexander Elder is looking for MACD divergence, he's looking at the MACD histogram. Okay, there's some specific things that he wants when he's looking for MACD divergence. He wants a peak, and he wants a cross down below 0. Okay, so for the purpose of this, I'm going to kind of go back a little bit. I'm just going to zero in a little bit on here, and actually this is, well, I'm not going to spoil the surprise. This is, let's go ahead and kind of look at here. So right here, we've got a peak. I think you'd all agree this is a peak. Again, this is objective, right? We have a cross down below 0, and we have another peak right here. Okay, I'm going to take my little percent measuring tool right here. Just going to draw a line from there to there. Okay, and it might be a little bit off, but I'm going to say just in general, this peak, objectively, is higher than this peak. I think you guys would all agree with this. You might not agree exactly that it's 19%, which is based on where I drew the line, but I think you'd agree that it's just there. Okay, I'm going to look at the peaks in price as well at the same time. So I'm going to come here. Right here, we've got a peak, and right here, we've got a peak. Okay, this came down 20% on the MACD histogram measurement. This went up 34%. That's a divergence. Okay, what we're doing right here is we're setting a new high in price that is not confirmed by MACD. Okay, MACD came down. The peak in MACD is lower than it was before, and we're 34% higher. This is what Dr. Alexander Elder would call a bearish divergence. And he would go in and say, this is the most powerful signal in technical analysis. That's a word, that's the exact wording he uses. And he'd say, in this case, this is a breaking the back of the bulls. Okay, and if we kind of look at what happened to price after that time period, it was a pretty good signal in this case. So there you go. Those are the three methods that we can look at price. I'm going to kind of clean up my chart a little bit, mostly just to be dress a little bit. I'm going to check for questions. I'm going to check the time, and I'm going to need to go a little bit quicker here. So that's fine. Oh, okay, let me get out of here. Okay. Let's talk a little bit more about what we've done. Okay. I'm kind of just pushing my thoughts together. Again, the reason I like technical analysis, we just spent about 40 minutes. I'm going a little bit long. I try and wrap that part up in about 30 minutes, but we just talked about 40 minutes about one indicator. There's about 300 indicators in here. We could come in here. We could look at where the buys come in on the chart. We could look at where the sells come in the chart. We could come and look at the buys and sells. And we would have an objective idea of how well this worked over time. We could test Tesla. We could test Shoe, Greg. We could test Pony, and we're going to, okay? But we could kind of get an idea of how well this performed. If we're interested in trading Tesla, it'll tell us how well this performed, right? And to do that, we're going to do system testing. I'm going to come into here to our Power Console. I'm going to come to the system tester, and I'm going to say, okay, I want to test some trading ideas. And I'm going to select quite a few of these, not all of them for sure, because there's some that require optimization, some take a long time to actually test. But what I want to do is get a good example of how well this works. Okay, so I'm going to go ahead and type in just some of the symbols you guys provided. We'll do Shoe, we'll do Tesla, we'll do Pony. Hopefully I have the right symbol for that. And then we'll do Meta, just to get a few in here. If you want to, you could test like the whole S&P 500. You could use all the built-in systems. You can create your own. Metastock's a system that we've been designing for like decades now. And there's a reason it's been rated #1. But what I want to do here is I want to say, how well did MACD work? If I would have followed all the buy and sell signals, would that have given me a positive result? How does it compare to some of the other indicators that exist in the chart? Because even though we spent 40 minutes talking about how MACD works, we probably don't want to spend 40 minutes learning about each and every indicator, right? What I want to know is, well, just tell me what works. Tell me what works, and then I'll learn about that. And so I wouldn't encourage you to use system testing to kind of bypass your learning process, but instead, what I would encourage you to do is actually use it to kind of shortcut your learning process. Let's do the Ichimoku systems as well. I'm going to come down here and we'll just go MACD. I want to make sure MACD is in there. And I've got 16 selected. The rest of them that I'm going to select are going to be the performance systems. And over the years, we kind of, Daniel's methodology had a system in there, right? Over the years, you can create your own methodologies. There's tons of methodologies that have been put on this one from add-ons or maybe stuff that we've done in here while we're kind of messing around doing lessons. What I want to make sure that I show you is stuff that you can use right out of the box if you have Metastock. So I've selected about 99 trading systems. I feel like I should do 100 but that's okay. We're going to test that against Shoe. We're going to test that against Tesla, Pony, and Meta. Okay. What I'm going to do is I'm going to leave it as a daily basis. And I'm going to say, okay, what I want you to do is I'm going to go back about 500 bars. Now, there's about 252-ish trading days in a year. So that's about 2 years of data, just under 2 years of data. I'm going to come in here and I'm going to say, okay, go back about 2 years. I want you to start with $10,000 in a trading account. And every time you get a buy signal, I want you to see where the sell signal came in, calculate whether that was a winning trade or a losing trade, and just let me know what is the best performer. Okay. In terms of the trade execution, I'm going to have it open at the open of the position, the open of the next trading bar. But what I want to do is I want to see how well, not necessarily just MACD works, but what are the indicators that work with, in this case, Tesla, Shoe, Pony. So hopefully that makes sense. Let me go ahead and kind of click on OK right here. I think that's a symbol that's wrong, so I'm going to add PONY. I'm going to start the system test. Okay. And then as that runs, it's not going to take very long. It's going to rate 8,000 systems, which means I might have actually selected something with optimization in here. Maybe. We'll let it run for a little bit. The idea is what I want you to get, because you can run this as much as you want. There is definitely something in there that's optimized, because I'm expecting more like 100 times 4, like 400, and not 8,000. So something in there is optimized, which just means it takes multiple variables. I'm still going to run it just a little bit and kind of get you an idea. And maybe I'll even run all the way, depending on how many questions you have. I don't have any questions. Maybe not. Let me see here. I thought I saw Greg sending me a message of some sort. Nope. And I don't see any more questions. If you asked a question, oh my goodness, the sun is right in my eyes. Hold on. All right. Now I can read your questions. Oh no, it's still there. All right. Okay, is it done? I think I just finished. Okay, let's go back in and look at the report. Oh no, it's still running. Okay, you can see it's about halfway done. So in the time that I tried to clone the supplies, but unsuccessfully did, it got about halfway through. It's run actually about 4,000 simulations. Okay, let me go ahead and cancel it, and that should let me look at the report. Okay. Okay, cool. Now, if we had let it run all the way through, we'd have more bars up here. Let me go ahead and make this a little bit larger. I'm going to go ahead and just sort this on average net profit. Now, with a system tester that we have, you can test as many stocks as you want against as many ideas as you want. And then, and in this case, we just did 4 stocks, and we did about 4,000 systems, but one of them was using optimization. So, and I don't think it's that quite in here. But in that particular time that we've got these methodologies that came back. All of them were actually profitable over the last 2 years. I do have a feeling that if we would have run it a little bit longer, we would have had some losing systems as well. Okay. If we kind of look here, I'm going to sort them based on average profit, which I've already done. Our best performing system was a system that was called the ACT INS trend. Now, I know this because I've been using Metastock for a number of years. ACT is some methodologies that were designed based on the work of John Ehlers. Okay. On the stocks that we tested, there was 4 stocks, Meta, Pony, Tesla. You know what for there. I don't remember. But when we click into the next screen, we'll see there was about an average of about a 74% gain. Our best profit was about 21,000. Our worst was about 1,580. And we made about 54 trades. Now, 54 over 2 years means about 27 trades a year, which is like 2 or 3 a month. That's a lot if you're looking at a lot of instruments. And this is why I start to talk about finding the best strategy for you, right? For me, 75% win rate is pretty good, but that's a lot of trades if I'm looking at a bunch of different instruments. If I'm just looking at Tesla and it works really well on Tesla, great. If I go down one, if I look at the ETS trading system, this is one that was put together by Michael Murmer and is included in Metastock. It actually traded, it only made 60%, but it traded 11 times over the course of the last 2 years, which means like for every instrument that we're looking at, maybe one trade every other month. It wasn't nearly as active. Okay. And for me, as somebody that works a fairly busy schedule and tries to kind of do some trading, I call it market research, that would be a little bit more conducive than something that's a little bit more active than the 54. Okay. Here I can see what the best profit is, what the worst profit is. I can see the win versus loss ratio. There's a lot of numbers that I can kind of drive into and look at. And just because I'm running out of time, I'm not going to kind of drill super deep into this. Let's go in and look at it though. Right here, this is one of our optimized systems. So it did test a whole bunch of different values. I'm going to go back just because I don't want to kind of mess with that as much right now. We'll go back down to the next performing one, which is called the Mama-Fama system. This is also another ACT system. It's also based on the work of John Ehlers. It traded more often, and it made a little bit less, but that's okay. Let's take a look at that. Here we've got the stocks that we tested against. We've got Meta Platform, Pony AI, Steve Madden. Is that Shoe? Okay, that was the one Greg came up with. And then we've got Tesla. So I'm going to sort those by profitability. Meta really worked really well on this. It had a 98% trade on 34 trades. I'm going to go ahead and highlight this and just kind of click on view. There's a lot of metrics. I'm not going to talk about all of these metrics, mostly out of respect for not going way over. But 98%. Our buy and held would have been about 100% over the last couple of years. Okay, we had 15 profitable trades. 10 of those were long. 5% of those were short. Our unprofitable trades, you can see, were 19 of them. 7 of those were long and 12 of them were short. You can see what our average profit was. It was $874. Our average loss was $174. It breaks that down into a buy hold index, a profit loss index, or risk reward index. And again, we're not going to cover all of what these mean, but the help file is huge. So if you click on help here, it will break down all the matrices. One thing that I do like to look at is the equity line right here. So right here, this kind of breaks down exactly how our account would have looked over the last 2 years had we started trading with this. Okay, you can see there's a little bit of a peel back right here. I'm going to go ahead and plot this on the chart because we want to be able to kind of tie this into exactly what we're doing here. Okay, so I plotted this on the chart. It was the MAMA. The MAMA stands for actually the mother of all moving averages, and the FAMA stands for the father of all moving averages. They're based on Dr. John Ehlers' work. I believe he's a doctor. I might be wrong on that. But he came up with some automated indicators. You can see kind of this would be our account balance. We started at 10. We ended at about 20. So a double in about the course of 2 years. Okay. If I want to learn more about kind of what drives this system, I'm going to kind of zoom in a little bit here. I'm going to take off the symbols. So I'm going to go edit, delete all, and I'm just going to take the indicators and symbols off of here. And I didn't take that one off, but that's okay. what I can do now is I'm going to come in here. There is a template that kind of shows the MAMA and the FAMA, but let me wrap this up. I'm going to go back into the expert advisor. Remember, that's where we went to kind of apply the thing. I'm just going to type in MAMA right here. Okay. I'm going to go ahead and attach that to the chart. I'm going to go ahead and click on close. You can see then when we're long, because the long signals will come in, when we're short, when the long signals. So again, objectively, we can see kind of how this is performed over time. And if we want to learn more, again, I don't want you to use this as a way to bypass your education. But if I'm kind of looking for what to trade, I want to know what works on the stocks I'm interested in. So if I'm interested in trading in Meta, this might be something I'd want to learn about since it made 100% in the last 2 years. Okay. If I want to know more, I'm going to just pop into that expert commentary that we were looking at before. I can come to this sell signal right here that just happened, maybe. Oh, I missed it by a day. I was on it. Okay, yeah, it was just hiding itself in the arrow right here. So it's going to tell me that there's a sell signal on the chart. You can kind of see where that popped in. If I ran an exploration, which is something I'll just talk about. But right here, it says the MAMA and FAMA indicators were developed by John Ehlers and are moving averages that are intended to reduce whipsaws because they use volatility as an adjustment. For more complete understanding of the MAMA-FAMA strategy, you can look at the manual or you can read John Ehlers' Rocket Science for Traders. Okay. Right now, at this point, they were giving a short opportunity. Gives you some advice in terms of what to do this. Now, I'd go in and recommend that you kind of look at a lot of those metrics. See how that works. See what the drawdowns look like. Make sure that it's something that you're totally comfortable with, right? But if this is something that you like, and it's something, again, what we're looking for is what works. There's hundreds of indicators. How do I kind of figure out what works? And this is a great toolbox or a great utility to help you do that. All right. Also, and I'll just mention this. I usually show it, but I'm so behind right now. You can scan. You can scan and say, well, I do like the MAMA-FAMA symbols, the signals that I'm getting. What's giving me a buy and sell signal today? Somebody's got a live mic again. Okay. All right. We'll just recap a little bit. Metastock has been rated the best software in its price category 32 years in a row. I've seen a lot of software that comes and goes. We've literally been working on this since the 1980s. There's so many softwares out there that just don't have the depth of knowledge that we do. And for 32 years in a row, it's been rated #1, including last year and the year before that. And I can say that 31 more times. So we do have a couple of versions. I'm going to go through those really quick. There's our real-time version, which is Metastock RT. It's $210 a month, but not only does it come with Metastock, it actually comes with a product called Sinnig, which they spent about $1 billion designing and is one of the best news platforms available. They literally developed it as a competitor to Bloomberg. Okay. We also have a DC version. It does not come with that news service, but it does allow you to do everything we did today. It's about $75 per month. And the offer that we're going to do, there's a whole bunch of stuff that talks about bonuses that we're here. We do have a really cool Ichimoku system that's included. I'm not going to talk much about that. If you're into trading gaps, there's a gap systems that's in there. Michael Murmer, we actually talked a little bit about because his system performed well, and we actually include that as part of the system as well. Jake Bernstein's going to talk in a little bit. He's going to talk about his expansion contraction. The indicator is in here as part of it, but not the scan and the expert advisor. But he did include it for free. We want to make sure it works well for you, so we are going to include some training. As part of it, we're going to give you 14 videos to help you get started. Okay. In addition, that's normally a $99 value. In addition to that, we are going to give you what we call our white glove installation service. We'll sit down with you. We'll spend some time with you. We'll help walk you through the software. We'll show you how to run your scans, your test, attach your expert advisor, set up your charts, anything you want. They've got kind of a bit of a tour that they can go through, but if you're looking at Metastock for a specific thing, we'll make sure that we know how to use it, because so many of our employees here have been here forever, and so many of our customers have just been using Metastock for decades. I'm still talking to customers I set up when I started back in 1997. It's a great software program, and I think that kind of gives you some idea in terms of how much it can be helpful for you. I really doubt I'd have customers that have used us for literally decades. 27 years now. If it wasn't helpful for them, if it didn't help them identify and find those trades. So we do have some great support. If you ever have any questions, you can call them, you can chat with them, you can send them email. We haven't gotten a letter for a while, but if you want to, you can send us a letter. We'll send you another letter back. What we're going to do today is we're going to offer you an extended trial. So let's just do this with the DC version. If you buy a month, we're going to give you that second and that third month for free. Okay. Right now, here, it might be different if you're watching from Asia or whatever, but right here, it's October 20th, which means if you set up this extended trial today, November, December, January 20th. So for $75, you can try the software that's been rated #1 in its price category for 32 years until next year, halfway through January. Okay. If it's not helpful for you, you can go through the training that we do. You can go through the help. You can call our support if you need anything. You can go through the one-on-one. If it's not helpful for you to kind of identify trades, you can just cancel your subscription. But we want to keep you going. We want it to be something that's worthwhile for you. I wouldn't trade without it. So if you want to take advantage of that, give us a call, 800-882-3040. You can also get in touch with us at metastock.com/saleschat and metastock.com/tradersummit. So okay, want to ask a question. And there was a red line and a blue line. I think those were just the two moving averages that we used. I think that's what you're looking at there, Juan. So we used, with a MACD calculation, it uses a 12-period and a 27-period exponential moving average, and that's all that the red line and blue line were, if that's the right line. So there you go. Metastock.com/saleschat if you have any questions, 800-882-3040, or metastock.com/traders-summit. Okay. This is just the same slide. Again, though, it can help you scan the markets. It can help you test ideas. There's a forecaster. We didn't talk a lot about Metastock, but I do hope you learned a little bit about MACD at least, and I do hope you try out the Metastock software program. It's great, and I hope it's helpful for you. I hope in 10 years when I'm running another summit that it's something that's worked well for you over the years. As we kind of move on to the next speaker, I do want to say thanks to both of our sponsors. I kind of went through both of them ad nauseum at this point, but thank you to Stocks and Commodities Magazine for supporting the event, for being a partner for us for so long. And I'd like to encourage you to join our Traders Forum. You can chat with other traders. You can learn about the markets. We do a couple of sessions every week at least. Sometimes we do 2 to 3 sessions per week at minimum. And there's a great community of people that are kind of sharing ideas, and all of that is free. And you can do that at thetradersforum.com. So join if you haven't. Our next guest, I actually talked a little bit about Jake Bernstein in my last presentation. And Jake, if you weren't here, it was all good. Don't worry about it. Just kind of talked about, we had a question about psychologists, psychiatrists, and like the best profession for trading, and you came up because you're a great trader. Jake has been trading. I think he traded. You started your first trade was in 1967. Do I remember that right?
You're absolutely right.
All right. I was -7. How many books have you written on trading now?
It's been 47 books.
All right. As you can tell, Jake I consider Jake a great friend. I'm so happy that he's a partner with us. I've learned a lot from Jake. He talks a lot about seasonality. Today he joins Brian Latta. Brian has done some elegant work around some of Jake's core concepts to create the JBXC. And so they're going to talk a lot about that. Brian, how are you doing today?
Very well, thanks, Jeff. Thanks for having us.
Okay. Yeah, of course. Let me go ahead and I think I can just do this. It's a little bit of a new interface. I'm going to make you the presenter, which I think makes me not the presenter. Oh, I got Jake instead of you. Let me make you the presenter. Okay. Brian, did it prompt you to say, hey, do you want to share your screen?
I do not see that yet.
Okay.
but I
Here.
can click share my screen.
Oh, do that.
Let's go to entire screen, and also want to get the presentation going here. So let's try to do both at once. I may
Yeah,
share the
I can see
background.
me again. Oh, wow.
Yep.
That's,
Sorry about that.
no,
And
that's
then
Oh,
let
that
me
was
switch the
that was a
slides.
lot of handsome.
Wow.
We could stay on there for a minute. Brian, I can see your screen. I can hear you. I can hear Jake. I'm going to get out of the way. It's your turn.
Go ahead, Brian.
Good to
You
go.
take it. I'm having some trouble with my slides here. Go ahead, Brian. Take it.
Okay, thank you for that, Jake, and thanks, Jeff, for having us again. And as you can see here, we're just on the basic beginning tile slide here. We always are looking to make some improvements on what's been going on over time, and certainly enjoy the Metastock program and chart services on, and would anticipate that that would be continuing to improve over time. So I'm going to get right over at least to the important disclaimer. I'm not going to read through this. You've all seen it before, but definitely read through this because you can lose money trading. And in all irony, you really can't say you can make money, but we can say you can lose money. So we'll appease the people who make these disclosures and tell us that we have to disclose that you could lose money, and that is always true. But again, since you're seeing a bit of... Sorry,
Brian,
Jake, go ahead.
Did you share your screen? I don't see it.
I am. And Jeff, do you see the introduction?
Yeah, you're sharing your
yeah.
screen, Brian.
Yeah, I do see it.
Although, Brian, you might want to go ahead and hit the hide at the bottom. There you go. Thank you.
I hit it, but it hurt my knuckles.
I don't see
No,
it.
you're doing great. Everything looks great. We were all able to see that box at the bottom. It was distracting, but now you're perfect. Thanks.
But I don't see
We
the
still want to
screen.
get Jake to see the screens. I'm not sure why Jake isn't seeing his screen, but if somebody could help him because they would like to see where he is, definitely a major part of what we're doing here. This again, the same slides that we've been showing over the last few years, but that is again because there was a lot of research that went into this initially. And even more than a year after sharing that with Jake, Jake went through that and wanted to be able to make sure he was comfortable with using anybody else's programming. So that's kind of led us to today, where this program is 100% objective with the rules. We've shared them in previous webinars. I'm not going to be sharing all those rule slides again, but back in the June presentation, all of the rules for the different setups that we've been showing are there. And of course, if anybody has any questions about getting those, we have no problem in sharing those rules again, because we do want to make sure you know when to get in, you know when to get out at a loss, you know when to take a profit. It's been pre-programmed, back-tested over the years, and shown to have had positive outcome. I will say in strong trending, very liquid stocks, preferably with high volume. So I know I'm 5 million shares average daily volume before I'm even considering taking one or two, maybe three of the top weighted stocks in strong trending sectors. So we do need to have a basket, a small basket. That is something I learned from Jake back in 2014 when I became a client and started to learn how to program and build systems. So on that, Jake, everybody should know Jake. It's been around forever. And again, you can just see some of what he does. I know the capital markets report and all of Jake's, programs that he comes out with on forecasting and everything are, what are they going to say, a must watch. And Jake's seasonal trader program also is fantastic to help identify what to trade in advance. And I would have to say seasonal trader I would consider to be bread and butter type trading. Pay your bills, make income regularly. Is it perfect? But Jake, do you mind if I share a little bit about what you found out trying to incorporate AI into seasonal trader?
Brian, go ahead. I've got nothing showing on my screen. I can't see your screen. I'm working in the background with Jeff to try and fix that. So have at it. I appreciate it, Brian.
Okay, sorry about that. And again, we've both been talking about utilizing artificial intelligence to improve systems. And in an application process recently, Jake found that artificial intelligence wasn't really able to significantly improve the already published results with Seasonal Trader due to the high accuracy. So that I would say, even though ideally we'd like to think AI will make everything better, if it's already great, even AI may not already be able to make that better. And I'm looking forward to also being able to see how we can apply that to the expansion contraction coding here in the near future. Just a little bit about me. I am just going to go to what I'm drawing on from experience is working in Silicon Valley back in the 80s and 90s in reliability assurance before I got into trading. Learned statistical process control on the job. So don't have a degree. I'm not a mathematician, but I understand all that stuff and have learned that if you have a process can be improved, and improved processes over time will get you the type of results, hopefully, that you're looking for. As my assumption, like most of us, you're looking for growth and limited drawdowns. And we'll have to say most of that will be on you. How much risk you take per trade, how many trades you take with risk, which I'm trying to bring that right back around to Jake. You really don't want to be taking hundreds of trades at once. The more you're trading, each trade is risk, and the more risk you take, the greater potential you have for a drawdown. So with Jake's setup trigger follow through process, we want to not only create some indicators that help us with when to get in and where to get out, or to gain or a loss, but to be consistent. And that's what I hear as a coach more than anything. As people come in, they want to be more consistent. They want better entries. They want better exits. And the irony is, of course, they haven't tried to figure that out on themselves, and they do go to others. And that's certainly where I was back in 2014. Went to Jake to say, hey, what do you got in pharma programming that we can run back tests on and show consistent high probability trading results over time? And that's a little bit what you're seeing. And here we've got expansion contraction now is available. It's non-lagging in nature, unlike most indicators that require many bars to plot one bar of data. Expansion contraction is identifying how fast price is moving up or down through Jake's moving average channel. So I took his process and tweaked it a little bit to try to identify a pattern that would display strength of the system rather than just the setups. And that incorporated very well into that. And as you can see, I also added a trend filter. Skip to the laser pointer. The trend filter then in this indicator shows that we would have a longer term trend and a shorter term move on this I'll call swings. And that helps us with short-term swings and long-term trends clearly identified on the chart. So let's at least take a look at the indicator just itself from the charts. And as you can see, I've marked out the short-term swings are the green line and or the red line. When the red line's below neutral or the median or zero, basically, that is showing that we're bullish here, because a green line above the red line is showing we're short term above Jake's moving average channel. When the green line is rising and the red line is falling, that's expansion. That's the strongest part of a move up in this case. And then the cone or the cloud in the background is the green shaded area in this case. That would be the trend. So you can literally see here where we went short-term bullish with the green line crossing above the red line. That was an indication that price was moving above Jake's moving average channel. And then the trend filter triggered. Go ahead, Jake.
I'm here. Success. Go ahead.
You got in, and you can see. Well, good, because we definitely want your input. Your experience exceeds mine, as I'm only about half of yours. Being late to trading, it did not start in 67. But I was 15 then, so since everybody's showing how old or young they are comparatively, I didn't get started into trading till quite a bit later in life on that. So, but I'm glad you're here. Just definitely want your inputs. If I hear you starting to make a comment, I'll cut off and definitely just jump in at any time.
Just let me
So,
say one thing. Just
sure,
one
go ahead,
thing.
Jake.
It's an honor and a privilege to be here. Thank you for inviting me, Jeff and Metastock. It's an honor to be presenting with you, Brian. You know your stuff inside out. I just want to say I like to keep things very simple. So for me, expansion contraction is either red or it's green. If it's red, I'm short. If it's green, I'm long. It takes me 2 postings in the same color to change my position. I'll be talking more about it as time goes on today. So just go ahead and take it, Brian. You're doing an admirable job.
Thanks for that, Jake. Right. So we just are looking to once again describe the components of that. As Jake is describing, the rules of how you use that might be slightly different. Earlier in the slides, you saw Jake may use it slightly different than I do, but that's a part of trading, right? Jake's background and risk tolerance is different than mine. The main thing would be we both still have clear rules of when to get in, clear rules of when to get out at a loss based on the indicator, and clear rules of when to take profit in advance. And that way we're basically just waiting either for the next setup that triggers a reason to get into the market in this case, or we're already in and waiting for the setup conditions to determine when we take profit or exit the position in the end. And as I said, that's been back tested in liquid markets over time and identified to be a consistently positive outcome. I
Brian,
would say, yeah, sure, go ahead, Jake.
yeah, just of course. Remember, folks, this is the indicator that would appear at the bottom of the chart. So right now we're not comparing it to price, we're just looking at the indicator itself. The most important thing for me at my age is time. I want as much time as I can get. I want to do as little work as possible to make the maximum return. And that's what this indicator allows me to do. It allows me to make decisions quickly, easily, objectively, and profitably most of the time. So again, remember this will appear at the bottom of the chart, which we'll be looking at very soon. Go ahead, Brian.
Right, we'll have plenty of examples, but for those who are not familiar with it, we do just want to identify the components as they are as simple as it can be, yet it is also fairly complex in what it shows on here. So let's at least pop over to the next slide, where we had said that we could also see some short-term resistance, and that would be where the red or green lines, are showing contraction on here, and we have major uptrends where the entire cloud or cone contracts. Would identify a significant resistance if the cloud is green, or a significant support if the cloud is red on that one. And it does help us with those short-term and long-term support and resistance definitions, as well as having these horizontal dashed and dash dot or dotted lines above or below the median right in the middle. Hopefully the labels are fairly clear on this. And what we've done here is coded in the mathematical formulas that would tell us if it's normal, and that would be 1 standard deviation moves, which are identified in here, as you can see, with the small dashes, short-term 1 standard deviation inside the double small dash lines for the red and green line would be weak. I'm kind of pointing to an area where everything's inside the normal range and therefore weak. And of course, we expand out and explode up and become strong on that as we start to exceed the 2 standard deviations short term in this instance, or even up here at the top, as you can see with the label pointing down here, the upper large dash line is 2 standard deviations long term. Again, looking to use math for overbought or oversold. Conditions above 2 standard deviations long term, in this case, the uptrend would be considered to be overbought. Definitely a term I personally don't like. I don't think Jake likes it either, but we'll call it limited upside, and price may trade sideways to bearish, as overbought I think is a bad label. On the upside, expansion contraction is not limited to its range on the far right. So it's not a 0 to 100 scale. A bit problematic with indicators like stochastic and RSI. This has an unlimited range. if we were buying forever, this would just keep expanding. And that is a benefit on there too, because it's not range bound and poorly identifying conditions where we might consider there might be limited upside or limited downside when the range expands beyond the mathematical levels we would consider it to be staying within. So you can see in times in here where it stays relatively normal inside the range and strengthens, weakens, strengthens again. And then as we get off into the right side of this chart, the trend, short-term, long-term patterns become weak. And in a weak consolidating pattern, right, we would anticipate to see some drawdown or even ideally some limited trading in that. When we get to the charts, you're going to see that the bars or candles, if you're using them, are color coded, and expansion contraction marks every bar candle with the conditions. I just kind of color coded these so you can see dark green bars will be a strong up condition. And again, I'm not going to read every line on here because you can read much faster than I can talk. But the idea is when you blink at a chart, you can tell exactly where we are right now. What are the conditions, up or down, strong or weak? And that should help identify what to do immediately without staring at the chart for hours, trying to figure out what it's telling you. Ideally, we know if it's strong up, weak down, or strong down on those conditions. And if you think about, if you want to make some money to the upside, we'd be in a strong uptrend. Or if you're looking to make money in the shortest period of time, we'd be in a strong downtrend. And ideally, those are the patterns you're focusing on with the setups in order to take a small amount of risk and see a larger gain on here. And also explained in here a little bit more about the standard deviation pricing, as well as needing lots of data in order to determine what's normal. So if you find that your indicator may not plot if there isn't, say, 500 weeks or 500 months or 500 days of data, but fortunately the color coding on the bars is still visible on that. So let's at least get to a weekly chart example. I've got up the commentary on the expert advisor just to show that when we are labeling out a strong buy, identified by the triangle pointing down to the B setup on here, B for buy, when short-term and long-term bearishness turn bullish, we'll have a trigger on that. If you look straight down, you can see where the cone of the cloud has turned green. The green line is above the red line on here, but quite simply, we just coded this in so we're dark green on a strong move up. We kind of filter a little between light green and dark green as we make a correction. Strong up again, light green, a correction. That's just evidenced also by contraction on here. And so as you can see, it'll produce some long-term moves. We're looking back here at the first quarter of 2023 that moved all the way over into the first quarter of 2025. I did want to at least pop up where you can get some long-term trends. We get initial signals to get in. There's also the continuation trade signals from either expansion contraction or the blue and gold moving average channels on here, Jake's rules on there for buying on the dip. As we do want to identify a trend, we want to take some profit as it gets up. We'd like to add to the winning trade when it makes a dip and goes up and takes some profit and pulls back down into the range and buy the dip. Go back up and take some profit and pull that over and over and over till we get some kind of clear reversal. You'll see there is a programmed S. As we look down here and see expansion contraction has gone short-term, long-term bearish.
Brian,
This
can I get
was,
a word?
sure, go ahead, Jake, go ahead.
Yeah, and one of the things that expansion contraction is especially good at, no matter what time frame you're in, is keeping you in a trend for a long time and then realizing if it reverses that the trend might turn back up again. So your losses are small. You're on the wrong side of the market for a very limited amount of time before it gets back in with the trend, which is what I especially like about it because it's the least amount of work for the most amount of return for the least amount of time. Go ahead, Brian.
Exactly, right. And then for most of us, and me included, when I first started getting traded, was trying to identify exactly when to get in. and where to get out. And we wanted to make sure that that is completely clear on here. And again, if you needed the rules, the previous programs are recorded on YouTube for Metastock, and subscribe to that channel. It's fantastic for you to continue to get some education, as many of the partners on here have their own presentations and might suit your style of trading. As that's really what we need to do, is find the style that suits us. And as Jake is saying, could create some long-term moves. So that's also my style. I do prefer to get in and stay in long terms as an options specialist, trading spreads, taking advantage of long-term trends. And some of the statistics of expansion contractions trend component are an average of 24 to 36 periods. This is just one of those that exceeded that significantly with a 2-year trend. And of course, ideally, if you hadn't got in at the beginning, it would be clear of when to get into the trends. If you've ever missed the trend, not knowing when to get back in, it can be pretty frustrating.
And
So,
let me add one more thing, Brian. Let me add one more thing.
Go ahead.
As everybody here today knows, the big emphasis nowadays is on short term. We're not talking about hourly charts. We're talking about 3-minute charts, 2-minute charts, even 1-minute charts. Personally, that's much too much for me. Even though I wrote the 5 best-selling books on day trading for McGraw-Hill, I don't think day trading is right for most people. They can't be in the trade for a long enough period of time to make money unless they scale their trade and trade large positions for small moves. Short-term trading, 3 to 5 days, very effective these days. And I just put my 2 cents in for you there. Go ahead, Brian. It's back to you.
Thank you, Jake. And I agree completely that I would say the tendency in day trading is to overtrade. And just speaking from experience on that, look back and say, wow, I've traded all day. I don't really have anything to show except the broker's kind of happy because of all the commissions I just spent chasing the market. So if you have a systematic process, it's clear. Even if we get down to a 1-minute chart, you'll see that there are setups that can last for 20, 30, 40 minutes or more, even on a 1-minute chart. And at least if you know what the current situation is, it might help alleviate that get a reverse problem, which usually leads to drawdowns. And as I was mentioning, this is a Q's 1-minute chart. I did want to pop up with a gap up buy that literally did go a little bit higher and then turned lower. So will there be losses over time if price had not moved up high enough to hit a predetermined profit target, and then eventually did trade lower and hit a stop and reverse exit signal? Then we could technically consider this either small gain if it got up enough to hit the targets. I just didn't calculate them here on this just as an example. Or it's a loss with a stop and reverse. And as you can see with this sell, where the red line had turned significantly above the green line on some selling, and the red cloud popped up on here, the S identifies the first bar on this and just pop the arrow on there so you can see it. And as a 1-minute chart, that did last for quite a significant amount of time, actually over an hour. And stability on a 1-minute chart for an hour with an initial trigger, an add-on S for a continuation, a second add-on S for a continuation, and a third one, and a fourth one, which eventually would have been a loss as price goes up. I have a tendency to see when price does make a reversal that the last trade on there may be a small loss. But if we had several winners and then a small loss and then a stop and reverse, ideally you're seeing it's clear, it's on the bars. Every single bar should help you with what to do in this case, and it can be stable and last for quite some time. And again, we are looking at some more high volume, actively traded markets. In this case, it would be your preferred market. And I'm just showing an Amazon chart. Go ahead, Jake.
I want to say something about lagging and leading indicators.
Lagging and leading?
Yeah, you want to talk a
Right.
little bit about lag time with expansion contraction?
Yeah, and we did kind of comment on that a little bit earlier, but it is good to review that this indicator is basically taking the highs and lows of every bar and comparing it to the high, moving average high and moving average low of Jake's channel and coding it in here to the indicator. So it takes one bar of information to plot expansion contraction, where most indicators are lagging, and 10-period moving average requires 10 bars before it plots the current pricing. And the idea here in non-lagging indicators is that it's concurrent, it's changing with every bar. We'll say it's not perfect because there can be a slight lag before or after a setup, depending on how price trades, but it is still very accurate in the fact that it is not lagging and concurrent, and preferably when we're trading with indicators, we're not using lagging moving average crossovers. I know, Jake, you've said in the past that if you were using the death cross or the golden cross, which are the 50 and 200 crossovers, you are so late in moves that it isn't a practically positive strategy. Using lagging indicators of higher time frames is problematic. And we've taken care of that with the coding and expansion contraction to be non-lagging codes every single bar individually.
Correct.
So,
Thank you for making that, reinforcing that point. Because the one thing you don't want as a trader, or even as an investor, you don't want to be zigging when you should be zagging, and that's the problem with most indicators.
exactly, right. They'll have a tendency to be late, and that unfortunately creates smaller winners. If you know the move of the future and how far it's going to go, the later you get in, the smaller the net reward on there, and your risk is the same. So you're actually hurting yourself on timing by not having clear timing and getting in on the coding on something that's non-lagging in this case. So hopefully that will make sense as we go forward on here. So I'm just going to say the way I look at expansion contraction with the color-coded bars is you'll always know what to do. You'll know whether we're strengthening, you'll know whether we're weakening, or whether we have reversed. In this instance, as I said, it's been back tested over the decades in liquid markets and have seen, well, I'm going to say between 55 and 84% win rate. It just depends on the period. Over time, longer term trends will give us longer duration results. But as far as a indicator stability from trend circumstances, that's quite positive on there. And I did mention I like to look at the stocks that are in strong trending sectors, and they're the stocks that are moving the sectors. That's the top weighted stocks in strong trending sectors. After all, if we're trading a trend trading system in a stock that's going sideways, we're going to have a drawdown. And the results have shown that if we're getting some consecutive losses or a drawdown with expansion contraction, it's almost always either in a choppy sideways market or in just a sideways market that doesn't go far enough to hit the profit targets and may give us some consecutive losers on that. The positive note on back testing is that statistically expansion contraction has fewer than normal consecutive losers just due to statistics. So I'm going to say here, if you've never traded before, if you follow the rules with expansion contraction, you will be more consistent. And when I say better entries and exits, that is from back testing. And I know for me, what I love about what I do is that it's 100% objective, clearly defined, proven to be consistent in the long run. And that's way better than early on in my trading where was inconsistent and was just looking to make money. And ultimately, that's what got me to Jake, as I said, in 2014. I'm popping up to a monthly chart here just to show that not only will we see some strong buys from the commentary window on that, we have them coded out here. So you'll have the B for the buy, and this is a monthly chart just to see the stability of this over time. We are looking back at the first quarter of 2023. We'll say all of this is a buy. This is a bullish. We're either buying the dip down towards Jake's moving average channel 8-period of the low, or for me, I also like to see it come back to the center gray line, which is just a 20-period simple moving average. In an uptrend, if we're buying the dip, we have the potential here for this to go significantly higher. If you're missing the dip or it didn't dip low enough, you see there's another continuation buy here in the second quarter of this year, and we've traded higher I did just kind of want to pop this up because on the monthly chart, of course, we have exceeded the January high. And that, as Jake has mentioned before, is a good indication that we should see a bullish close into the end of the year. Not a guarantee, obviously, but taking out the first couple of months of the years or January's high for right now is significantly bullish. We're also coming into the most significantly seasonal bullish time of the year. And certainly right now, with the fact that this is strong up and we're seasonally bullish, I'm going to suggest that this is still a strong market and we'd want to be buying the dips and staying in until something significant changes. I'm dropped down to a weekly chart. Again, we're still just taking a look at the cues. If you're looking for what the chart is, again, a buy setup coded as a strong buy in the commentary window on the expert advisor with all of the additional data in here that's available to help out. And there's a fair amount of data in there to scroll down, and I can't quite scroll on there because this isn't live. But even here on a weekly chart, again, a multi-year uptrend. The short-term pullback, just in case somebody's curious, these diamonds are when price has traded to a price extreme support or resistance. And anytime we hit a price extreme more than 3 ATRs away from average, I consider that a take profit target. So sometimes you look like, go ahead, Jake.
And those are marked as they're happening, right?
They come up on the day, yes. In fact, I do like the fact that the coding pops up during the day. And with that, you can tell prior to the end of the day that you have a setup condition. Obviously, waiting for the end of the day, the trigger would be all the rules are true. Get in now on these situations, as this is meant to be at least an aggressive strategy on either the first day we have a trigger or by the second day on that. And that helps us at least identify those setups.
When you have a chance, Brian, can you comment on the use of expansion contraction with options and option strategies?
Yeah, I will in a second because I do have some options results to go along. We have been keeping track of what's going on and plotting those every time we do a session. So first it was created, then it was back tested, then it was forward traded and tracked. And so now we've got basically walk forward results from a back tested system. And that helps also plot out not only the results if you are buying and selling the setups, or also with the options. As an options trader, I do find that we can exploit these strong moves that may occur quickly in a short period of time with options on that. So very specific strategies to trade there. I dropped this down to the daily chart again so we could just see that same monthly, weekly, daily drop down. We did have back in July, and going into August on the cues, a correcting move that dropped down lower. And I just wanted to identify there are times when it's maybe not as clear. We have a buy setup and a weak sell setup and another buy setup and then a stronger sell setup. These are the periods of time when price is trading a shorter term sideways that we might have a couple of consecutive losses. And as I was saying before, at least historically, we've had fewer consecutive losses than is statistically normal on the tables. I brought up a gold chart on the 15 minutes. So that is identified down here in the bottom right. It's up in the top left is gold. We can see with the expert advisor here in the commentary window identifying this buy trigger back on October 10th on a 15-minute chart on here. So this is October 10th, the beginning of that setup that went all the way over to October 16th. Through that one, that is a fairly decent run up on a 15-minute chart with the indicator setup with 1, 2, 3. I'm going to skip those two because we would be in already. And then 4 add-on setups with the setups that are continuation trades, or even buying the bottom of Jake's moving average channel or the 20 SMA on there with the rules that we've posted before. So you can see how even during the day we had a strong expansion. we had the contraction period where we went up, but went up slower. We know it's up because we're all green here with the long-term coding on that. And so we do want to take a look at even on short-term charts, 1 minute, 15-minute charts. I am plotting now silver, SLV on a 15-minute chart. Again, the commentary showing that we had a strong buy at the beginning of the day on the 15th, and then saw pricing trade higher. And then here's the stop and reverse at the open of the next day, as these markets, although strongly trending, and in these strong trends, if you're not in gold and silver, there's still a market to continue to trade as their strength is continuing. So, but we do want to at least show on many markets on multiple time frames what the patterns look like. Bitcoin, I did pull up Bitcoin here recently, or at least BTC. This is also on a 15-minute chart. So although I prefer to trade daily and or weekly charts for longer term trades, there are those that do like to trade intraday. Jake's 15-minute opening range breakout system has been proven to be consistently positive outcome. And so that's why I would kind of say, if you're thinking intraday, 15-minute, boy, if you were really thinking less than 15-minute, maybe 5 or 10, but as we were saying before, a 1-minute chart, that can be pretty chaotic in there. So ideally, if you're thinking, I'd like to get in and do some day trading, first I would say have your risk rules, the number of trades you'll take with risk, so you don't end up in a market that goes up and down during the day and you have an unacceptable drawdown. The September 30th at the bottom of the chart and heads over towards October 3rd to 4th on there, and that is on a 15-minute chart, again with some potential add-on trades. If you missed the first buy setup and you're looking at the next day and you're seeing that price is making the dip with these patterns on here, we are looking to buy the dip or get the breakout trades in these in order to take advantage of these trending markets.
So, Brian, would this also work on a monthly chart?
Yes, we had an example at the beginning, right, of the monthly chart to talk about the breakout this year in the market above the beginning of the year's monthly high. So monthly charts, well, I've had it down on tick charts, 8 ticks, trading the ES systematically. That's a 2-point bar. But then using the 15-minute chart as the anchor chart to say if you're in an uptrend or for the day based on the anchor chart, right, you're looking to buy only on the tick charts. But there are range bars and tick charts. I've looked at expansion contraction on all of them, and it does show similar stability no matter what the time frame and or size of the bars you're looking. For example, 8 ticks or 2-point bars, where every bar is 2 points, would be trading price swings, not time. So if you're intraday trading, the suggestion is to trade the swings, not necessarily time, because that can be a bit problematic. Waiting for a candle to close while price suddenly reverses can unfortunately create some drawdowns. This is Bitcoin also on the downside. So you can see here, this is just the beginning of the day, October 15th. Started with a trigger on this one, and I did pop it over because I guess I did say at the beginning of the day, but the actual beginning of the day was 2 candles later. So this is 15 minutes after the close of the previous day, open of the new day. Then we have that situation where this lasted for the 15th and the 16th and the 17th to the downside on a 15-minute chart is a multi-day trade on an intraday time frame, and those are, well, less heard of. I don't want to say unheard of, but also go ahead, Jake.
One
question?
One quickie. How does the expert advisor help?
Well, the expert advisor will actually show with a buy or a sell setup, right, whether it was strong or weak on that, and shows whether or not the range is expanding or contracting. And we'll also put out the major supports and resistances and continue to give either overbought or oversold or divergence indications. As I said, this is not live, so I can't scroll down in the commentary window, but there's a lot of additional data goes along with the expert advisor in the commentary window to help you with identifying, as I said, supports, resistances, and strength and weakness.
So it's a fully functional following of the rules exactly the way they've been coded, right?
It is following the rules on here and on that one, although we would certainly have to say that this isn't showing the profit targets or the stop losses on here, but it is showing the size of those on there. I'm of a mindset that would be really cool to see all that in advance, all automatically plotted on the chart. Ideally, that would be somewhere down the road. Just certainly if you see sell here, stop up there, target down here. That is pretty clear on, and certainly what I do on other chart services also to identify the profit targets and stops on that. But that is predominantly done here in the expert advisor also.
Thank you, Brian.
And when it said show me the numbers on here, we have been tracking this. You can look back over the years in the Metastock webinars that are recorded on YouTube. Again, as I said, definitely subscribe because they have a lot of training on there that can help. And certainly of all of the stuff that's available out there, you want to avoid the garbage. That which is short-dated stuff, over-optimized, and problematic because it doesn't work long-term, just short-term. And I've seen it, certainly Jake has said, test something for 10 years and then walk it forward another 5 just to make sure that the next 5 years is within the normal statistics of the 10-year back test. We're really looking for long-term stability here, not short-term performance. And reprogram. That is a bit problem. That expansion, contraction, buy and sell setups, the swing trades on here that I use back to the 20 SMA and Jake's divergence rules on this, and I've got those all labeled out. We can see for 2025 the closed and open results. And Apple's up 5.75, but is floating a 4.65% gain. I'm not going to read every one again because I know you can read these faster, but Amazon is doing quite well, although a bit flat right now. NVIDIA is doing well, also a bit flat right now. The Qs are up and floating a big gain. Tesla's up, floating a small gain, and Palantir's up for the year, floating a big gain on there. I have been showing the closed results before, but I've had a few people say, well, how are they doing since? Like Palantir's April 9th buy trigger is up and floating another 10.28% at the current Friday's close on that one. And some of these have actually also hit a profit target as of today. I believe Tesla and the Qs have hit profit targets on today's bullish pricing. And I do trade the Forex market or the retail currencies. Still having a bit of a problem with the Aussie dollar. This year, it is at least in a gain trade right now, up 63 pips. I still put points on here just for nomenclature. But we are having a less of a performance on the currencies as they trended earlier in the year. And they're now consolidating. The overall performance this year on the currencies is a little less than last year and the year before and before that. So I'm not going to call it bad. It's just underperforming the closer to 100% that it has been averaging over time. And as you can see in here, based on where we're floating right now, we're also pretty close to that with the stocks. And as I said, because calculating now over the last 3 years plus of data, because we did have starting in September 3 years ago, and of course now we're into October, that the accumulation on these, the win to loss ratios, and the accumulation over 3 years, Apple, Amazon up well still, Microsoft underperforming a bit on most of the rest of these, NVIDIA up a lot, and the Q's up, Tesla's up. And Palantir, that really didn't rotate into a strong uptrend until August of 2024. So that's why I have less data here on that. And that was when we had mentioned in previous webinars to rotate out of Microsoft. In August 2024, it became a weak trend, and Palantir was a strong trend. So I do prefer to rotate out of underperforming and into strong trendings on that, just on that. And even though even right now the Japanese yen is just marginally up, I think it's like 0.25%. Up or down little. It's actually the best performer over the last 3 years with the best win to loss ratio. But as I mentioned in the last webinar we did, that this is normal, that we might overperform and then get into a consolidation and have some wins, small wins and some losses and some drawdown on that. But fortunately, it's flat. But up the best over the last 3 years on that. And these are really decent results on 100% objective, clearly defined, written rules, back tested, and now forward traded. Ideally, you start to see some results on here. So I'm just going to wrap it up real quick so we can try to get some time on here with Jeff so we can go through. But we are, as I said, clear rules, when to get in, where to get out at a loss, when to take a profit, when to add to winning trades, and they have been back tested in liquid trading markets in that case. And just to wrap it up a little bit in asking AI what to do when you're incorporating that into a technical analysis system. Ideally, it's in non-lagging indicators. And because we've already got that in here, it's suggesting that we just need to do a hybrid test in here and add maybe some non-traditional data like sentiment and seasonality into that to see if we can improve the core system, because it's already positive. The technical analysis system and AI may not be able to improve much on something that's already optimized, but we will know a little bit better as that gets developed. So Jeff, are you also there? Or Jake, do you have any final comments? Or
Thank you, Brian. You did great, Brian. Really appreciate it. I wish my voice was better. I would talk a lot more right now. But Brian, you did this admirably, and Jeff, of course, you guys did a super job coding this.
Well, thank you. Brian helped a lot.
Yeah, well, I did the original coding, but in a different platform, right? And then you popped it over into this. So, and I definitely appreciate the BS you put on my charts.
Very cool. All right. Well, I can talk a little bit about how to get it if you guys are ready for me to take over.
Go right ahead, Jeff. And thank you again for being a speaker today.
Thanks, guys. Appreciate it. Let me go ahead and make me the presenter here. Just a little bit of a different interface. So I'm getting used to it. Share this. All right. Thanks again, Jake. Thanks, Brian. Much appreciated. Let me go ahead and do this. All right. I like to call this like the Swiss Army knife of actual indicators. And without going into all of the specifics, they did a really good job of kind of talking about them. It does a really good job of giving you the long-term trend, the trend strength, the short-term swing, the short-term swing strength. Gives you the range expansion, whether it's expanding or contracting, gives you your support and resistance level, so for bought over sold conditions, the divergences, whether or not there's short-term breakouts, all that kind of stuff is itemized. And in the initial documentation they sent over to me when we started to code it, they had kind of broke everything out really, really well in terms of how to work it and how everything kind of folds together. And that's kind of why I came up with the idea of kind of making that dashboard view that you can see in the expert commentary, where we kind of say, okay, here's your long-term trend. It's strong. Here's your short-term trend. It's strong or weak. Are we contracting? Are we expanding? In this case, it was a weak contraction. Is a short-term breakout? No. Major support, major resistance levels. Is it overbought, oversold? It wasn't. But all of this stuff is broken down for you. So when you get one of those buys and sells on the charts, it's going to kind of break down exactly where you're at in the trend. In terms of the stop losses and the targets, you can see them all right here. And that's what this expert's really good at, is kind of identifying and isolating where those trends are. So you're going to get entry recommendations, new trend continuations, all that kind of stuff is broken out. So, of course, we do have scanning. Scanning, I think, is one of the best things about Metastock, the ability to go in and find those stocks and identify where those are. And all of that is put together and broken up on the chart for you. You can scan for bullish divergence, bearish divergence, buy signals, sell signals, all that kind of stuff is put together. System testers, we did put some system tests in there that allow you to kind of test it with stop and reverse with re-entry. All that stuff is in there as well. So that you're going to get scanning. You're going to get the ability to test it. You're going to have all of the indicators, the expert advisor, that dashboard view. This has been one of our most popular add-ons that's been included this year. And in addition to that, we want to make sure, of course, that you can run it. As part of that, we're going to give you instant access to a training. Brian and Jake and I all sat down and we did a training. Brian, that was actually intentional, just so you know. But welcome back. One of the things that we do is just so that you don't shut down the room on accident, we eject you. So that's why you got booted off. But you're welcome to stay. just don't close the whole session down when you leave. So you'll get a 2-part training session. You'll get Jake and Brian. They spend a little bit of time discussing how to use JBXC. In the second part, I do a little bit of a boot camp where we kind of walk exactly through how to use everything, how to find the setups on your charts, how to find those opportunities, all that kind of stuff is in there. So this is a relatively inexpensive add-on, and it's been very, very popular. If you purchase it, normally the purchase price is $5.99. We do an introductory offer right now as part of the Summit Special. You can try it for $4.99. That'll include the bootcamp training. Hey, Greg.
Jeff, that URL is not correct. It's traders. What is it? Trader a Summit deal.
Oh, okay. Well, thank you. I don't know.
I'll put it in the chat.
Okay.
Or you could just change it right there on the fly, because you can.
I don't know what you're talking about. Looks right to
Summit
me.
deal with no dash, just Summit deal.
Oh, okay. It looks good to me, though. I don't know. Okay. So let's see. $4.99 here. 30-day money-back guarantee. You can try it out. Make sure that it works well for you. They showed a lot of really good examples in it. Includes the boot camp, the trial to Metastock if you need it. Metastock.com/summit deal. 800-882-3040 or metastock.com/saleschat. So there you go. I think that's what I've got to say about that. You can get all of the offers today at metastock.com/summit deal. If you have questions, if you want to talk to us, you can give us a call. We'd love to talk to you. 800-882-3040 and metastock.com/saleschat. Hello, Sonny. I can see you now.
Hello. I bet you I gave you a little pause there, didn't I?
Yeah. I do want to say that we do have a Summit package that's totally available that includes all of the add-ons today, except for Sunny's. Sunny's we offer on a 7-day trial. You can try them for no risk. She's going to talk about that. If you want to get everything, you should do those too. But if you want to get everything else, it's normally $95.32. At the event today, it's $36.36. 800-882-3040 or metastock.com/saleschat. So as we transition, I've talked about Stocks and Commodities magazine. They've done such a great job of supporting the events that we do. Really appreciate all of the guys over there that we work with. And if you want to get a free issue, if you're watching this on YouTube right now, go to metastock.com/traders-summit. Register for today's event, and you can actually get a free issue. There you go. Sonny Harris's turn. Sonny, good to have you here.
Thank you.
I remember,
as I was interrupting you earlier, I bet I gave you pause by showing up so close to time.
I did. I was ready. We have this is our emergency book.
Cool. Bad jokes.
Yeah. We'll just sit there and talk about them while somebody calls you. So, but no, I'm glad you got here. Sonny, I met you oh my gosh, I think it was the very first trade show I went to. It was in Vegas. They had thousands of people there.
Oh, it's got to be about 30 years ago.
It was probably 25. I think it was I'd been here for a couple years. So I think it was 25. I remember you had a little dog in a little handbag, and I remember you made an impression. But to give you a good introduction, Sonny Harris is quite a renowned mathematician. She's a software programmer for Lockheed Martin. She's read over 600 books on trading, And she's written a number of them as well on how to program systems for easy language and the like. She's done 5 books, and she was working on the last one with the late Samuel Dennis. Did you get that book done?
Oh, yeah. It went
Okay,
out
good.
on August of 2023. We finished it.
Cool. I better update my
So I've written
bio.
8 books now.
Okay, awesome. Sunny, I can see you.
And I've been trading 44 years. Somewhere in here you've got 43. It'll be 45 January 1st.
We'll make sure we update it for the next one. Let me make you the presenter. Yes. And it should have asked you to share your screen. Let me know if it did. It's a little bit.
Oh,
we're playing
let's
with the
see,
new
share.
interface today.
There's the share button.
Yep.
Come on. Share. Screen 1. Screen 3. How's that?
I can see it. You look great. I'm going to get out of the way. It's your turn. Bye.
Thank you. Thank you. Bye. Okay, today we're going to talk about dancing with the markets using my favorite indicator, Sunny Bands, and the new Metastock PHW, which is potential hourly wage. So we've just recently added that to the offerings at Metastock. I'm Sunny Harris, and there's the day's time. My passion in life is in helping beginners. I like to help intermediate traders also, and this talk is for people who have not yet become wildly successful. If you're not making 100% or more per year, you're not yet wildly successful. So this is a good talk for you. People who've not traded much and want to learn, folks who want to improve their trading results. And remember, I love to teach, mentor, and consult. In fact, I was just on a call with a guy in Singapore for the last hour and a half. And that's why I was almost late. So here's my phone number. This is my personal cell phone number. So just give me a call, 760-908-3070. It's the top of every page on moneymentor.com. which is my website, and it's down at the bottom of every page of this presentation. I'd like to talk a little bit about the business of trading this morning. Trading is ultimately a business, or at least it should be. It should be approached as such. Anything less is folly. So if you want to make money trading, you need to realize this is a business and treat it as such. Trading often is a solitary endeavor. It's just you and the computer. There's no employees. You're the manager, the trader, the accountant, and the chief bottle washer. It's important to know that you can and will lose money trading. Only trade with money you can afford to lose. Past performance is not a predictor of future results. All trading involves risk of loss, and individual investments may vary. The examples provided in this talk may not be representative of typical results. When you invest, you can lose some or all, or in the case of futures, more than you put in. So never risk more than you can afford to lose. I've got my full disclosure on my website. You can click on this link. It will be in the whole presentation will be in moneymentor.com /appearances. So I'm what they call a professional trader, and I have to pay professional fees for my data, I'm afraid. I spend about $600 a month for data. I trade future stocks and crypto, but I don't trade options. I found out real quickly that I could lose money with options, so I quit trading them. I'm going to tell you a little bit about myself, but first I'm going to show you how I trade. This is one of the main screens that I use on my live trading room every morning. I conduct a live trading room from 7:30 to 8:30 Pacific time every day. Most days are by subscription, but if you want a free guest pass, you can come on Wednesdays. Just text free guest pass to my cell phone. So what we have here, we have a green band and a blue band, and then a blue band and a green band. That's sunny bands. And in the middle of that, we have a gold and purple double line, and that's my dynamic moving average. I call it my DMA, dynamic moving average. And it is called dynamic because it is exactly that. It is self-adjusting to every tick in the market. So normally with like a moving average, you'll have 9 and 18 for the fast length and slow length. And then you leave them that way. They stay that way all the time. Or you optimize them and come up with a better number that works for the moment, but it doesn't necessarily work into the future. So we have to figure out what input values we're going to use, and I let the math of the DMA do all that for me. It calculates its own links with every tick of the market. Then down below, oh, and you see some yellow dots. See the yellow dots on this chart? These are the PHW dots, potential hourly wage, and they're there to show us the ideal turning points. And this red line is the equity from each of those PHW turning points. So it's a stair step like that. Below this, we have the dynamic moving average histogram. It's purple and green, gold and red. So gold and red are both above the zero line. You can see right across here. And the gold means that the gold line of the DMA is on top. And you can look up here and see gold is on top. Sometimes it's hard to see, like right here when they get really close together. That's where this is helpful to me to see who's on top. So gold line is on top. Histogram is gold. It turns red, telling me that we're losing momentum. That move up is waning. It's losing momentum. Here it turns gold again. We've got another up run, and then red again, giving us a warning that we might be going the other direction. Now, it's an early warning. I mean, you can't go short from back here and have it be successful, but it's a warning nevertheless. When it's purple over here, it tells me that purple's on top. It's below the zero line, and purple is on top. When it turns green, that's the same idea as the red from the gold. Green means we're losing momentum. And it goes up, 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 and gets closer and closer to the zero line, and then it crosses over. The crossover point of the DMA is right where it hits the zero line every time. Okay. Now let's go back to the basics, and then we'll get to more charts. So I'm a professional trader. I already told you that. I've been since 1981, back when I used to pay thousands of dollars a month for my data. It was, in the olden days, it was really expensive. So I started trading in 81. I've traded through the 41% crash of 87, the 38% crash of 2000, 52% crash of 07 to 08, as well as the 38% COVID crash. And the next one. Why do I say that? Well, we will have a next one. We don't know when. No one knows when. But there will be a next one. There always is. I'm kind of expecting we're going to have a correction this month. But we only have 10 days left of this month to see that happen. Okay, here's what I trade. The S&P 500 futures contract on 1 and 5 minute charts, and I also use a 15-minute chart for long term. And they say that the ES is one of the most difficult markets to trade, but if you watch it for 45 years, it becomes second nature. So I've been doing it for, like I said, 44 plus years. It'll be 45 in January. I also have long-term stock holdings. I hold stocks for weeks to months, which to me is really long-term. After you're looking at a 5-minute chart, a daily chart's a long-term chart. So a week or more is long-term. And I also trade crypto and gold. I buy and sell gold. Gold is up today, like 150 points or something. I will be posting a PDF of this talk on my website. As I said, just go to moneymentor.com. It's down here and /appearances. I also do a free podcast called The Sonny Harris Show. It used to be called The Sonny Harris Show with Sam Tennis, but as Jeff said, Sam has predeceased us. Where's the Dow going next is the title of my Substack. So you can go click on this link to Substack. It takes you to tcrgsonny.substack.com. tcrgsonny.substack.com. It's my free prediction of what's going to happen tomorrow based on Sonny bands, the DMA histogram, and technical analysis. So every afternoon about 4 o'clock, I give here's what I think for tomorrow. And I've been pretty accurate too. At the end of this session, I'm going to give you a free week of I call it TAWS, Trade Along with Sonny. So free week of my live trading room, no subscription, no card. It starts every morning at 7:30 a.m. Pacific time, goes to 8:30. I've been named #1 trader twice with 365% one year and 178 the next. And that was rated by Stark Research. And you can see right there at the top in pink. They called me up and said, "How do you feel?" I'm like, "About what?" And they said, "You're #1. I said, "I'm #1 in what?" And they said, "We've been keeping your logs this entire year and you're the #1 trader." I'm like, "Oh, well, that's interesting." So I grew up dirt poor in Appalachia. In fact, my Appalachian cousins were just here last week, so I took the week off. I have 3 degrees in mathematics, 1 in photography, and many, many postgrad classes. I've been programming for 57 years, 44 years trading. I was a systems programmer for Lockheed, doing missiles and space shuttle and spy satellites and things like that. And I founded, with 3 other guys, I founded a little company called ISCO. And we became the world's leader in computer graphics software. And one of the offshoots was Harvard Graphics. You may have heard of that one. I retired when I was 30. I figured there's only so much you can spend. And I gave my money to money managers because I thought that was the smart thing to do. I knew nothing about the stock market. I didn't know how to buy and sell stocks or futures or anything of the sort. I knew a little bit about mutual funds. I knew a lot, actually, about buying corporate bonds, buying and selling corporate bonds. So I gave my money to money managers, and in the first 3 weeks, they lost $75,000. Well, I didn't like that so much. While it wasn't a big percentage of the account, it was nevertheless $75,000. So I figured I can do that poorly on my own, and I set out to learn. So I read and I read and I read. I read everything I could get my hands on. And now I've read 747 trading books. But the first year, and I think this is important, the first year of watching the market, I didn't enter a single trade. I just learned the charts. I've written 8 best-selling books. Sorry about that. Trading 101, 102, Electronic Day Trading 101, Getting Started in Trading, which is the replacement for Trading 101, TradeStation Made Easy. I wrote Going Vegan for Linda Blair. I also wrote Using Easy Language 9.x with Murray Ruggiero. And then Sam and I wrote the definitive guide to TradeStation's easy language and OOEL programming. And that's a tome. I've also written articles for just about everybody in the business, Omega using it, and more. So you can look in these magazines now and then and see an article by me. I write every month for Traders World. So here are the covers of my books: Trading 101, 102, Electronic Day Trading 101, Getting Started in Trading. And this is the one, if you haven't read anything else, I want you to read this one. Skip 101 because it's rewritten in Getting Started in Trading. TradeStation Made Easy, Using Easy Language 9.x with Murray. This is the magazine that I published for 8 years, Trader's Catalog and Resource Guide, and Going Vegan with Linda Blair. And this are the new 1,300-page 2-volume book. Everything you ever wanted to know about programming easy language. I have a little quips and quotes on my website. If you click on quips, you can see every email that's come to me telling me anything, whether it's good or bad, about my work. So read through those. You'll get a good idea. Here's where my Substack is, tcrgsunny.substack.com, and it's called Where Will the Dow Go From Here? So I said every day or so, and I very rarely miss a day, even when I'm on vacation. So I post the latest prediction for tomorrow. And it's free for now. It won't be free forever. But if you get in free, you'll stay free. This shows you I have customers all over the world. So like I just said, I was talking to Singapore earlier today and Israel. So don't be afraid to call me. I'm open all kinds of funny hours. Here's how to make a 6-figure income, and this is crucial. If you say that you want to make $120,000 a year, it feels like you have to make that the first day in order for that to be your goal. It's really hard to look at $120,000 a year and to gauge it day by day so you know how much you need to make every day. So let's take that and divide by 12 months. That gives us $10,000 a month. Now that seems more doable. I mean, you can kind of imagine making 10 grand a month, but that's still hard. It's hard to do and hard to imagine. But if you divide by 20 trading days a month, that's just $500 a day. So it seems doable. You know, $500, yeah, I can make that. And really, it's just 5 trades at $100 each. So now we've got a goal that we can actually achieve. And there's usually between $1,000 and $3,500 per day potential in the S&P if you go both long and short. Just one contract. So before you start trading, determine your goals, just like I just showed you. Do that for yourself. If your goal is $10,000 a year, divide it up so you know how much you need to make every day. And then you'll know, you know, I've made $500 today, I'm going to go home. To divide the goals into attainable daily plans and develop a written plan. You have to know what your strategy is. You have to know every rule of it and follow it all day long. Repeat it. So plan your strategy, test your strategy. If the stats are good, keep going. If the stats are not good, go back to number 1. So you've got to plan that strategy. You've got to have a recipe. You've got to have a recipe that's really well written. If you don't add baking soda, your muffins aren't going to work. So there's only one reason to trade as far as I'm concerned, and that's to make money. If you're doing it for any other reason, I dare say you're not profitable. So if you do it for the excitement, the challenge, you want to make a few extra dollars, or the thrill of the win, you're probably not profitable at the moment. And to live on, the last one, is the worst. That's the most challenging and the hardest one to do, because if you have to bring in grocery money every month, you're going to be challenged. It'll be emotional for you. And when it's emotional, you don't do very well. Let's look at $192 per day for 1 year. Let's see what happens. So if you do that and you add $192 a day to this running equity, then this is the kind of chart you get. And you see we've got, what is that? $50,000 by the end of this run. So 1 year, 50 grand, 192 a day. Now, you keep that chart. You keep that line, that goal line in mind. So this is the line you have on your chart that tells you how much you need to make. And you plot your equity every day. Plot it, plot it, plot it. As long as it stays near that line, you're doing really well. I have that line on my chart. I chart just about everything. If you keep the chart every day by hand, you're going to be more likely to make the goal. I have this spreadsheet on Money Mentor under downloads. So moneymentor.com/downloads. And if you'll become a free member of Money Mentor, you'll get access to that. And one of the things in business you need is to know your audience. So if you're a lone trader, you're not trading for a big bank or a corporate entity or something, then your audience is you. You are the audience and you are the vendor. If you're doing it for others, your audience is them. You have to please them with your performance. If you're a lone trader, you have to please you with your performance. If you're doing it like I do it, daily, live, your audience is you and them. So I have to keep my chart so that I know what my equity is. It has to please me, and it has to please my audience, which is you. There will always be losses, though. Keep that in mind. We all have them. In your projections, be sure you account for them. For instance, if you plan to make $200 a day, then you probably should allow to make $400 a day and lose half of it. That's how you're going to make $200, because you're always going to have losses. And you have expenses, commissions. Now, commissions are not very expensive anymore. They're close to free. But it used to be $50 a side on the S&P, so that's $100 per trade. Now mine is $1.20 per side. That's a big difference. Stocks and ETF commissions these days are zero. Stock options are zero plus 60 cents a contract. Margin requirement at where I go is among the lowest available in the industry. So now let's look at some expenses for a minute. Because remember, this is a business. So you've got to account for commissions and other brokerage expenses. So I've got $1.20 aside, which sounds really great. But I've got, $4.80 data fees that I have to pay to the CME. So it comes out $6 aside. You've got to keep slippage in mind, because you'll be pressing the buy button and the market will keep going without you, and you get slippage, which is a fill that you didn't want to get. You got to account for office space, whether it's in your own home or not. You're going to have to put it on your IRS tax forms. So keep track of that as an expense. Office expenses like paper and phones and other products that are office expenses. Computer expenses. You might need to buy a new computer to run your software. And then there's software expenses. I have QuickBooks and I have full Adobe suite and the full Microsoft suite and a few things like that. So I keep track of my software expenses. And you've got to do taxes. So you need to keep track of all that stuff to do your taxes with. Or, you know what, let me go back. I don't know if it's in the next couple of slides or not, but there's a program that I use called, oh goodness, what is it? Tax something. I'll look it up. It'll be in these slides by the time I post them on my website. But I only use it once a year, and it gathers all my trades, creates the reports, and does my taxes. So it's really cool, because otherwise it's a real headache. All right, so standard retail business is happy with 10% profit per year. But new traders who come to me almost invariably want to make 100% per year. Now I want to tell you, that's a tough one. It's next to impossible, especially for a new trader. I took the book of CTAs. There were 2,000 CTAs in the book. And I took that book and I divided them up so that I could tell what the best of the best were. On average, all 2,000 of them made 0%. That was the average of 2,000 CTAs. I took the top half, found out their return. It was 10%. So the best ones out of the group are making 10% per year. The top half of that, so we've got 25% of the traders now are making 30%. So if you're making 30%, you're doing better than the best of the best. Keep that in mind as a realistic goal. Trade log, that's the name of it. That's the name right there. So if you make lots of trades like I do, it makes sense to get trade log and keep track of your trades and do your taxes. I think I pay $359 a year for it, but it's surely worth it. If you make fewer trades than that, you can keep them in a spreadsheet. That'll do just fine. And the reports from your platform, whether it's TradeStation, MultiCharts, NinjaTrader, or Metastock, should be sufficient. There's my trading log. I keep track of every week, every day, wins and losses, net profit. I've got lots of things in there, but I keep very close track of it. This is my performance chart so far. And last year I made 482% by the end of the year. And that was in my live trading room, 1 hour a day, live trading room. So if you were someone new who came to me and you told me you wanted to learn to trade, I'd try to discourage you. 90% of all new traders wipe out their accounts. So you need to be very serious about it. You need to put in the time to study. You need to put in the time to watch the market and get used to it. It's not a 1 hour a day job. It's an all day long job. Because only 10% of the people succeed. That's why I would discourage you. It's a pretty dangerous profession. So please proceed with caution. So how much is enough? How much should you plan to make? Well, you've got to ask how much is available. If the only thing you can do in whatever stock or futures you're looking at, if it just goes up from the left-hand side of the chart all the way to the right-hand side, it just goes up, then there's only one trade. You need to know what that one trade was. How much could you have made if you had called it right and gotten in at the right place? So that's what I mean by how much is available. If it went up and then down sharply and then back up again, well, we have 1, 2, 3 trades in that case. What's that about? So we need to know how much is available. And let's look at this instrument, the SPY. We're going to look at that on Metastock and see how much is available. Potential hourly wage, or PHW, potential hourly wage, tells me how much is available on any given chart. So I can compare different symbols, ideal versus the PHW. So ideal is the place that it puts the yellow dots on the chart. So that's how much, if we could catch every single turn, that's how much we would make, ideal. But my PHW is 60% of that amount. I figure I can leave 20% on the table going in, 20% on the table coming back out again. So that leaves me 60%. Here's a chart with the yellow dots. You can see they're the perfect turning points. And no, they don't appear in the beginning. They appear after the fact. So you can't trade with them. But what you can do is investigate how much is, or what is true and how much is on this chart. You have to know how much is available, realistically available. And then we have a commentary window that tells us all the statistics about the PHW. So you can put it on the chart, bring up the comment window, and it'll give you the ideal right here, the PHW, the total number of trades possible, and all the other stuff that's important about it. The running total, which is $2,500 on this particular chart. It's, what is it? It's a daily chart. It also gives you the buy and hold amount, that if you just bought at the beginning and held on, how much that is. So buy and hold, and that chart was 1584. The ideal made 749,000. 60% of the ideal, which is the PHW, is 449,000. Still a pretty good income. 25 trades. Date span was 3 years, 23, 24, and 25. And then I have another program, and Jeff hasn't taught me how to do this yet on Metastock. But this shows the yellow column out here to the right. That's the PHW. And all you have to do is double click on this column and it will sort it all by highest to lowest or lowest to highest. And you can go over here then on the left and say what is the symbol for the things that were the highest PHW. Because the highest PHW is more tradable than a really low PHW. I need to have a little water. Thank you. So let's talk about designing your strategy. First thing I did many years ago was to examine the locally available indicators. I picked a chart, which I think probably was the Dow back then. So you pick a chart, and if you don't have PHW, then mark the turning points with a yellow highlighter. And write down the value at each one of those yellow dots, because you're going to be adding and subtracting them in order to get what that ideal profit is. So write down the values of the profit and loss for each one, and then ask what is true. What is true of this chart? You want to test all the possibilities and keep a comprehensive log of your work. So for instance, these are studies that aren't commonly in software. I'm going to just go fast through this. You can tell that there's a lot that has to be tested, etc. So let's look at moving averages for a second. They were in that list. Here are two moving averages on a chart of the SPY. The blue one is the longer term, the red one is the shorter term average. And then we've also got the yellow dots in there. So we want to ask, with respect to the yellow dots, what is true of the indicator? So if this indicator comes pretty close to the yellow dot, then we know it's a good indicator. So here's a yellow dot, here's a yellow dot, here's another yellow dot, and another. But this indicator was just long this whole time, all the way up to here. So if we want to catch all those yellow dots, we're going to have to shorten up the values so we can get more out of the indicator. Let's look at MACD. Same thing, you're asking what is true. So you want to look at the turning points on here, draw a vertical line, and see how close you come to the yellow dots with the MACD. See, it's actually not very close, is it? And then we do the same thing with RSI. You do this for 100 indicators. You put the RSI on the chart, you draw a vertical line where the yellow dot is, and you say what is true of the RSI at that point in time. What is true of the ADX? Well, we've got several lines here. We've got plus and minus DMI in blue and green, and we've got the ADX in red. The ADX tells us whether we're trending or not trending. So if it's moving down, we're not trending. If it's moving up, we are trending. So you might want to use that in conjunction, say, with the MACD. That's the first thing I did 45 years ago. I used MACD and ADX together with ADX as a filter to tell me whether taking the MACD trade was going to work or not. So you can write that little system up. I attribute that one to Jake Bernstein. What is true of sunny bands? We're going to ask the same thing. What is true every time there's a yellow dot? Well, you can see here's the buy signal. There's the yellow dot. Here's the short signal. There's the yellow dot. Here's another buy signal. There's the yellow dot, etc. If you follow the sunny bands rules, you'll see that these things come awfully close. Here's another thing I have is a scan, and Jeff, you'll help me write this one of these days. This is a scan of all the stocks on the market to see. I've got 3 moving averages in the filter. Let's see, it's a 21, a 55, and a 200. And I'm looking for all the stocks that are above all 3. So you see it prints true in the column if this stock, whatever this one is, ACGL. So if that stock is above all 3 moving averages, it writes true. And you can see in the recent market that we had 98 stocks that all qualified. And that would be the group from which I would pick to invest in something. And then use another filter to scan some more to get this narrowed down. Here are the sunny bands rules. This is what I use in my own trading. They are for educational purposes only. I'm not telling you that you should follow them. I'm telling you that this is what I do. I don't give advice. I'm not a financial advisor. I'm not a person who gives recommendations. So here's rules level 1. I entered long when red candles have been moving downward and touch the lower outer band and then turn blue and move back inside if price confirms. And by that I mean if price moves in the direction I'm expecting. So right here we come down, down, down. We turn blue inside the band. And then this bar confirms by going higher than the body of this bar. As soon as that happens, I go long. I enter short just the opposite way. When blue candles have been moving upward, like here, and touch the upper outer band and turn red and move back inside the upper outer band if price confirms. And by that I'm saying if the second bar moves down below the body, not the wicks, but the body of the first red candle, then I go short. So confirms as price moves back through the inner band, it also moves through the body of the preceding candle. Oops, that appears at the wrong place. So here are the rules for level 2. If the DMA midline, that's the black line between the purple and gold, okay, so this is the average of the purple and gold. If it's flat, which means that the angle is visually sideways, you can see this as sideways. So if we have a flat angle, I don't expect price to move very far beyond the midline. So it'll come up, hit the midline, bounce, 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 and go back down. It often acts as a barrier to further movement. Sunny Band's level 3 rules are as follows. If you have a trend, so this is moving up, 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 and it stays above the DMA, then stay with the trade until the DMA is penetrated. So gold's on top this whole way from here up until this point where it penetrates the DMA and we get out, take our profit. So yes, it looks a little bit late, but you know, this would scare you out, this would scare you out, this would scare you out, but at no point does it penetrate the DMA until here. Corollary B is if we're short and purple is on top, so we're in a trend and it's moving down, then we don't get out until it penetrates the DMA. And that's it. That's all there is to that. I'm going to have a short talk today. We're going to have to take some questions. So if you want to get Sunny Bands for free, just put Sunny Bands in the chat window. Jeff will take care of you and give you a 7-day free trial. Right, Jeff? Right, Jeff?
That's correct. As long as I can find the mute button.
I'd like to find the chat button. I see. Okay. All right. So I see it now. So if you put Sunny Bands in the chat window, we'll get in touch with you and give you Sunny Bands for free for 7 days. Or you can text me at 760-908-3070. Bunch of zeros in there. And tell me what platform you use, because we don't just do it for Metastock. We also do it for TradeStation, Multicharts, and NinjaTrader. Give me your name and email, and I'll get you the link. Free Sunny Bands for 7 days. Oh, and with this comes free orientation and instruction. So I give you 2 Zoom calls with me in person. Like I just spent an hour and a half with the guy in Singapore. He needed to install his software and didn't know how to get started. So we installed the software, and then we installed Sunny Bands, and then I showed him how to use it, and it took an hour and a half. So whatever you need in the way of instruction, that's what we do in the first Zoom call. In the second Zoom call, we look at the market live, and I talk you through the trade that I'm interested in. And it's me personally. It's not my assistant. It's not a salesperson. And the second call is in the live market. And let me remind you, there is what we made last year, 482%. You see that dotted line that goes through there? I had that on there in the beginning of the year. Should have made it steeper, huh? But that was my target line, and even through drawdown, you can see we kept pretty close to it. 482% ain't bad. And this is where we are this year, 167, which to me is very disappointing because it's not 482 or better. But it's a good return. So if you want to get in a free live trading room, 2 gas passes before subscribing. And if you put in the chat that you want LTR, live trading room, your gas pass is for a full week, just for attending this seminar. If you get the 1-day gas pass, it's Wednesday mornings for 1 hour. And you can get it also by going to moneymentor.com/guest pass. Be sure to tell me you were in the Metastock presentation so I can give you a free week. And I've got a 99-second live trading room replay. Let me see. Let's look at this for a minute. That's my theme song. One of my clients composed that for me. And with the flat DMA with gold on top, I don't really expect it to go much slower than the DMA. If it goes down and closes under the DMA, then I'm short. Next 1 minute Nasdaq's just going straight up. Look, there's it. It's trying. Let's see what this one's doing. Come on. Order filled. Okay, got it. What I'm watching right now. This is a 5-minute chart. It's going to go above this inner band. And if it does, it seems to me like it's going to move a little further up. Order filled. There we go. Good job. Thank you. That was a perfect exit on that trade, wasn't it? Sure was. Yeah. Yeah, it was. I've taken 2 of them, Sonny. Have you? Did you make any money? Yeah. Excellent. Yeah, absolutely. Okay, that's enough of that. So remember, what I want you to do is ask what is true constantly, over and over and over again. To develop your strategy, you're asking what is true. Write a detailed written plan. Detailed. Include your expenses. Test your plan for efficacy. We want to be sure that at least in historical numbers, it makes money. And if anybody wants to learn about testing, I can teach you that. We want to test by thirds. So we test the middle third first. So if you've got 9 years of data, we test the middle 3 years. And we don't even look at the right-hand side data. So we look at the middle third, then we look at the left third. And if those two work, we've got a plan. And then you test it without making any changes at all. You test it on the last third and see if it still works. Most of the time it won't. I'll let you know that. It's hard to come up with a plan. It really is difficult to think of something nobody else thought of before. So test for efficacy and then stick to your plan. People ask me, what do you believe about the psychology of trading? And I say, I don't believe in it. I believe develop a plan, test the plan, and stick to the plan. If you're sticking to your plan, there's no need to get emotional. If you can't follow it, it's because you haven't tested it enough. People call me and tell me they don't want to test their strategy. They've got a really good strategy, but they don't want to test it. I'm like, if you don't want to test it, it's because you don't want to know the answer. So if you have a winning strategy, now this is something I developed that I use all the time. You can amplify your returns using my Ultimate F spreadsheet. So without a winning strategy, you can't compound your trading. But if you have a winning strategy, you can begin to compound it and make much more money. I'll show you. You can't compound a losing strategy because bigger losses just make for bigger losses. But with a winning sequence of trades, you can judiciously compound for great success. And it's based on the works of Ralph Vance. In his first book, he posited something that he called optimal F, but it has a serious flaw in those equations. You end up losing on your largest loss. So you have your most number of contracts on at that time, and you have a big loss, and you're in real trouble. But with my Ultimate F spreadsheet, you have much less exposure, so you're not hanging out there in the wind at the very end. And it yields larger and larger wins. So here, for instance, is trading one contract. Okay, made $80-some thousand that year. And this is the Ultimate F spreadsheet result. So you see the blue? That's what we were just looking at, is that blue line. And the red line is the Ultimate F compounding. So you go from $80,000 with trading 1111 contract all the time, or 555 or 20. However many you trade the same number on every trade. This is compounding, and you can see instead we make almost $600,000 just by varying the number of contracts. And of course, you can see that there's a big loss here. You've got to take some drawdown. It comes with some heat in it, but it keeps on going. So if you're interested in any of these things at all, give me a call, 760-908-3070. And I answer the call myself. I get hello, and people say, oh, I didn't expect to get you myself. So I don't have any salespeople. I don't have an assistant anymore. And this is my website, moneymentor.com. And you just type /guest pass or /appearances, and you'll get to the places we were talking about. If you do /free trial, you can fill out the form and get the free trial faster. So the thing you need to know is that the products I have, I've programmed them myself, and they were for use in my own trading. I didn't develop them to sell to you. I developed them for myself. And I make them available to you because I like to see people make money. It makes me very happy. And I show you exactly how I use them. I don't keep anything back. I mean, you know, some people will say, you'll say, how do you trade? And they'll say, well, I just use this one indicator. And the truth, when you get down to it, is more like I use that indicator and 3 more that I didn't tell you about. I don't do that. I show you exactly how I use them. And if you want to order something, moneymentor.com/order will get you to that. And I don't have products, so you can just do a / on it yet. You have to do products.html if you want to see all the products and compare them. Like I said, I don't hold anything back. And I train you how to use them for free. So that's part of my claim to fame, is that I do a lot of teaching for free. Let's see, more free stuff. Live trading room every day by subscription, called Trade Along with Sunny. We abbreviate it TAWS. Starts at 7:30 Pacific time for 1 hour. If you text me TAWS, I'll get you the information. Don't forget about that. 760-908-3070 is my cell phone. 1 week free for attendees of this talk. I don't give that away. Normally, I mean, I've got a lot of people asking for a free week, and I don't give it. But for this seminar only, I'm going to do it. If you want to see my free predictions, Substack, tcrgsunny.substack.com. And it's called Where Will the Dow Go From Here? I offer education and consulting, easy language programming services. I'm sorry, I don't yet program Metastock. Mentoring, distance learning, and I have a course called Solving the Puzzle. The indicators I use myself in my own trading every day. Free 7-day trial of Sunny Bands and the associated indicators. So if you get it on Metastock, you get free 7-day trial of Sunny Bands, the dynamic moving average histogram, and PHW all. And the live trading room daily. Oh, look at that. I can't believe I left this one in there. If you order before the end of this coming week, I'll give you 40% off. Just today is what? Monday? Oh my goodness, you've got till Friday to get 40% off. Give me a call. And I have a new 3-month payment plan for those of you who want it but can't quite afford it. You can pay for it over 3 months. If you want a 7-day free trial, that's how to get it. Or text me trial. Tell me your trading platform. Okay, do we have any questions?
we have quite a number of people that want to get Sunny bands. So
Oh,
Paula,
right.
Marius, Tony, Paul, we'll make sure to get in touch with you to help you get set up. If you are watching on YouTube, what we're going to do, because I don't have the access to your emails, so
Yeah, I need
what I'm going to
emails.
have, yeah, or who you are or anything unless you registered. So if you're watching on YouTube, just chat with us at metastock.com/sales chat. And Greg will put that in the chat real quick, if you don't mind, Greg. Sunny, do you have any experience with this working with this like on? We have very popular markets in Hong Kong, Singapore, NSE in India. Does this work on all instruments? Is this something that can be used?
Absolutely. It works
Okay.
on any symbol, any time frame.
Would that include like cryptos?
Yeah,
Okay. Well, those are
anything.
symbols, right? Okay.
Right. Works on any symbol, any time frame.
Cool. And
I've had people use it on tick charts. I've had people use it on Renko charts. I've had people use Forex, crypto, foreign markets. I mean, I have lots of people all over the world, and they're not all trading our markets. They're often trading their own markets.
Right on. And what I love is the fact that you just let people try it for free. Sit down with them for a couple sessions, make sure that it works for them, and people really like them. So
answer any questions.
Yep.
And
cool.
I get people who are really interested, and they say, "Oh my gosh, your stuff's expensive." Well, yes, it is. You're going to be able to make that money back in next to no time. So that's the hope, that you pay for it out of your winnings.
If you, what's more important, the investment or the return on it?
I'm sorry, say that again.
I said, what's more important, the investment or the return on it?
Right. Exactly.
All right. Very cool. I'm going to take over now. I just want to kind of just talk a little bit about some of the things that are special with the Metastock version. And we'll put up the sales chat and stuff like that. But Sunny, great job with this. Appreciate it.
Thank you. One of the things I want to say about the difference between Metastock and everything else is that it's cheaper at Metastock than anywhere else.
That's true too. Yeah, that's true. Thank you for that. We appreciate it.
All right. Thank you.
Thank you, Sunny. All right. Let me go ahead and do this. And let me make me the presenter real quick. And we'll share the screen. Share. All right. Greg thinks it's funny that I'm going to click this button and click, but just make sure I don't miss anything. So in any case, you can see Sunny bands on the screen in the Metastock implementation. It does include the congestion, the slope indicators. It includes the DMA histogram. And the reason it's a bit cheaper is we've bundled so much of it in the same purchase. So you get a bit of a purchase bundle discount. The Sunny's been able to kind of give it to you. So things I love about the dynamic move, the DMAs, as you can see them here, as part of the Sunny bands, they're unique. They calculate dynamically. They're designed to dance seamlessly with the market. And I love how they say that. In addition to that, they have the price. They give you the idea of when to go long and when to go short. It comes, as Sunny mentioned, with the DMA histogram. You can see that here. The slope calculation is also included. So a lot of the stuff that is kind of on these onesies or twosies is included. So the Sunny Band toolkits includes your histogram, your DMA, the slope, the Sunny Bands. It includes the ability to scan, the templates, the explorations. I've already talked about how I love to scan. I ran a scan already. Bought a couple stocks as a result of it. But all of that's available, and you can find stuff that has entry and trade setups as part of this. You can get the buy and sell alerts. You can find the areas of congestion, the trend ribbon. Of course, it has the expert advisor, the commentary, all that kind of stuff is in there. And then we also just added potential hourly wage, which just allows you to find your most tradable stocks, benchmark your system against potential profit, know when to buy and hold, when to sell. And it also has its own scans, its own system tests, its own ranking, etc. I did. That's funny. I think Greg might have sent me. You might have sent me a private message, but I can't see it because I'm sharing my screen. So that's kind of interesting. We did
Oh,
record.
excuse me, Jeff. I was just letting Jeff Tompkins, who logged in, know that you'd be passing off to him momentarily.
Okay. All right. Thank you. It includes a boot camp session. And the thing I love about this is you do get to try it for free. You don't have to you don't have to pay any money up front. It is to buy the indicators and that kind of stuff. It's $4,317 for the Sunny bands, but you can try it for free. And as part of that, Sunny's going to sit down with you and do 2 live sessions. She's going to help you make sure everything's installed, kind of show you how everything works, and then she'll do a live market session as well. So everybody that puts Sunny bands in the chat box, I'm going to basically hand out your information, and we'll get in touch with you. We'll help you get all that set up. You still can, if you're in GoToWebinar, put Sunny bands in the chat, and I will get in touch with you. Well, not me personally, but I'll have one of our sales guys get in touch with you. They'll get it added to your Metastock account. If you don't have Metastock, we'll throw that in as well for free as part of the trial. If it's something that you want to keep, we'll go ahead and help you with that as well. But as part of that 7-day trial, you won't pay anything. You'll also be able to evaluate it, see how it works, sit down with Sunny twice, see how that works. So either put Sunny bands in the chat, or if you're in YouTube, or you'd rather just get in touch with us, 800-882-3040 or metastock.com/saleschat. So a big thanks to Sunny, the Sunny bands toolkit, all that kind of stuff. I do want to also say this is Metastock. You can't get the 7-day trial at metastock.com/summit deal. However, you can get a 3rd extended trial to Metastock, where if you buy a month, we'll give you the 2nd and 3rd month for free. Metastock has been rated the best software in its price category for 32 years in a row. And we'd be happy to answer any questions you have about it. I'd recommend you use it. I use it every day. Well, not every day, but every day I'm trading, I use it. Metastock.com/summit deal. Metastock.com/saleschat. You can call us 800-882-3040. As we move on to our next guest, I do want to kind of talk about our one of our sponsors, the Traders Forum. It's a live market community with live market chat with other traders. You can share ideas, talk about stocks you're interested in, all that kind of stuff. You can learn about the markets. We do really cool interviews. We'll bring in experts. We'll talk to them about how they trade. We do classes about different indicators and different techniques. It's a community of traders designed to help other traders. It's got tons of stuff up there. All of that is free if you just go to thetradersforum.com and you can join for free. I noticed we've had a few people join today. Welcome to the forum. If you need anything, as soon as you join, you're going to get an email from me or a message from me. Just let me know if you ever need anything. I'm happy that you're there. We'll be chatting with you. We'll be doing sessions with you. Thetradersforum.com. So our next, it seems like I've been talking for a few hours now. Our next guest is a good friend of mine, Jeff Tompkins. Jeff Tompkins has been working with us since about 2018. When we started working with him, he taught a lot of people how to trade. Website that he was very, very popular on was called Udemy.com, and had a ton of students that were up there. At that point, we had coded his methodologies to work for Metastock. And in the time that I've known him, he's gone on to be a hedge fund trader. He does a really, really good job with us. The things I like about Jeff is his name. Very cool name. In addition to that, though, he really has a good way of talking about what he's trying to talk about in a very clear and concise manner, which makes it easy to understand where he's coming from. So, Jeff Tompkins, let's go ahead and get you started, man.
Hey there, can you hear me?
Yep. Welcome to the room today.
Thanks for having me. Yeah, everything's different. I guess I got a GoToWebinar update. And
yeah. Yeah, the
so
new interface, they tried to zoom it.
Oh, yeah, it does look more like Zoom. You're right. I didn't.
But they released it about 18 months ago, and we decided finally to adopt the new version. So,
oh, okay. All right. I was wondering, because I've done other sessions on GoToWebinar. It doesn't look like this. So it threw me off, and I wasn't sure if my speakers weren't working, so I had to reconfigure those, but glad my mic's working at least. So.
Yeah, I can hear you. I can see your screen, and it's a little bit different, but I don't think you'll have any problems. I'm here if you need me, though.
Okay, great. And just to be sure, I have an hour. Is that right?
For sure, yeah.
Okay, all right.
I'll get out of the way. It's your turn. Go.
Okay. Well, thanks again for having me. Yeah, all right, let's get started. Yeah, so we're going to be discussing price action pivots and how to forecast trend direction. This can be applied to any asset class. So equities, ETFs, futures, forex, even crypto, any time frame, all those good things. And so let's go ahead and dive in. We'll cover a quick disclaimer before we get started. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. We may go over some various results on our session today, but just know that anything that I do share due to the time-critical nature of trading, brokerage fees, activity of other traders, don't guarantee that anyone will mirror that performance. All right, so by the end of our session, you're going to discover how to use price action pivots to spot turning points in the market. This valuable information can be used to forecast market trends before they occur. So we're going to throw all the lagging stuff out the window. Most of us know that the vast majority of indicators lag, and they can still be useful, but you just have to realize that you're getting information based on past price, and that information is going to lag, right? So that can create challenges when you're making trading and investment decisions in the live markets, right? So we're going to throw that out the window. Whether you're just getting started or you're a seasoned veteran, this is must-have information for today's markets. All right, so I'll just give you a brief background on myself, and then we'll dive in. I'm, again, Jeff Tompkins, have over 2 decades of experience trading the stock options and futures markets. Received my professional training as an intern at the trade desk back at Morgan Stanley in the early 2000s. And about 10 years ago, founded Altos Trading, where I'm the chief investment strategist. We've rapidly grown over 60,000 members in over 100 countries across the globe. As Jeff mentioned, I'm also a hedge fund manager, so I manage money for my clients at Altos Capital. And in fact, the price action pivots are one of the core methodologies that I incorporate into my hedge fund. And I'm also the developer of the price action pivot indicator. So we're going to be looking at that on our session today as well. So let's talk about a few things that we need to know when we make a trading decision. And this might seem very basic and high level, and it is, but they're critical things to know, right? When we're placing directional trades, we need to know when to buy, when to sell, but probably more importantly, when to stay out of the market. Okay, that's why we're trading, right? If you're a buy and hold investor, then pivots aren't going to be all that relevant, right? They might help you determine when to manage a position, add to it, take profits off the table, hedge, all those things. But for the most part, right, we're going to be using this for active trading decisions. And the large reason that we trade is we don't want to have full market exposure. We want to only be in the market when conditions are favorable and be out, in other words, be in cash when it doesn't make sense to be involved, right? So those are the critical questions we need to know. So we're going to look at how and why periodicity highs and lows provide crucial trend and reversal forecasts. Okay, we're going to look at how to identify when markets are likely to reverse trend. Okay, this can completely turn your trading around, because if you get into a directional trade, it's going in your favor in the direction you initially anticipated. All these questions start to pop into your mind. When do I take profits? Do I get out too early? Do I get out too late? So we need to have a method where we can reliably know when a trend is likely to reverse, and then using key supply and demand points to determine that. Okay, so the price action pivots are actually going to identify shifts in supply and demand, and that's critical, like it is for any market, which most markets are based on supply and demand, right? So we're going to talk about supply and demand a little bit as it relates to the pivots, and then how to set accurate entry, stop, and profit target levels. Okay, so these are all the things we're going to cover. So let's dive a little bit deeper. Now, as market trends prepare to reverse course, shifts in supply and demand within candlesticks can give us clues to future directional movement. Okay, so we're going to be looking at price action. Okay, and we're going to use a 5 candlestick pattern, and I say minimum because there are some circumstances where it might exceed that. Okay, and I'll explain that, to identify when these trend changes are likely to occur. Now, once this pattern is completed, we have a blueprint for forecasting directional trend without using lagging information. Okay, so we're going to know, precisely when the trend is likely to shift direction or reverse. Okay, now Price action pivots only require basic candlestick or OHLC, that's open, high, low, close charts. Okay, so you can start with a very clean chart. You don't need a bunch of indicators on there. And we're going to be tracking changes in candlestick highs for short setups and candlestick lows for long setups over 5 candlestick periods. And I'll explain what I mean by the minimum. So price action pivots can predict market shifts quite reliably. Okay, they're very accurate once you understand how to identify them, and you will very shortly. Okay, and this method can be applied on any retail trading or charting platform. So I'm going to be demonstrating this out of the Metastock platform, and it can pinpoint turning points in a security with astounding accuracy. Again, because we're not going to be using lagging information where that trend shift has already occurred, or it's already developing or developed, and you're jumping in, halfway along the way, right after the trend's already been in place. Okay, so this is going to help us identify these very early on in that process. Now, as I mentioned, this can be applied to any asset class. So whether you're trading, stocks, ETFs, futures, forex, crypto, it doesn't matter, as well as any time frame. So you can use this for intraday trading. If you trade off higher time frames, like I predominantly do, daily, weekly, monthly charts. Okay, so let's get over into the platform, and I'm going to walk you through the steps for identifying a valid price action pivot. So let me get over here, and since there's obviously been an update to the GoToWebinar platform, I'm going to use a different drawing tool because I'm not sure where to find that. Let me know if you can see. Just give me like a yes or a Y in the chat. Let me know if you can see these markings on the chart. I just want to make sure that those are showing up for you guys. Sometimes some of these third-party drawing tools won't show up on.
They are showing up.
It is. Okay, excellent.
Yeah.
All right, good deal. Okay, so let me zoom in here a little bit so we can see clearly. So I just have a daily chart of the SPY pulled up. Again, you can do this on any asset, any time frame. Same rules will apply, but I'm just going to pick out a couple pivots here and walk you through the methodology. Okay, so we'll look at both a bullish and a bearish pivot. So looking for downtrends and uptrends. Let's just start with a bearish pivot. Okay, and so and I'm going to just pick out some of the obvious ones. Once you get this down, you're going to discover there's some very subtle pivots all over the place, and once you train your eye to spot them. And in fact, I'll show you a way where you don't even have to do that in just a minute. But once you understand, it's incredible where these reside all over the chart. But we'll look at some obvious ones just to get the rules down. So let's start up here, okay? And we'll start with a bearish pivot. So the first step is to identify market structure. So what does that mean? Are we in an uptrend or a downtrend? Now, to identify that, an uptrend is simply a series of higher highs and higher lows. So again, we're looking at a daily chart, daily candlesticks. So back in early mid-February, right, we're making a series of higher highs and higher lows. Okay. And so we really only need to be concerned with maybe 3 to 5 candlesticks at a time. Okay. Obviously, trends are dependent on where the starting point is. So like if we went all the way back here, right, we might not call that it looks like mostly an uptrend, but we might not even call that trend. Maybe it's just, sideways consolidation. So we really only focus on the most recent candlesticks. Okay. So that means we're going to look at here, and let me actually zoom in just a little bit more. There we go. Okay. Now, when we identify, so we're looking at market structure, but when we identify an uptrend, we're only going to focus on the candlestick highs. Okay. So if it's a downtrend, it'll be the candlestick lows, but we'll get to that. So we're looking at the candlestick highs. What do we notice here? We're making a series of higher highs. Okay, so we have an uptrend. Now, we put in another higher high. Okay, and this is on February 19th. February 20th rolls around and something changes. So we don't put in a new higher high, we put in a lower high, right? So there's been a shift in market structure. So we want to take note of that. So we're going to notate that that came in as a lower high. At this point in time, this is where we start our candlestick count. So we're going to go retroactively and count candlesticks. Now I mentioned the 5 candlestick pattern. Okay, so the candle where the most recent candle where we put in a higher high, so this was on February 19th, was here. So this becomes our potential pivot candle. Okay, it's not yet a confirmed pivot. I'll explain why. Okay, so we're then going to go back 2 candles prior. So we're going to go back to this day. That's going to be candlestick 1, candlestick 2. Candlestick 3 is our potential pivot candle. Okay, and then this is the day everything changed, February 20th, candlestick 4. Okay, and now we need one more thing to occur to have a confirmed valid bearish pivot. We need one more lower high relative to the potential pivot. It doesn't have to be lower than candle 4. It just needs to be lower than the potential pivot. In this case, it was lower than both the potential pivot and candle 4. But for instance, the high here could have been above candlestick 4. As long as it's below the potential pivot, candlestick 3, that qualifies. Okay. All right. So this is candlestick 5, and we now have a confirmed bearish pivot. So in other words, 2 lower highs to the left of the pivot candle. Okay, I'll just mark this as a confirmed pivot. And 2 lower highs to the right. And candlestick number 3 is our bearish pivot. Okay. So we now have a valid shift in supply and demand. Okay. So I'll just box this in. There it is. Okay, so now our expectation is that there's a higher probability of a rotation lower in the asset. Okay. So now the question is, how do we trade this? All right, and there are kind of some different methodologies, but the basic is we don't want to just go ahead and enter short at that point in time once we have a confirmed pivot setup, because occasionally they won't follow through. So it's possible, in this case it did, but it's possible that we then resumed higher, right? And we may look at some examples of where that occurs. So what we want to do is, if we want to take a short position, is we're going to place what's called a sell stop order. Okay, sell stop. Below the low of the lowest low in the 5 candlestick pattern. So that's going to be, in this case, candlestick 5. Now, it may not always be, right? It's possible, for instance, candlestick 1 was the lowest. Let's just say it had a big, long, lower wick or shadow. But the high was still lower, right? This may have been the low in the pattern. So whatever candlestick is the lowest low in the pattern, we use that, and we just go maybe a few ticks below that low. Okay, and I'll make this all much easier for you here in just a little bit. But if you're just eyeballing this, it's kind of more art than science. You just kind of, maybe look at the volatility of the asset. You could use like average true range, kind of get an idea of where you would place your entry. But you want to be below that low. And then you use, again, a sell stop. So what the sell stop does is it tells your broker you only want to enter short if price comes down into that level. Okay, so let's just see what the low here was. 599.47 on February 21st. So maybe we want to put in a sell stop at 599.45, let's just say. Okay, so we would route a sell stop order at 599.45. Now, if the SPY doesn't come down into that price level, right, instead it reverses, it goes back up, then we simply don't get into a trade. So it can help keep us out of the market without the follow through. But if there is follow through, we have a high probability that is going to continue to the downside. And in this case, you can see it obviously did, right? Okay, so that's the entry. Now, the stop placement, there are kind of two methodologies that I use. The basic one is just to place your stop above the pivot candle. Okay, and that's going to be generally a low probability touch point. You're going to have a low probability of being stopped out if there's follow through, okay, into the entry price level. If you want to tighten that up and be maybe a little more aggressive, you can put it above candlestick 5. That's still going to be a relatively low probability touch point, but that's, I guess, more discretionary, up to you. Okay, so you can either go above the pivot candle or above candlestick number 5. That's for your stop. Okay, again, entry is going to be roughly down there. Now for profit target, and I've done a lot of testing on this system. I've use it all the time myself, and I'll kind of walk you through the method I use for defining profit targets. I initially target a 1-to-1, so I just simply take the distance between the entry price level and the stop level, okay, and then I just add that, or in the case of a short trade, you would subtract it, right, from the entry price level, and that's going to, and I'm just, for the sake of time, just eyeballing this, so it's just rough, but that'll be our initial profit target level. Okay. So you have a couple options. You can just take profits on the entire position here, but what I like to do is unwind half of the position at that initial profit target level, and then keep the second half open for a runner. And so I'll typically use like a trailing stop, or maybe set a second profit target, a static price level. And that could be at like a 2-to-1. Okay, so those are kind of the methods I use. But I like to use the trailing stops because obviously some of these can go on to make significant directional moves. This sell-off in February, March, and early April obviously did. Okay, so you can trail your stop there as well. Okay, so that's how we define our stop loss, our entry, and our profit target levels. Now, one other thing I'll point out here that I like to incorporate into this are support and resistance levels. So I'm looking for a bearish pivot like this one we just identified off of an area of resistance. So we can see that we had a resistance zone up here, and back at this point in time, right, S&Ps were putting in new all-time highs. So we have a resistance area. So I like looking for bearish pivots off resistance areas or bullish pivots off support areas. Okay. So there's a pretty obvious resistance area. So that would be a nice setup versus just taking them out of the middle of nowhere, right? Okay. So let's look at a bullish pivot. Okay, and we can pick one here. All right. And before I get to that, let me point out where this can help keep us out of bad trades. So we'll just move forward a little bit here. Okay, so we have a rotation lower in the SPY. Here on, what day was this? February 26th. Okay, we put in so previously we were making a series of lower lows. So remember, we want to step one is identify the market structure. So we previously had a bearish pivot. We're expecting a rotation lower, and we're getting that. So now we're tracking lows, right? So we've got a series of lower lows. And what would we be looking for? We're looking for a shift in supply and demand. So we're looking to see if the SPY puts in a higher low. Well, here it did, right? So on February 26th, we put in a higher low. Now we will want to take note of that because we could be having a trend shift here at this point in time. This is why I use a 5 candlestick pattern. Now, obviously, for this to have been a bullish price action pivot, we would have had to put in another higher low relative So going back to the 26 here, okay, at that point in time, this is our potential pivot. Okay, but it's just a potential pivot because we need to have another higher low. Well, obviously on the next trading session, so this was on the 27th, the downtrend continued. So instead of putting in a higher low relative to the potential pivot, we put in it. So the trend is still intact. So this is why I use I look for those, in the case of a bullish pivot, 2 higher lows to the left. Well, we did have that. And then 2 higher lows to the right. So notice how this would keep me out of what would have been a bad bullish directional trade. So if I thought, okay, we put in a higher high and a higher low, the trend is shifting, we're going to then resume the uptrend. This was just a temporary downside retracement. Then I would have been trapped, right? And this is in fact how a lot of traders do get trapped. Okay, so the downtrend continues. So no pivot. Okay, it kept us out of the market. Remember, that was one of the things I said. The reason we trade is to stay out of the market when conditions are not favorable. So we actually want to continue to hold our short position, right? Or we could exit with profits because it looks like we probably would have hit our initial profit target level there. Okay, so we stay out of that one. Now, what are we doing? We're continuing to make lower lows. Here we have an inside candle. What does that mean? It means the high-low range resides within the high-low range of the prior candle, or in this case, the prior day, right, trading session. With the price action pivot setup, we ignore inside candles. I'll see if I can find an example of one. In fact, I see one back here. This is why I mentioned in some cases it could be more than a 5 candlestick pattern because we ignore inside candles. Okay, but then we continue to go on to make lower lows. Another inside candle. Actually, this one will be an example. Okay, so there's an inside candle. We're going to ignore that. Okay, we make another lower low. Okay, so at this point, nothing's changed. We're maybe still in a short position, or maybe we're flat. We're in cash. Then on March 14th, there's a shift in supply and demand. We make a higher low. Okay, so the bears are starting to lose control. The SPY is starting to catch a bid, but it's only happened for one day. We need another higher low. Well, we get that in the following session on March 17th. Okay, it looks like this was a Friday. So on Monday, we get another higher low. Okay, so we now have a confirmed bullish price action pivot. But, okay, let's go back. Okay, to when this was our potential pivot candle. Okay, that was on this day. So we'd start our candlestick count. But since there was an inside candle, remember the high-low range resides within the high-low range of the prior candle, we ignore this one. So we're not going to count that candle. So this is going to become candlestick number 1, candlestick number 2, potential pivot, candlestick number 4. Remember the pivots are candle 3. And this is candlestick number 5. Okay. So we've ignored the inside candle. Okay. You have to look at these highs, but entry, those look pretty close, right? And then same thing with this one back here. So this inside candle, this was a bullish pivot. It was a valid pivot. Let me actually check the lows to the left even. Those look pretty close. So 585, 89, 85. So that one was lower. Okay, so this one, right, first step market structure is downtrend, lower lows. That looks very close, but this candle is in fact a lower low. Lower low. Okay, we put in a higher low, but inside candle. High-low range resides within the high-low range of the prior candle. So this one came after the potential pivot, so we ignore that. Okay, but then we put in another higher low and another higher low. Okay, so this is our candle 1, candle 2, This is our confirmed pivot, candlestick 4. Oh, sorry about that. Ignore that. That was the inside candle. This is candlestick 4 and candlestick 5. Right. So the high in the pattern is here. Okay. That would be our entry. And here we would use a buy stop. Okay. So we would tell our broker that we want to go long the SPY if price reaches a level above the high of the highest candle in the pattern. In this case, it's candlestick number 1. Well, we had a confirmed bullish pivot, but no follow through. So we simply don't take a trade. And that would have been good, right? It would have kept us out because the downtrend actually remained intact, right? We have some pivots. In fact, this is, really fairly choppy price action. Here we have a confirmed bullish pivot. That looks like an inside candle. This would be candle 1, candle 2, candle 4, candle 5. Buy stop goes up there. No follow through, right? Instead, we make a bearish pivot. And that's what would negate this bullish pivot. So if we routed a buy stop order on this pattern here, we would cancel that order when a conflicting pivot comes in. So like here we get a bearish pivot. So we cancel it. Okay, so you can see it can help keep you out of a lot of bad trades. They're always going to be losing trades. There are going to be ones that don't follow through, but a high percentage of them do. Okay, so that's important. Okay, but you can see these are all over the place. There was an obvious bullish pivot back on the April 9th lows. Okay, and this was a big one, right? So a series of lower lows. Then we put in a higher low. There's our 5th candle. We got the confirmation. These again are pretty close. So this would be candle 1, candle 2, confirmed pivot, candle 4, candle 5. Looks like maybe 5 is the higher high. There's our entry. Okay, so this is a pretty wide one, especially if we were to put our stop below the pivot. We still would have hit our profit target. It would have taken longer. Okay, and we had some additional pivots along the way that we could have traded as well. But here's an example of maybe where you want to, when you're in heavy market volatility, or you have unusual price action like we did back here in April, you may want to tighten up your stops a little bit once the volatility starts to subside, as it did in here. Okay, there's an area of kind of well-defined support here. So maybe I want to tighten up my stop. So again, more discretionary, but you could do that. Okay. But that's the methodology, and you can see how accurate it is at identifying major turning points in the market, major shifts in supply and demand, and trend changes. I'll just kind of give you a couple pro tips here. I typically will avoid large gaps, like I'm just seeing this one here. If you see a lot of gapping, it looks like this would have been our bullish pivot. Okay, it looks like that maybe is an inside candle that we would ignore. Candle 1, candle 2, candle 4. Then we get a huge gap up on candle 5. I probably wouldn't trade this one, okay, because of that big gap there. So if you're seeing large gaps within a pivot pattern, those are best ignored, I think. and there's a lot of gapping down there. Okay, but the nice thing is you'll find that it can help keep you out of bad counter trend trades. Like here's an obvious, well-defined uptrend. Okay, and like most uptrends, you're going to have some temporary downside retracements. Like we're moving up here, and there's some little retracements in there. If I thought here was a valid bearish pivot, and if I thought, okay, this trend is losing steam, it's going to reverse, I want to take a short position, right? Well, I ignore the inside candle there. This is candle 1, candle 2, candle 4, and candle 5. Okay, so lowest low in the pattern is candle 1 in this case. And actually, that looks like an inside candle, so technically it would be that one. Okay, so entry's down there. So again, I just don't take a trade, right? So it kept me out of a bad bearish position, right? Because the uptrend resumed. Okay, but there was a beautiful bearish pivot. Okay, higher highs. Got a gap down there. Not a huge one. I probably trade that. Okay, so this would be candle 4, candle 5, low in the pattern, right? And this one's from back in July 24. Okay, so I enter short there. Within this one, we actually had a valid bullish pivot, right? We're making lower highs, shift in supply and demand. We put on a higher low and another higher low. This is a valid bullish pivot. Okay, but once again, where does our entry go? Above the high in the 5 candlestick pattern up here. Okay, no entry. It kept me out of what would have been a bad trade, and the downtrend resumes. Okay, so these are all over the place. You can obviously see these all over the charts, and on any time frame, right? We could go down to go down to a 30-minute chart. Okay, and all the same rules are going to apply. So doesn't matter what the time frame is. Okay, but if you look, right, there's going to be the lower that you go in time frame, the more opportunities, more trades you're going to find. Okay, but you can see all the beautiful pivot setups here. That would have been a nice short. There was a bullish, that was a big gap, probably wouldn't have traded that, although it probably would have worked out. Another big gap. This would have been a great bearish pivot. Okay, so lower highs. Inside candle, ignore it. Lower low. Okay, this is a valid bearish pivot. This one had a big gap, so probably wouldn't trade that one, but it's valid. Okay, there's another valid bearish pivot. Now this one, okay, this is a great example to look at. Let's look at this one. Okay, because this throws people off sometimes. So here's our valid bearish pivot candle. And what do we notice to the left? Well, we have an uptrend. Okay, we're making a series of higher highs. Interestingly, here we put in a lower high. All right. So again, it kind of looks like we might be making our bearish pivot back here until the next trading, we're on a 30-minute chart. So 30 minutes later, right, we put in a higher high. So this becomes our potential pivot once we get this lower high to the right. This still qualifies, even though, so we start our candlestick count, right? So this would be candle 1, candle 2. Even though candle 2's high was lower than candle 1, that's perfectly okay. Remember, it just needs to be lower than the pivot candle. So that qualifies. So that throws people off sometimes. They think, well, candle 1's high has got to be lower. it just has to be lower than the pivot. Okay, so this is candle 4, and this one's candle 5. Okay, so the low in our pattern is there, and we take the short entry. Okay, once again, we have a brief shift in supply and demand. We're making a series of lower lows. So remember, when the market structure is telling us the trend is down, lower lows, we put in a higher low. So here we would start our candlestick count. Okay, but we need one more higher low to the right. Well, we did in fact get that. Okay, so this is a confirmed bullish pivot, right? But our entry would be up here. Now, eventually we got there, but in the meantime, right, we made a bearish pivot, so that negates it, and we didn't reach the entry. Okay, so as you can see, there's a fair amount. Like, it just takes some time to train your eye to spot these, and then of course, you know, you want to practice trading them. It takes a fair amount of practice and work to kind of get this all down and be proficient at spotting these. Okay, so we're going to make that all a whole lot easier for you today. So we've actually developed an indicator that does all this heavy lifting for you. We've partnered with Metastock, developed a price action pivot indicator that does all the candlestick counting for you. It identifies all the valid pivots, and it actually will print those on your chart, so you know exactly where these pivots are and where your entries are. Okay, so it's going to give you accurate buy and sell signals with zero lag. Okay, so the lag's gone. This is all based on current price action using the proprietary pivot algorithm that I just walked you through. It's going to read the market in real time, give you exact entry, profit target, and stop loss levels, and help you forecast short-term and long-term trends with astounding accuracy. So again, this works with any asset class, equities, futures, forex. I use this also for my optional strategies. So you can do this on any time frame, whether you're day trading, swing trading, position trading, and especially if you're trading directional option strategies. I always use the price action pivot methodology before I ever place a directional option trade. If you trade directional option strategies, you know they're extremely time critical. You've got to be spot on your timing, and so you don't want to be using lagging indicators, right, to buy a call or a put or a vertical call debit spread or put debit spread, whatever you're doing. Okay, the indicator does not repaint. Okay, so what that means is that once you get a confirmed pivot on your chart, it's there. You can go back and look at all the past pivots on your chart and know with confidence that you could have actually placed a trade there and it would have worked out the way that you're seeing on the chart. Unfortunately, there's indicators out there that repaint and they look much better in hindsight than they do when you go to use them in the live market. Okay, it has the built-in protection to avoid whipsaws. Just the fundamental basis of this methodology, as I pointed out in some of those chart examples, helps keep us out of choppy market conditions, out of whipsaw conditions. Okay, we only get in when there's a confirmed pivot, and then there's follow through into the either buy stop level for a long trade or sell stop level for a short trade. So it can help us capture a lot of the trend. It helps us get into it early before it's really developed, and then we're jumping in too late, and then it reverses on us. It's designed to limit our losses, let our profits run. It can be used with any other indicator system for added confirmation. So I often will use this indicator as a standalone, but I'll also combine it with other indicators as well, okay, and help ultimately remove the guesswork from my trading decisions. Okay, so I'll show you what this looks like on the Metastock platform. We'll just hop back over here, and I have now a chart of the SPY with the price action pivot indicator plotted. And you can see how easy this makes my life, right? I simply need to reference the arrows, and I know when there's a confirmed bullish or bearish pivot and when there's an entry. So I'll just kind of quickly walk you through the methodology. Okay, so we can just go back to this February bearish pivot we looked at, right? So we see a diagonal down, red down arrow. Okay, that means that we've now got a confirmed bearish price action pivot. Okay, so we have a slanted or diagonal arrow. That's an indication that we have a confirmed pivot pattern. Okay, we then have a straight down arrow. Okay, that indicates that the asset reached our suggested entry price. Okay, so we have a live trade. Okay, and then we have our profit targets and stop losses. So what I'm going to show you next is really cool. So if you go up under view and click expert commentary, okay, it's going to bring up a commentary window that is going to give you all the exact prices. Okay, your entry, your stop, and your profit target. So like if we go back to February 21st, okay, the commentary is going to tell us that if we look at short trade status, and we actually already had an open bullish pivot that we would have been making some money on. Okay, but now the supply demand curve is shifted. We've now got a short pivot, so there's a new pivot high. Okay, this pivot is the setup signal for a new potential short position. The target entry price for the new short position is, let me clear this out, 598. We'll just round up to 22. So this is where we'd want to place our sell stop order. Okay, if we want to take a short position. Or, if I'm doing a directional options trade, I'll use that as my conditional price, my contingent price. So like, if I wanted to buy a put, I'll tell my broker I'll buy a put if the SPY trades down to 598.22. Okay, so the algorithm gives us our entry price. It tells us ahead of time what our projected profit target is. So we want to take profits if the SPY rotates down into 584.45. Okay, it also tells us to ignore the setup if price reaches that level, and that's going to be our stop level. Or a long pivot. So if a bullish pivot comes along before we get an entry, then it negates the short setup. We ignore that and then we focus on the most recent pivot. Okay, so again, it keeps us out of the market and we wait for the next pivot. So I really love this commentary because it just spells everything out. You see a bullish or a bearish pivot arrow, on your chart, and you go over to that day. I just clicked on March 27th, and it's just going to immediately tell me everything I need to know. Where do I get in? Where do I get out with my profits? And where do I place my stop loss? Okay, that's all in the expert commentary. Okay, so the symbology is rather simple, right? And so it's just the opposite for a bullish pivot, right? A diagonal green up arrow is going to be our long setup. So again, when you see the diagonal arrows, that doesn't mean that you're in a position. That's just the setup, okay? So, and you can see this uptrend, right? There was a bunch of them, a bunch of opportunities to get into this trend. And then it's the vertical up arrow that is your triggered entry. So that shows you that we reached the suggested entry price. It looks like we actually just had one today. So we have a long entry on the SPY today. This pivot was established back here. Okay. Now you're going to notice something else up at the top above the chart called PAP, price action pivot trade status. So this is really cool. What this is it just helps you quickly visualize whether we're in a bullish or bearish pivot conditions. So it's just a nice way to see, okay, if we look at this point in time from back in October of last year, right, we know we're in bearish pivot conditions. Okay, and occasionally you'll see some overlap, right? If let's say we're in a downtrend and there's a brief upside retracement, we might get a bullish pivot. Okay, so you may see a little overlap, but it helps you quickly visualize whether we're in bullish or bearish conditions. Okay, just by referencing the trade status up here up top. Okay, so this is what that looks like on your chart. And again, all you have to do is you toggle to another time frame, and I've got a bunch of stuff running on my computers right now, so my connection's probably bogged down a little bit, so it's just a little delayed. Sorry about that. But yeah, all you need to do is just toggle your time frame, and the indicator will just still show up and give you all of your valid pivots. We actually had one. Looks like from late last week on the 30-minute time frame, bullish pivot. Okay, and we hit the profit target on that one in today's session. Okay, you can see the little exit there. That indicates that pivot reached its profit target level. Okay, so that's what the indicator looks like on the chart. And again, it does all the heavy lifting for you. So you don't have to worry about the candlestick counts, all of that good stuff. Now, the other cool thing is that it also comes with a scanner. Okay, so in the Metastock platform, you can toggle over to the Power Console and go to the Explore tab, and you can actually scan for bullish and bearish pivots. I won't run a scan right now, but just know that you can scan. And what I like to do is I set up my own, like I have a Just Future list, Just Weekly Options list. So I set up my own custom list. You can do that, or you can just scan an entire asset class, an industry, a sector, or an entire index, up to you. But it will give you a list of all the, and you can scan by both bullish and bearish. So maybe you don't, short stocks, for instance. You only want to, buy stocks or go long, right? So you just run a scan for the bullish pivots, okay? And it will immediately print you a list of all the current bullish pivots. And then you can select from that list what you'd like to trade, okay? So it comes with the scanner as well. Okay, so that's what it looks like on your chart. And now I'm going to tell you how you can get it. Okay, you can literally get set up with this today, start using it to make more informed, accurate trading decisions. We put together a really cool package for the summit today. I'll walk you through everything that's in the package and then let you know how you can get this. So you get a year of the price action pivot premium signals. Okay, you get interactive live strategy sessions on a weekly basis with me. We hold those Tuesday evenings at 7 p.m. Eastern time. Okay, so once you get the price action pivot indicator for yourself on Metastock, you'll be invited to join us on those weekly sessions. And each week we do different strategy sessions. We cover different strategies. A lot of times we'll do like different option strategies, but each week it's something new. So kind of like we did today with the price action pivot methodology, we do that on a weekly basis with all of our other powerful indicators, tools, strategies, methodologies, so on and so forth. Okay, so you're going to get weekly live sessions and coaching from me on those sessions. Okay, so I host those. I'm there every week with you, there to answer questions. My personal coaching typically starts at $19.97 and goes up from there, but you're getting that access to me on a weekly basis, and that is part of your package. You're also going to get exclusive invitation-only Facebook group access to our private Facebook group of over 900 members, many of whom use the price action pivot indicator. You're going to also get our professional trading series online course, which is over 10 hours of our top equities, ETF, option strategies. You can watch that at your leisure. Okay, and ultimately learn to trade equities, futures, forex, and options with consistency. Okay, we also have a couple of really cool bonuses that are thrown into this package as well. Bonus number one is our price action pivot 2-day workshop. So we have about an hour together today, and so I had to run through everything rather quickly. We got to look at some examples, but in our 2-day workshop, you're going to get full in-depth training on the price action pivot methodology. So it goes a whole lot deeper. There's different methodologies for setting stop, profit target levels, scaling into and out of position, so on and so forth. This is all covered in the 2-day workshop. It's online. You can watch it at your leisure. And then in day 2, I actually use the strategy to trade real money in my personal trading account. And you can watch me place trades using the price action pivot strategy. Okay. Bonus number 2 is my latest ebook, How to Create Risk-Free Trades. This is a money management ebook that goes into different tactics to mitigate risk and in some cases even eliminate it from some of your positions. So that's I think a great supplement to the package here, and so we decided to throw that in as a special bonus valued at $97. So the total retail value on this package is over $5,000 if you went and bought all this from us individually. Okay, we're taking 80% off this package today, so you can literally get this for $9.97, 80% discount. We do limit that discounted price to 25 seats. So once those are scooped up, it goes back up to the full retail price. Okay, so if you want to claim one of those, you can go to metastock.com/PAP for price action pivot. That's the link to claim the entire package for an 80% discount. You'll get set up with the indicator today, the scanner, you'll get everything that you need to use this on the Metastock platform. We also have a guarantee. So if you're not convinced this is the right indicator for you, we offer a full 30-day money-back guarantee. Okay, so no questions asked. You just decide that it's not going to fit into your trading style, then that's fine. Just let us know. Okay, we have a 30-day money-back guarantee. So you're also going to get set up in our members area with Altos. So we'll get you your login credentials. That's where you're going to find your bonuses. So you'll be able to access the Price Action Pivot 2-day workshop, okay, and your ebook, okay. And then you'll also get the Professional Trading Series online course. That's all going to be found in your members area on our website, altostrading.com. All right. So we get thousands of testimonials from our members who use our indicators. I won't, in the interest of time, because I want to save a little bit of time for questions, go through all these. But we get many testimonials and success stories from our members who use these indicators, okay? I'm also going to give you our contact information. So you can email us anytime at support@altostrading.com. And I know Metastock has a fantastic support team as well. So I know they're available to help you. So you kind of have two avenues, two different teams, standing by your side, there to help if you have any questions, need any assistance. But we're here to get you all set up and running very quickly. Okay, that's our job. And then once you're up and running, we're not just going to abandon you, right? We're here to support you along the way as well, which is why you're going to be invited to our weekly sessions every Tuesday. And if for any reason you're not able to attend, we do record those. When you get access to the members area, you're going to find all the prior weekly sessions as well. So not only are you going to get these moving forward, you're going to get all the prior recordings. So you're going to have, it's kind of like the Netflix of trading. You're going to have all the prior weekly sessions, and you can go back and learn all the strategies that we've already revealed on those weekly sessions. So you're getting a ton of stuff here at an incredible discount at 80% off the retail. Okay, so I'll go ahead and pause there and see if maybe Jeff, if you want to relay any questions that may have come through. So I haven't been monitoring the chat, or maybe if you have any that you think would be important for me to let the audience know about.
Yeah, we did have a question that was asked in YouTube, and then you answered it. So
that tends to happen. If I just keep talking long enough, I end up answering someone's question. But
yeah, I usually end up causing more. That's why you're better.
Well, I do that sometimes too, but
we do have a question in terms of, and this comes up quite a bit due to the international audience we have. But what markets will this work well on? Does it work good on international markets? India is a pretty good market for us. Australia is really good.
Yeah. That's a common question that we get, and my answer is it really doesn't matter. That can be very relevant with certain indicators. There are many indicators out there that are very market specific. And so they might work great on US stocks, but when you go and apply them to something else, they fail miserably. The beauty of the price action pivot methodology and the indicator is it's really asset agnostic. It doesn't matter because it's purely based on price action. So I use it on, as I mentioned, virtually every asset class. And I don't notice any difference in terms of results. So whether I'm using it, even international markets. Now, I don't necessarily trade like, let's say Indian stocks, but I do trade a lot of ETFs that track international markets. So they typically behave similarly. But it shouldn't make any difference what market it is, what asset class, what industry sector or time frame.
Very good. Thank you for the answer there. Another question that we have is, do you have a preferred time frame? Does this work best on daily, intraday? Do you have a recommended time frame, or does it matter?
Yeah, really same thing. It's going to work well. What I tell people is that just expect, and this is going to be typical with anything, right? The lower the time frame, the more pivots you're going to get. They're going to occur more frequently and in a shorter time window. So it's going to be highly dependent on, the volatility of the asset, so on and so forth. But again, that's the beauty of this, because so many indicators out there are very specific to time frame. They might work well on a 5-minute chart and be disastrous on a daily chart. But with just the fundamental nature of this methodology, again, it's time frame agnostic. It doesn't matter. It could be a tick chart, it could be a 1-minute chart, it could be a daily chart. It's the only difference is the number of pivots you're going to get and how many potential trade opportunities, how often you're going to be trading. As far as the indicator itself and the methodology, it really won't make a difference. So yeah, good question, but yeah, it's kind of the same answer as what does it work? What asset does it work best on?
That's the questions. That's all of the questions.
One other thing I'll point out too that I forgot to mention is since this is a very steep discount, right? It's the package retails over $5,000. That 80% discount, you are grandfathered into that. So we don't have any contracts. You're not locked in. You can use it as long as you desire. But we don't ever raise the price on you. So you're locked in at that 80% discounted price for as long as you want it. All right.
Very
well,
good.
Thanks so much. Pleasure to be here as always. And thanks for having me. Thanks to the audience for taking time out of your day and learning. I hope this was a valuable addition to your trading arsenal. And Jeff, I'll pass it back to you.
Right. Thank you very much, Jeff. Good having you.
Thanks so much. See you soon.
All right. We'll talk to you soon. Okay, let me do this. Okay. I do also want to point out, well, I'm kind of changing this over, and bear with me. It's hard for me to do two things at the same time. We will include, as part of that, a trial to Metastock. So if you haven't tried the Metastock program yet, you don't know probably why it's been rated #1 in its price category for 32 years in a row. So if you haven't tried Metastock before, we will do that as part of this. So $9.97 is going to give you the price that is going to give you everything that Jeff talked about, the 12 months of the training, the personal coaching, the boot camp training, that's live, ready to go, face group, all of the bonuses. And it's just $9.97. So you can do that by giving us a call, 800-882-3040. You can go to metastock.com/saleschat, or you're going to go to metastock.com/PAP. Thanks again, Jeff. Good having you. Good to have you part of here. I do want to say that all of the add-ons we're talking about today, we've gone through a number of them, are included in a really special bonus, where if you normally purchase them all separately at their normal retail price, it'd be about $9,532. You get them for $3,636, and that would include the price action pivots that Jeff just talked about, the master trader method that Greg's going to talk about in a minute, all of the indicators and systems that Daniel Sinnig talked about in his presentation, Jake Bernstein's Jake BXC. So all of the stuff that's been talked about today, all of that has a money-back guarantee that's 30 days long. We'll also give you 3 months of our LearnMetastock.com membership service. And if you need Metastock, we'll give you a trial to that as well. So that's $36.36 instead of $9,532. So if you want to try all of them, this is a great way to do it. You can't order this online. You have to call in. It's 800-882-3040, or we'll let you chat into it, metastock.com/saleschat. So in any case, as we move on to the next speaker, I want to say thanks again to Stocks and Commodities Magazine. They've been a great sponsor. I've seen quite a few of you join the tradersforum.com today. You can join for free. You can live market chat with us. We do lessons. We invite people in to kind of give talks. We do a ticker talk. It's a great community. I think we're at about, what are we at? It's a growing community. We'd love to have you there. You can join for free at thetradersforum.com. So, and I'm in there every day. We're talking about stocks, that kind of stuff. As I had kind of talked about earlier, any of the specials that you want to get, or maybe you just want to try out Metastock. Metastock by itself, Again, it's been rated #1 in its price category for 32 years in a row. I love scanning. I just finished up the scan, started looking at some ideas, bought a few stocks. You can test trading ideas. It's got a patented forecaster in there that'll help you statistically analyze prices, real-time commentary alerts. All that actually starts at $74.95 per month. I need to update this slide, I just noticed. But it used to be $59, and what it was only end of day for that. We don't have an end of day only product anymore. Even with our DC, you can get in there, you can see what's going on in the markets with a delayed update quote. We also have a full real-time version. If you buy a month, we'll give you the second, and we'll give you the third month for free. So if you have any questions about that, if you want to try it out, give us a call, Metastock 800-882-3040. Yeah, if you want to chat with us, it's metastock.com/saleschat. And all of the offers that we're talking about today, with the exception of the 7-day trial to Sunny Bands, can be had at metastock.com/summitdown. So there we go. Our next presenter is a good friend of mine. I also have known him for a really long time, forever, in fact. I think eternity. Yeah, that's how long I've known Dan Passarelli. Dan I met also at a trade show, Traders Expo, I think in Nevada. And he does a really good job. The way I like to kind of frame what he's going to talk about is, as part of his next presentation, is a momentum resumption system. He's looking for kind of stocks that have kind of started to rally up, have a little bit of a hesitation, then give evidence that the stock's going to go up again. It's a really, really cool idea. Let's go ahead and get you started, Dan. Dan, welcome to the room.
Jeff, what's up?
Not much. Do you like how we've been friends for eternity?
It just feels that way.
Let me go ahead and make you but not in a bad way. Like you could say, I've been married for eternity, and that might have some implications.
Yeah, exactly.
All right, I just turned the presentation over for you, so you should be able to. Oh, that's it. I don't even need to help you that much. You're ready to. Like you've done this before, haven't you?
Once or twice.
All right. Well, I can see you. I can hear you. I can see your slides. That means I'm going to get out of the way. It's your turn. Go.
All right. Hey, friends. How are you today? Super glad to be here right now at this very moment in time. And we've got great stuff to talk about. Before we get started, I need to point out options are not for everyone. Read characteristics and risks of standardized options before trading. Get a copy of that by emailing investorservices@theocc.com. This is my promise to you today. I'm going to share with you how to easily spot high profit momentum trade opportunities using stocks, ETFs, options, futures, Forex, whatever, so that your trading is completely simplified using this time-tested system that we've created for our traders, so that you can go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that you know is possible. At the end of this presentation, I'll share how you can take the next step so that you can start getting immediate results. What do you say? Is that a fair deal? Hey, do me a favor, hit that questions box for me. Is that a fair deal? You like what you're hearing over here? Hit the questions box. Let me know if all that sounds good. That'll let me know that you can hear me too. Let's see here. Yes, 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 yes. We good? Yes, yes, yes. Okay, 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 okay. All right. Now, I see that there are some familiar friends here, and I see that there are some people who maybe are new to me and what I do. This gives you an idea of who I am, what I do, some of the organizations that I've worked with. Wrote 2 of the most popular books on option trading, worked with every major options broker in the US and abroad, as well as much of the options exchanges in the world as well. I get to be on TV a lot, which is kind of fun. I got my start down on the floor of the Chicago Board Options Exchange. I traded there for many years. These pictures actually span 30 years of being involved with the trading floor. Holy cow. I traded some huge stocks like the Ford Motor Company, AT&T, Carnival Cruise Lines, and I traded some of the little ones that nobody's ever heard of. And here is the big secret. The little stocks that nobody's ever heard of, those are the ones where you can make the big money when you know about opportunities that nobody else does. Now I want to jump into a discovery I made. Does anyone know what this formula is right here? Anyone know? Okay, good, because we're not going to talk about it again. We don't need to, and here's why. So I have an extensive background in trading, but the fact is I am no mathematical genius. When I was a kid, you know, I got in trouble sometimes. I did. Seriously. I got good grades. I didn't really have to study that much usually, but this is a story about a time when I should have. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a couple other kids in the class, we would play poker all class long, all hour long. That's all we did, the whole class. And you know what? I made a lot of money in that class. But the problem is with math, it builds. If you miss something this week, you are lost next week and you are hopeless the week after that. So needless to say, I didn't learn a lot of advanced algebra concepts that year. I crammed, I passed, but I didn't learn that much. Now fast forward to my freshman year of college, and I had to take an algebra refresher. Oh my God, it was so embarrassing. I always prided myself on, being reasonably smart. And algebra is not that tough, but I had to take a refresher. Now, one thing you might not know about me is that I was the first Passarelli to graduate college. And I almost wasn't. So here's where the story gets a little interesting. Now, I'm a competitive kind of guy, mind you. So sophomore year of college, my cousin, Michael Passarelli, who was 1 year younger than me, was in my calculus class. Calculus! I was very intimidated by calculus. I was afraid that I would struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin would be a credit or two ahead of me, and maybe, just maybe, he'd end up graduating before me. And there was absolutely no chance that I was going to let that happen. No way. So I put on my A game. I was ready to work as hard as I needed to win. And I'm going to guess there are some of you here that can relate to that as well, right? But there was one other factor that came into play that was a saving grace. And that is that I had a great teacher, one that I could relate to. He made it easy for me to learn, and I did. And I actually ended up acing calculus and had the honor of being the first in my extended family to graduate college. Thank you very much. Now, like I said, I'm no mathematical genius by nature, but I've spent a lot of time in option trading, 30 years, and I do whatever it takes to create great trading systems for myself and for you. So I studied the math of things like the relative strength index to see how they tick. And I realized that there are some hidden keys within these equations that can predict when momentum is likely to continue. And now I'm going to share that hack with you. The concept of RSI is that up strength, it measures up strength versus down strength. And you can use it for a lot of stuff. You can, like, too much up strength can lead to an overbought condition, which can lead to a reversal. And so I identified this hack. Certain patterns can prevent momentum, from burning out and can lead to continuation. And so from that, I created the red knockout. That's a momentum strategy that can lead to outsized profits. It's a simple 4-part chart pattern, very easy to identify. The profit targets are easily set. You can use it with options, stocks, ETFs, indexes, futures, Forex, whatever you want. It works on any chart. Let me start by listing the steps in the red knockout system, and then we'll zoom in and go through some examples. All right? Now this is important. Write this down. Step 1 is the setup candles. That is 3 or more green candles that make up what we call the green run. Step 2 is the red knockout, or the RKO candle itself. That's a red candle with a smaller body than each of the 3 preceding green candles. Step 3, the trigger candle. That's a green candle that takes out the high of the red candle's high on higher volume, ideally. And then finally is the confirmation candle. That's a candle that opens above the high of the RKO, and that signals trade entry. Now, let's break that strategy down step by step, and let's go through how it works. So step 1, you remember what step 1 is? We just covered that. It is the setup candles, also known as the green run. So that is 3 or more consecutive green up day candles. We see that right here. See a red candle. Here's I got the hollow bodied ones in here. I think I have some filled in ones later so you can see how it looks both ways. 1, 2, 3. Very simple, very straightforward. If the pattern continues, we get the red knockout, or the RKO. That is a red candle. It's the only red candle in the whole pattern. And it should have a small body, smaller than the body of each of the 3 preceding green ones. If the pattern continues, then we have the trigger candle. That is a green candle again that takes out the high. By takes out, I mean it trades above the high of the red candle, the RKO. And then if the pattern continues, the step 4, that's the final one, that is the confirmation candle. That is a candle that opens above the high of the RKO and signals trade entry. You get this one? It's 1, 2, 3, go. Now let's go through some examples so that you can see what this looks like in real life. So this is, and these are, I don't want you to think these are like trade ideas, so I'm just using historical examples so that you can see how this looks, so that you can spot this in real life, and now the power is in your hands, all right? There's American Express, AXP. If we have a red knockout setup, what is the first step we look for? Setup candles. The setup candles are 3 or more green update candles in a row. Do you see that anywhere here? Do you see that anywhere here? How about boom, there's the first one, 1, 2, and boom, 3, there is the third one. Now, I say green update candles. Isn't that the same thing? Green and update? No, it's not. Update means today's close, or where the stock is now, is above yesterday's close. But a green candle means the stock is up from the open. I mean, technically, it can be a down day and a green candle. If it closed here yesterday and it opened here and then, went up to here, it's going to be green, but it's going to be down day. So they got to be both green and update. All right, What's step 2? Do you remember what step 2 is? The red knockout candle, or RKO. If the red knockout candle shows up on this chart, it's very easy to identify, see? And it means the setup might be materializing. The RKO is a small-bodied candle, smaller than each of the 3 green setup candles, that could open higher or lower, but the key is that it's down from the open, thus it is red. Step 3 is the trigger candle, shown by that yellow arrow I just popped up there. That one triggers that the trade is indeed setting up and you're getting ready to time your entry. We call this the trigger candle, and it's sort of like when a marksman is all set to fire on the target and gets his finger on the trigger ready to take the shot. We're ready. But we have to wait until finally step 4 is the confirmation candle. That means the trade is confirmed. It's got a green arrow. Green means go, fire away. Okay? Now let's slow this down a bit. Excuse me, one second. Excuse me. Let's slow this down a bit. Let's go over the roles of each of the 4 components of this setup. First, there are the setup candles that make up the green run. That's what sets up a mini trend. A green candle means the closing price is higher than when it opened, right? So the whole point of this is that it's a mini trend. Like, it's not some fantastic, incredible thing to see 3 green update candles in a row. All it means is that this is starting, right? It could reverse. It could burn itself out. That's why we need the rest of the pattern. Because if we get the RKO, that is where we get a little bit of a pullback. Just enough of a pullback to do a couple of things. First, it lets the people who missed the first beginning of this setup, it gives them the chance to get in and participate. Second, because like RSI measures up strength versus down strength, it gives it a little bit of down strength so that it doesn't just have all up strength and burn itself out and retrace. You need that if it's going to keep going higher. But we want to make sure it keeps going higher. So we need to see that trigger candle following it, because that means, oh, okay, game on. The uptrend is continuing, and then it's confirmed that it's continuing. So now it's 1, 2, 3, go. So now let's run through several other examples. This is Erie Indemnity. First of all, is there an RKO setup here anywhere? Do we see something like that anywhere on the chart? Do you see one? Boom, there's the first one. We got 1, 2, 3, 4, 5 right there. 1, 2, 3, 4, 5. That is the green run, the setup candles. And then, yep, we do see it continue to play out. We get a little doji there. Doji means it's a super small body. You can have that, or just regular small body. So we get that just enough of a pullback, give people a chance to get back in and keep the momentum going. There's the trigger candle, and boom, there's the entry. That's our confirmation candle. So we would get in as close to the open as we can on the confirmation candle. Okay? So if we follow our profit target rules, which I'm going to go over in a second, we would take it off there where the line just turned green. We would take it off right there. All right. How about cat? Is there an RKO setup here anywhere? Look closely, look closely. Good job. That one has 1, 2, and 3 setup candles. Again, we can have 3 or more. Next comes our red knockout. Why is it called the red knockout? Because in any trend, there's a pullback. And in this case, the mini trend pulls back just enough to enable traders to get back in. The red candle just gets knocked out of the pattern, and we're looking for that continuation, right? And that's just what we get. Here is the trigger candle. Wait one more day, here's the confirmation candle. We prefer to get in close to the open. And if we do this whole thing, it just we calculate. Oh, I'm gonna show you in just a second how we calculate this. But there, like the exit point is baked right in, and that's why it's so valuable. Because look, how many times have you found this great setup and you don't know where to exit? I mean, the exit, that's like almost the most important part of the trade. So yeah, I'm going to tell you in just a second how that all works. Okay, this is APEI stock. When's the last time you traded APEI stock? Don't lie, you never traded APEI stock, right? But we had this setup in here. We got the green run, boom, 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 1, 2, 3, followed by the red knockout, followed by the trigger. And then, what's the rule for the confirmation candle again? Do you remember? Yeah, it just has to open above the high of the red, which it did. We get in on the open, and we're in good shape, right? 1, 2, 3, go. Now, here's what I like about this one in this example. It's only an $11 stock. Folks who don't trade options, we just buy the shares. Though the options in this actually are liquid enough that if you want to, you can use the leverage of options also, which is great. The RKO indicator works on all time frames. It's very versatile for day traders, swing traders, short-term traders, even long-term investors. Now, when I worked on improving what criteria to use for this whole thing, I spent a lot of time on it. It was a humbling experience. And it made me think of my old boss, Steve Fawcett. So you see 2 people here. The one, of course, is Sir Richard Branson. The other is Steve Fawcett. For those of you who don't know who the late Steve Fawcett was, he was not only a famous trader, but also a famous adventurer. He held many world records, attempted to set one flying around the world in a hot air balloon with Sir Richard Branson, which is why he's in this picture. And I remember one day Steve took all of his traders out to dinner. There were about 45 of us. And after dinner, he asked us a question. He said, "Why do you trade?" Because you know what? Let's be honest. It's actually not about the money or whatever. Seems like it is, but it's not. Think about this. The real reason why do you trade? Because like when I was a floor trader, when I worked for Steve, you would stand there all day long. At the end of the day, your feet hurt, your back hurt. There's people yelling in your ear, getting their spit on you when they yell. It's gross. Why do you trade? Why do you stand there all day and put up with that? What's your real reason? Is it to have more freedom to take time off and go on vacation? Or to secure your retirement? Or to put your kids through college? And that stuck with me. So I'm going to ask you the same question. And if you'd like, hit that questions box and I'll read it. Or just think of it in your head. What is your reason for trading? Why do you do it? What is your reason for trading? Now, Steve Fawcett was a great mentor. Without having him in my life coaching me I could have not become the trader that I am today. But there was one thing that Steve was known for saying. He would say, I am still learning. When I met Steve, he was a gazillionaire, super successful trader. But he was always tweaking his process, always learning, moving forward, always making his trading better for himself and for his traders. And I was thankful for that because I was one of his traders. He kept improving. And so I started the process of improving the exit point here, and this is how it works. Setting these price targets is really easy. Here's how we calculate it. What we're looking for is a repeat of that first part of the green run after the red knockout. So we take the low of the first green setup candle and subtract that from the high of the last green setup candle and get that sum. And then we're going to multiply that sum times what we call a haircut, which is just a percentage. Because as they say, bulls make money, bears make money, pigs get slaughtered, right? Do we like to be greedy as traders? No, we'd like to make as much as possible, but when you're too greedy, sometimes it doesn't work out because you hold off too long and it reverses and everything gets messed up. So we use the haircut. We're expecting, oh, we're getting some echo here, Greg. Thanks. We're expecting the green run to repeat itself, but if it just mostly repeats itself, why not take that, right? So we're going to multiply that by a haircut. We're going to add that to the high of the RKO candle. There's very, very simple risk management. Immediately after buying the stock, what we're going to do is we're going to set a profit-taking order right then and there at the calculated exit price. We're going to put it in GTC. And we're going to maybe set a stop loss. I say a possible stop loss. Why? Because with options, we're not usually going to use a stop loss. If we're trading the stock, yes, always use a stop loss. With options, some of them we can use a stop loss, but if they're not liquid enough, we end up with a lousy price. If we trade a spread, which we will on some of these for the more advanced option traders, we can't use a stop, but sometimes we can. We're going to put in the profit-taking order and the stop OCO. That means one cancels the other. And the idea here is that it's a system. All this is, it's just laid out on the chart, including the exit. When do we put in the exit? Right when we put on the trade. It's so simple, there's nothing to even think about. You can't even mess this up. Now, I want you to leave here today with all the tools you need to be massively successful with this. And I bet you do too, right? Would you like me to share with you what I've discovered makes RKO trades even better? Yeah? So this is what makes them even better. When we see the RKO's pattern crossing through one of the major moving averages, which is the 50-day, the 200-day, and the 21-day moving averages. When the pattern starts following a down move and then we get the green run, it tends to work even better then. In summary, there are a few important takeaways. Momentum trades can yield outsized profits. And this is a time-tested system. So we have, let's review. We have the setup candles. We have the red knockout candle. We have the trigger candle. We have the confirmation candle. And from all that, we can calculate the profit target. I think everybody here knows how to do this by now, and I bet you can spot this on a chart, right? But there is a problem. There are 6,366 stocks to trade. If it takes you, say, 45 seconds to look at a chart and see if there's an RKO on there and spot it, it would take you 80 hours a day to go through all of the opportunities out there. Look at all 6,366 of those stocks. And that's only looking at one time frame, by the way. Trade multiple time frames, you're going to miss opportunities. You don't like missing opportunities, do you? Not if you're a trader, you don't. So how do we avoid missing opportunities? There's got to be a better way. And I bet you know that, otherwise you wouldn't be here right now. So I created the red knockout system, and it is finally here. Over the past 5 years, I've created both a scanner that will easily pop up RKO trades right on your screen, as well as an indicator that displays the pattern right there on your Metastock chart along with the price target. We wanted to make it so simple, it's impossible to mess up. And we did. So you now have a new opportunity to easily scan the market for top momentum trades that you would not be able to find without this scanner. With well over 6,000 stocks out there, it is almost impossible to just happen to come across one of these RKO setups. They're great setups, but you're never going to see one unless you have this simple, easy to use 3-step scanner. That makes it possible because I have made the investment in this already for you. Because I know what it's like to struggle in the market. I've had the pleasure of training thousands of traders, and I wanted to develop a scanner that made it easy to find profitable trades with great potential for my traders and even for myself. For myself, before I created this RKO system, I would come across one of these setups maybe once every 6 months. I would miss tons of opportunities. But finally, I've made the investment in both time and money to develop this simple, easy to use scanner that you can harness in 3 simple steps. So just imagine what your trading would look like if you could sit in front of your charting software and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on the trades that have been identified for you. What would that mean to your trading business? Well, that is exactly what the RKO scanner does for you. These are some examples of the trades, both entries and exits, identified by the scanner and displayed in the RKO indicator. On the left are stock trades, and on the right are options. On September 18th in BBU, a stock trader could have bought the stock at $21.89. 7 days later, sold it at up to $23.93. So that is a 9.3% profit in 7 days. On October 16th, in GLD, a trader could have bought the ETF at $24.15 and sold it at up to $253.06, locking in a 2.4% profit in just 4 days. In the options, in MGM, a trader could have bought the October 37 calls at $1.59, sold them 7 days later at $3.30, locking in 107.5% profit. To make that more tangible, a trader could have bought, say, 5 of these calls, and he or she could have made $855 in profit on just one trade. And that's just hitting the haircut profit target that was set. If the trader held out longer, or maybe took half the profits at the initial profit target and let the rest run, the profit could have been over 170.4%, or $1,355 on that same 5 lot. Start getting the results that you deserve. This is Nick. So our head coach, John, who's a brilliant guy, ex-Goldman guy, John and I shared with Nick here what we were thinking. Nick was the first human ever to see the RKO. And in fact, he was extremely instrumental in helping us. Nick said, using scanners, in particular the RKO daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner and do the checks and decide to take the trade or move on. It only takes a few minutes and helps me find the best trades consistently. I want to invite you to join us and start using the RKO system right away. So first, you're going to get the red knockout scanner. So every day, you'll be able to have a list of all the RKO trades available in the market. This simple scanner searches the universe of over 6,000 stocks for the setup, and it makes it possible to find trades that you would never have access to without it. For you to profit with the RKO system, I need you to know how it works. So I created a video training course that shows you step by step exactly how to install it on your platform, how and why the RKO system works, how to set up the trades, the filters and cross scans to optimize the strategies, and of course, the targets and trade management. So that means that first today, you're going to get the red knockout system that is going to show up. It's the scanner. You're going to see them just pop up on your screen. But as a bonus, you're also going to get the RKO Accelerator video course to get you up and running right away. Now, I can put these tools into your hands and I can tell you how to use them. But I know for me, I learn faster if somebody shows me exactly how to do it. So the best thing I can do for you is give you hands-on training. Every Friday for the next year, for one full year, you are going to attend our online live group coaching class and watch John Komisik set up RKO and other trades right there while you watch. So again, John is formerly with Goldman Sachs, First Options of Chicago, Lind Waldock. He traded for a hedge fund. He is the expert on the red knockout. In fact, he helped me develop it. He is just the kind of person that you want to listen to. But I wanted to make sure that you hit the ground running and get hands-on training to get immediate results. So I also want you to meet Dennis Meisel from East Peoria, Illinois. He said, thanks, this is a great class. This is the class with John that I'm talking about on Fridays. Exactly what I was looking for. The class gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward. Not to mention, to get top picks every day. How would it feel to have top picks selected by John every day? So what that means is first you're going to get the red knockout system scanner. You're going to get the accelerator videos to get you up and running right away. And once a week, you're going to get literally hands-on training on exactly how to do this. So that, so far, is a $5,247 profit. Do you mind if I over-deliver? What I really want is for you to make as much money as possible trading the RKO. And I imagine you do too. So every day, we're going to rank the day's RKO trades, list them out, and give you our top RKO picks so that you can see what we think are the best of the best. This is the RKO watch list, and it is a $1,297 value. Plus, John will also add a bonus trade every day from his daily group coaching class so that you can diversify your trading and get all the top trades of the day by simply clicking one link to access your curated watch list. So what this means is you're going to get the red knockout system scanner. You're going to get the accelerator videos. You're going to get that hands-on training with the weekly group coaching. And we're just going to show you what we think the best trades are on the RKO watch list. Finally, this completes everything you need to make the RKO simple to trade. With the RKO indicator itself, we just put the arrows right on your chart to show you the trigger candle, confirmation candle, even the exit price target shows up on your chart. So all the information is laid out for you. This could not even be easier. So that means you're going to get the red knockout system, just the scanner, click a button, boom, there's the trades. The accelerator videos, the weekly group coaching, the watch list, and it's all going to be right there on your chart, the indicator and everything, even the target price. So this is a $7,541 total value. Now, RKO works on the following platforms: Metastock, Thinkorswim, NinjaTrader, TradeStation, TradingView. I think there's a couple others too. Easy. Now you may have noticed the red knockout trades are all for when the stock is rising. And for that reason, well, they tend to work better in bullish markets. But the market doesn't always go up, right? And not all stocks always go up. In fact, some can have some pretty big bearish moves. So I have created the green knockout to double your chances of success. So today, you're going to get both the red knockout and the green knockout. So you will have all the tools that you need to trade any market, up or down. So what that means, you're going to get the red knockout system, accelerator videos, the weekly group coaching, the watch list, the indicator, and you're going to get all this stuff for the green knockout too. Buy now. You see why this is a steal even at $10,041. If all this did for you was, heck, if all this did for you was just give you the weekly group coaching, wouldn't it be worth it just for that? Because you have made the investment of being here live on this training and for being one of my action takers, you're the elite. You're better than millions of other traders out there. I want you to have the results that you deserve. Get started today for a small one-time easy investment of only $997 by going to metastock.com/RGKO. 1, 2, 3, go. That's metastock.com/RGKO. Red, green, knockout. Go right now. But to get all these bonuses, including the green knockout, to maximize your chance of success in any market condition, you have to be one of the first 25 new members today. And you have to take action right now by going to metastock.com/RGKO. Now, just to recap one more time, when you open your browser and go to metastock.com/RGKO, and when you sign up today, you're going to get access to the Red Knockout scanner. That's going to identify trades with the entry and exit points. Crazy easy. On top of that, when you're one of the first 25, you're going to get all these bonuses in green. You're going to get instant access to the RKO Accelerator course to get you up and running right away. You're going to get access to my weekly group coaching where we go live in the market together, and you're going to see exactly how me and John, how our team use the scanner to generate profits in the market. You'll also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. Further, when you open up your browser and type in right now, metastock.com/RKO, go ahead and do that now, and lock in your RKO traders package, all this, you're also going to get access to the RKO indicator itself. That way, while we're coaching you live in the market each week, giving you access to the watch list, you will also have this powerful indicator 24/7 across multiple markets to take full advantage of this great and easy to use indicator. Also, this is really important. As we run more tests and do more tweaks, as the RKO continues to evolve and we get it performing even better, you are going to get automatic updates for a full year to the scanner and to the RKO indicator. Lastly, when you join us right now, you also get the green knockout. You get all this stuff for the green knockout too. You'll have the confidence of knowing that you can trade any market, up or down. But you have to take action today, right now, and be one of the first 25 members. Now, in addition to going to markettaker.com, if you have questions, do one of two things. One, pop it in the questions box. I will be happy to answer it right here, right now, live for you on this training. Or you can call 800-882-3040. It's 800-882-3040 and talk to the Metastock team. They know all about this. They love it. They can give you all the answers that you need as well if you want to talk to somebody. So either way. Now, while you're thinking of some questions, while you're popping them into the chat box here or calling, these are some frequently asked questions that I get. One is, what if I can't install it properly? Well, we send step-by-step instructions exactly how to use it. There's a PDF we give you. There's also a video version. Anybody can do this. Is it time consuming? No, I know you have a busy schedule. Many traders have a busy schedule. I've designed RKO so you can literally trade this system in about 60 seconds per trade. What if I can't figure it out? You can. You're going to get a video tutorial plus hands-on training live every Friday morning with the weekly group coaching. What time is that weekly group coaching? It's live every Friday from 9 to 10 Central, which is 10 to 11 Eastern. The class is recorded in case it's not a convenient time for you. You never miss anything. Another question I get, sometimes people say, Dan, this is great, but I have a hard time coming up with the $997. Is there a way to finance this? That answer is yes. You can use PayPal as well as PayPal credit. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit, so you can lock in the red knockout today when you check out and just choose PayPal and choose PayPal credit. And you do that the same way. Just go to markettaker.com/RGKO. Click the PayPal button. Get started right now. All right, there's this. All these things you're going to get. We've got a pretty good number of folks who joined us already. We're not up to 25 yet, but go to markettaker.com/RGKO or call 800-882-3040. Or you know what? If you just like to chat online, you can go to metastock.com/sales chat. And the sales team, they know all about this. A lot of them trade it themselves. They'll be able to explain to you anything you need to know, get you all signed up, super easy. Yes, Greg actually just posted that right there in the chat. Now let's see here. I think I see a couple of questions here, right? Do I see a couple of questions? I don't know. Jeff, do we have any questions?
We don't. What you see is Greg has been typing in the chat. Let me check YouTube real quick, though.
Okay, good.
We might have some there. If you have any questions, make sure to ask. We'd be happy to answer them.
Yeah.
Can you use this on futures and crypto?
Yeah. Very good question. Yes. Any chart that you can get, if you have Metastock, I mean, you can get a chart of anything on there. You can get a chart of like, what can you get? What's the craziest thing you can get a chart of on Metastock? I don't know, but you know what? You can use RKO for anything that's chartable, anything. So crypto, futures, whole shebang. And you would use it on like, as far as stocks and options go, you'd use it on the stock chart, but you would trade options to get the leverage of it for those of you who trade options. Easy, super easy.
And that is all the questions we have.
Oh, okay. That's great news. All right. So yeah, just one more time for those of you who missed it, metastock.com/RGKO, or call 800-882-3040. Or, hey, you know what? You don't want to talk on the phone, but you got a question, you can type in the Metastock chat. Just go to metastock.com/sales chat. They'll take great care of you. Okay. As far as that goes, that's it. That's all I got.
Very good. Thank you, Dan. I appreciate you spending some time with us. And I'm going to go ahead and I'll take over, I guess. So thank you very much.
Thanks, Jeff. I appreciate it. Thanks, everyone.
Of course. Anytime. All right, let me go ahead and grab the control right here. Make me the presenter. Share my screen. I'm sure you like the play-by-play too, right? All right. So there's the information on how to get that. Just go to metastock.com/RGKO. If you have questions, if you want to get set up, 800-882-3040 or metastock.com/sales chat. So big thanks for Dan for that. Also, it is part of our big bundle package where you can get that, Greg Capra's Master Trader, all of the Daniel Sinnig add-ons that he talked about. Those were so discounted as well. The JBXC, all of the stuff that we've talked about, with the exception of the Sunny Band stuff that you get on a 7-day trial. But you can do a complete package of everything else, get a 30-day money-back guarantee on it, get a free trial of Metastock as well. Normally it would be $9,532. 3636. 800-882-3040, metastock.com/sales chat. So as we move on, I want to say a big thank you to Stocks and Commodities Magazine for sponsoring the event today. They've done a great job of supporting us over the years. It's a great magazine. You're here. You've been here for like 7-8 hours. You know, it's important to kind of keep learning new things. And what a good way to do that, just by having a magazine and having access to a magazine. So metastock.com/traders-summit. If you haven't registered already, there's a bunch of freebies that you can get there. One of those is a magazine. All right. Our next guest and our final guest, our final presenter, our encore presentation, if you would, Greg Capra. Greg's been a friend of Metastock for a number of years. The thing that I love about Greg is the same methodologies he's been using for decades is what he's going to talk about today. They've been time tested. They've been time proven. They've worked in good markets and bad markets, and he's going to talk quite a bit about them. So Greg, let's go ahead and get you started now.
All right.
Okay,
This new software you got here.
Yeah, it's a little bit of a difference, right? I'm going to make you the presenter. Now, what you'll want to do is click on the share button at the bottom. And other than that, it's pretty much the same thing.
Okay, I'm looking. Oh, I see Windows, entire screens. All right, pick that. And I see it's loading.
Right on. I'll let you know I can see it.
Can't
Do
share
you also
your screen. Unable to share your screen. Why is that?
Unable to share your screen.
You can share my screen?
No, I said, it said you're unable to share your screen?
Yeah.
Well, let's try it again.
All right, window. All right, let's do the window thing. Okay, cool.
Did you also want to share your video? Or your camera?
If you'd like me to, I have to set it up.
It's up to you. There's it's the button that says camera, right between mic and share. But that's up to you.
I have to close a window in the back, otherwise the lighting's terrible.
Yeah. I had a little bit of some sunlight as well earlier. It was pretty funny.
All right. Hopefully there's enough light here. Camera. Oh, hopefully it's on the right one. Okay.
Ta-da! Oh, there you go. I'd say that's the perfect amount of light. All right. I can see you. I can hear you. I can see your screen. Take us home. It's your turn. Go.
All right. Thank you for inviting me again. And I'm going to be talking about swing trading. And my presentation teaches you how to do this yourself. And so over the years, people come to the markets in one of two ways, meaning tell me what to do, tell me how to do it. I prefer telling you how to do it, although I can tell you what to do. Essentially, that's newsletters and chat rooms, that which we have. But in this presentation, I'm going to tell you how to do it yourself. So I think that's good. If you want to do this and run it like a business, you want to know how to do it yourself. Oh, I'll tell you a little bit about myself. As Jeff said, I've been doing this for decades. And markets change all the time. And we're not talking about day trading today, but from a day trading perspective, it can change day to day, of course. From a swing trading perspective, it's a good thing. It doesn't change that often. The markets can be volatile, but if you approach it in the proper way with a method, which I'm going to teach you here, your bias stays relatively the same depending on how long the markets stay within a trend in multiple time frames. So once you've decided that, and you created a bias, what are you going to trade? And of course, when are you going to trade it? So a little bit about myself. I started back in the late 1980s. I didn't know anything. I knew what a stock was, stock market, no idea how to participate in it. I thought there was some magic to it. When I say magic, some secrets. We always think that there's secrets, and we go out on this journey to find the secrets and the Holy Grail. Right? So after some trial and error, learning on my own, I met another individual. You might know, I used to go to a trader group, Alexander Elder. He wrote Trading for a Living, and I met a lot of people there. A lot of people that I thought were gods in the market, specialists and market makers and such. And I learned they didn't know much of anything as far as technical analysis. They knew about order flow and kind of like the kind of stuff that's touted today as to, indicators can determine order flow. But I mean, they had the real order flow stuff, and they had the book. This is where the orders were and the stops and so on. So, no, in 1994, there was, I think it was maybe the beginning of the internet. I was in the right place at the right time. There was bulletin boards and such. Had a newsletter service. Maybe some of you have been around that long. You may have subscribed to it, called the Pristine Day Trader. So I used to do seminars in hotels, and things that has evolved over the years through the internet, and no longer travel around the country or different countries to do seminars. And here we are. Some of you may be in different countries. So, Master Trader used to be a brokerage firm, and eventually the Goliaths in the industry, the Schwabs and the Fidelities and such, that kept you away from trading if you were trading back then, because they told you it was dangerous. Those people, you'll lose all your money. Now, all they do is promote active trading and getting you to open an account there. So couldn't compete, with them. Eventually sold the brokerage firm. I sold all my old recordings and stuff. It was kind of outdated, and reinvented the whole thing. Master Trader continues to educate traders and prop traders. Back in the day, they educated quite a few market makers and specialists. And you can go to my website and you can see different people in the industry and that have been my students. It's a testament to what they've learned, and they may have renamed certain things, but they're doing the same thing they learned when they were students of mine years ago. You can check that out. Here's myself back in 1999, the first Trader Expo. And it was the 3 T's: training, trading, and technology was the theme. And that's the booth behind me where traders flocked to at the time. They still have these Trader Expos and the money shows and such. They have tended to be more like software place where you can see the latest, greatest software and brokerage firms. I don't know how many people are actually teaching anything of value there anymore, but it was a pretty great thing back in the day. You can even search that, get some of the insights that happened back then. It was a great time. So my approach to technical analysis, as you could read there, is that they're pictures. They're pictures of what other people believe. What do they believe? What are their expectations? And as they place trades, all of a sudden that data comes to us and it produces charts in the time frame we choose to look at. And that's one of the choices. What are the time frame you want to look at it in? So we're price pattern traders. The charts tell us what other people are thinking. I look at it in a candlestick format. Why? Well, they look nicer. The pictures communicate to us, I think, in a better format than looking at a bar chart. Meaning instantly, I can look at a bar chart and know what's where's the open and where's the close and so on and so forth. But it just makes it easier to see a visual representation. And so I've coined the term candle language because they speak to us about what other traders are doing on an ongoing basis, which is great. And I'm going to put this together. So, look, one of the things I learned when I first started out was that while patterns can look the same, they don't necessarily produce the same result. And that's one of the things that we're after as price pattern traders. And part of human nature, and human nature being the most difficult part, that's why they say psychology or your psychological point of view is more important. I would attest to that. But how do you get there? Because we're looking for repetition. That's what price patterns do. We're looking for recurring patterns that will produce the same result or near the same result. Well, I found it didn't happen. So searching as to why that was, part of it was technicals. Initially, the pattern could look the same, but a lot of it was what was going on in the broader markets and sectors and what we call intermarket analysis, in addition to market internals. And as I put those together, it increased the odds of the trade working out exponentially versus just looking at the pattern itself. Now we have to have a deeper understanding of those patterns, but putting together this intermarket analysis as to, you're going to trade semiconductors, you may as well know what the semiconductor index is doing, as well as which ones are stronger or weaker than the others. That's called relative strength and weakness. And so market internals give us a way of timing what's happening in the broader markets. And that was a big thing, because there were times where I would see, let's say, for example, a breakout pattern. So essentially, we trade breakout patterns, we trade pullback patterns, we trade continuation patterns, and they come in different forms. So as we look at those patterns, and I say, well, that one looked exactly like that one. So I thought, why didn't it work out? Well, there are certain timing elements to the market, whereas if the market, and I'm not talking about overbought or oversold, I'm talking about markets have reached resistance, or possibly sentiment has reached an extreme, or breadth has reached an extreme, where the markets, the way of measuring it, they're just getting tired. And so those patterns started failing. And so the three elements here that I call this three-legged stool of technical fundamentals really puts the odds in our favor in a big way for swing trading. Now, swing trading or day trading, we put that in perspective. What are we after? I'm not an investor as a swing trader, which I could be, but I'm looking to make some money in a relatively short period of time, usually 2 to 10 days. So I'm not hanging on to something for months and months. I'm trying to get in at the most opportune time, and the patterns that I focus on typically are going to start paying within the next day or within 3 days. Usually if it doesn't start going in my favor within that amount of time, something's probably wrong. So for day trading, it's just that, day trading. And all we're doing here is changing the time frames that we're looking at. That's all it is, because the foundation of what we do doesn't change. And that's what I would say is a universal truth to what we're doing as far as price pattern traders. We can change the pictures. Obviously, the picture on a daily chart looks very different on a 5-minute chart. There's more information. Now, I'm not interested in the 5-minute chart as a swing trader. I don't even want to look at the 5-minute chart as a swing trader. Because if you have, you've probably given up some great positions because of a red bar on a 5-minute chart, only to see it go in the direction that you thought it would. So we all do the same things. We make the same mistakes and we learn. Part of education is avoiding those mistakes. So swing trading gives us, some flexibility. I don't have to be in front of the screen all day, and I don't use indicators. Now, indicators can be helpful. I use some moving averages, but I'm not an indicator trader in any time frame. I look at prices that maybe get extended, and then they pull back. But one of the things that you learn is this idea or concept of being overbought is meaningless. You could say, and an example of that, How long has gold been overbought since it broke out of the trading range? You might start thinking maybe you've got the wrong settings, you've got the wrong indicators because it just keeps going up. Well, this is where trend analysis comes into what we need to do, and we need an objective way that's black and white as to our developing it, what develops a trend, what changes a trend. And so as we do that, things become a lot clearer. So with swing trading, right, I'm going to be exposed to overnight gaps. So I need to know when earnings reports are coming out. And I can decide not to trade. That's a decision, and that's a choice. You may want to hold on to the position. That's a choice. You may say, you know what, I think those earnings are going to be great, and then it's going to move up, and that's all good. So one of the great things about trading is we get to make our own rules, and we learn from those rules. Now, say it doesn't require watching the screen all day. Frequency of trading is better than investing, and I can profit in up and down markets. And if it's going sideways, it'll be much more difficult, but there are other instruments other than just trading the underlying. This is what we're after here as to putting together multiple time frames. And we're going to do that in a really easy way. So from a swing trading perspective, my macro time frame is the weekly chart, and the micro time frame is the daily time frame. What I'm interested in that weekly chart is it going up, down, or sideways? And if it's going up, the probability is that if I pick long trades on the daily time frame, the odds are in my favor. And if the weekly time frame is going down and I pick entry points on the daily time frame, the odds are in my favor. This is an odds game. How much can I put the odds in my favor? Well, multiple time frames is one. What I called techno fundamentals is another. And as we put those together, we continue to build the odds in our favor with the appropriate pattern. Right? So that the pattern, which we're all after, is really the action point as to when we're going to make that decision as to how we're going to press the button and when. So what I'm looking for is when these are in alignment with each other. As the daily pulls back, the darker blue line, and the weekly is going up, and here's where I would insert the pattern as to whatever you're going to call the pattern, some kind of reversal pattern where that line lines up at the time. So as I said, advantages, trading with the trend, higher probability of success. You didn't have to be a genius for that one. Right? Momentum works in our favor. Right? Prices are likely to continue moving in the direction of the trend. Easier pullbacks or trade management. Well, I define the low risk entry points and the places where I'm going to place the stops. And we'll get to that. Right? Cleaner chart patterns. Well, what does that mean, cleaner chart patterns? Well, certain chart patterns you would look at, and I would just define them as overlapping bars, overlapping each other's, breakout failures, breakdown failures. So we want patterns where there's fluid movements. Fluid meaning bars open up in the area where the prior bar closes. And you say, well, why is that? Well, because the only thing that changed, the psychology didn't change, the trend didn't change. It's just that the time frame stopped. It was the end of the day. It was 4 o'clock. And at 9:30 in the morning, just forgetting the overnight trading for a moment, traders went and they did the same thing again. Right? They started looking for longs in the stocks that are going up in multiple time frames. There's less emotional stress. Well, there's less information to focus on. If you want stress, go look at a 1-minute chart. If you want less stress, right, swing trading is the way to go. So as we look at those swing trading patterns, unless it hits our stop or our target or something of significant happens, there's nothing to do. You can take your phone, set an alert, as to what's going on and let it do whatever it's going to do. That's what swing trading is. And so look, as it says, you're looking to ride the wave. I'm looking to get in at the appropriate time and looking for it to exit within 2 to 10 days. So let's clarify or simplify candlesticks. Everything that I do and teach is about putting together different concepts for simplification. So with candlesticks, there's lots of names, dark cloud covers and haramis, and some I can't even pronounce the names, but is it a big bar, a wide range bar, or is it a narrow range bar? And if it's a big or a little bar, does it have a tail on it? Meaning, if it's got a tail on it, the topping tail, that means it went up and it came back down again. Now, if it's a topping tail bar, is it a big one or a range expansion bar, which is going to show more emotion and commitment? Because in this case, it ran all the way back up and it came all the way back down again. And with the bottoming tail bars, it went down and it came all the way back up. And that's going to be more significant than if it's a little narrow range bar. Can you see this is really just common sense? The thing is, you have to put it together in a format that makes common sense. Now, where they happen and what's the trend? So if I have multiple time frames in alignment and the daily time frame pulls back into an area called support, and it forms a bottoming tail bar where buyers took control, odds are the trend is going to resume itself and it's going to go up. Why? Because multiple time frames are in alignment. And what does that mean? It means that there are traders looking at a weekly time frame and they're looking at a daily time frame, and they're both thinking the same thing. XYZ is going up and I'm looking for a place to get on board because I believe it's going to go higher. Essentially, what we're doing is building a belief system. That's your trading plan. How are you going to build your belief system that tells you when to act? And what does it tell you about what's your expectations for the future? That's what you're doing. Now, how you get there, well, there's many different ways. And I'd want to do that through the most simple way possible. And this is where it starts, where I'm going to take those candlestick patterns, I'm going to put them together in little groups, and I'm going to see where they form in alignment with multiple time frames. Now, let's talk about pivots or swings. Some platforms call them fancy names like fractals. I just call it a pivot. And what's a pivot? Well, as it says, there's a bar with 3 bars to the left and right of the pivot bar. Why would I be interested in that? Well, because prices move up and down. I'm trying to zero in at a point where it's going to make this turn. So when I have a bar with 3 higher lows, in this case a pivot low, prices went down for several bars, swing trading, daily bars came down several bars in a row, and it stopped. And then it started going back up. The essence of what we're looking for is to be getting in here as it starts going back up with the correct candle pattern. So we're building on this. So here, it's formed a pivot, and that has created support. That's what happens when a pivot forms, because that wasn't there before. And as you're looking at a chart, and you're looking at the right side of the chart there's nothing there. But I can look to the left. That's what these eyeballs are. When I could look to the left and I see a pivot over there, that communicates to me that buyers stepped up in that area. And that creates a belief. If they stepped up there before, they'll step up there again. I believe that. Now I need to see a pattern called a candlestick that confirms my belief. So price is coming down. We could insert a bottoming tail bar here. That means it went down and came back up again. That would be a good bar to form to get in an area of support. And now we want to see if it continues higher. So once it does that, right, we can see it starts to create a trend. This is the essence of a trend. Pivots making higher highs and higher lows. That's an uptrend. Lower highs and lower lows. That's a downtrend. Now, if I can find that in multiple time frames, as I said, the odds are in my favor. Let's continue. All right. I like to use a couple of moving averages. Now, is that an indicator? Yeah. Is it subjective? Yeah. But I like to call them visual aids. So as I'm looking at that, I want to use moving averages that make sense to me. And so if I can see what's happening in multiple time frames by looking at one through the eyes of these moving averages, that would be helpful. So you can calculate, as it says, calculate the number of bars in a lower time frame that make up the higher time frame. Multiply that number by the moving average in the higher time frame. That's your moving average in a lower time frame. Smart moving averages, I think it's just a smarter way to use them. There's nothing special about them. So a monthly 10 MA, you put a 10-period moving average on a monthly chart, it's equal to the 200 on the daily. 20 bars times 10, 200 MA. Weekly 10 MA, same as the daily 50, 5 bars times 10, 50 MA. And on the daily time frame, we're going to put a 20-period moving average. And then we're going to put the 3 of them on there. So this provides us a view what's happening in multiple time frames when we're looking at one time frame. And this creates a belief, meaning if the daily time frame is going up or down, and the weekly time frame is going up or down, and the monthly is doing the same, that's a powerful piece of information. And I'm looking at one chart. So here's an example. We want to trade the trend, define the trend. Where are the buyers and where are the sellers? Look at the pivots. In this example, prices were trending down. The 20 is under the 50 is under the 200, and they were pointing lower. Well, that can change. And there was this relatively large retracement up into the 200 MA, which most times there's going to be sellers there because it becomes a self-fulfilling prophecy. So as it begins to pull back, this is like, I'm not so sure. Can this actually make the transition to an uptrend? This retracement makes me think that's possible, but I need more evidence. It forms a pivot. Once it forms a pivot, I believe there's going to be buyers there. And so at that point, will it actually happen? Do they begin to move back up again? So this is not a great entry point. And I'm not going to tell you, like, here's a chart and look what happened and look how great it is. If I'm looking at something like this, I'm thinking it's making a transition, but I'm not so sure. It's under the 200. It could break down, even though that there's 2 pivots there. We've seen this happen quite often. But once it clears these highs, that's an overwhelming piece of information. It's above all the moving averages. There's been this transition. The 20's above the 50, and they're over here. They're starting to turn up. Now, here's another concept. When prices make this kind of a momentum move like that, the support is way down here. And these are kind of big bars. So as it is to go sideways, what does that communicate to us? As I said, charts are pictures of what other people think. Those charts are created with money. So if my assumption is correct, that this has made a transition and the power of this move here is going to create higher prices, one of 2 things will happen. It'll pull back where buyers are going to come in. Right? That's a pullback setup. But if it goes sideways, that means those buyers are stepping up regardless of the fact that it had this big move. Right? Just that move there. And so that's bullish. And by going sideways, it begins to build a base. That's a quality breakout type of a setup. It was preceded by a transition. It got a little extended short term because the size of this move. It got a little extended. It wouldn't pull back and it went sideways. So here, this is your breakout. That's your entry point. And you're going to put a stop down here below the pivot. And this brings in the conversation of money management. I'll touch on that in a little bit. So at that point, you're in the trade. You have to manage it. As it begins to accelerate, you can start raising stops. It begins to pivot again. Here's a pivot. And you continue to wash and repeat. Right? You just can do it over and over again as the pattern develops. When it pivots, it created support where there wasn't any. And I believe there's going to be buyers again. Somebody's going to buy down there. Right? They're going to buy down there. And what kind of candle does it form? It forms a bottoming tail candle. And it starts moving up sideways again at resistance. Another breakout. Another sideways. And just continues and continues. Over here, the momentum is beginning to stall. Don't need an indicator for that. All I need is to see the distance between these highs. Once it comes up to that high and it forms a red bar right away and starts going sideways, the momentum is stalling. Because before, when things were starting out, there were no red bars. And red bars produce very little. So we continue to monitor and look at bar by bar and pivots and trends and so on. Here's another example. Same moving averages. Prices are trending down. Right? So the daily and the weekly are pointing down. How do I know the weekly is pointing down without looking at it? The 50 MA. Look at these pivots up here. Here, it was trending up. The 20's above the 50 and they're pointing up. And the momentum stalls. Look at the size of that candle. It's big. But maybe, it could have continued to go up, but it didn't. It came down to the pivots. Buyers are there again. And look at here. It got rejected. It tried to move up and got rejected. So sellers are taking control. Now this bar, when you see a bar of that size, that is power. That's convincing. What we want to do is, I'd mentioned before, groupings of candles. So we put together these groupings of candles that create a bias as to what's going to happen. And at some point, I need an action point. Because knowing all of this, I need an action point. As I said, momentum was stalling up here. There was a rejection here. I get a wide range bar to the downside. This is what I call a 1, 2, 3 continuation pattern. Wide range bar, inside bar, short below there. Now you have to have a management style. Now it begins to transition. And we continue the same thing. Down here, it broke down. At that point, it looks like that's going to keep going down. There's a 200 period moving average here. It's a red line that I chose to put on the chart. That's going to influence some of my thinking because a lot of people are looking at that moving average. In any event, it's just a line that on the chart. This said it was going to keep going down, but it ripped all the way back up again. And the 200 was rising. That means the monthly time frame is in an uptrend. So it takes out the pivots and it begins to rattle around. And now it pushes up again. Start thinking buy pullbacks. This is a little pullback pattern right here. Green bar up. This is your standard retracement into an unfilled gap near a 50 MA. That's your black and white vanilla pullback pattern. Now here, something happened. I don't know what it was, right? Because it should have broken out, assuming because of the multiple time frame uptrend, 20 rising, 50 rising, 200 rising, but it gapped down. Could have been an earnings report, could have been an ugly day in the market, I like to use the term, sometimes markets have, or stocks become a victim of the market. For whatever reason, there's been a lot of victims lately with the different news on tariffs and China and what have you. And they get these nasty days that get negated, because the trend is up. So would a day like this, what would have happened? Well, something could have happened. We would have got stopped out, but it gapped down. One of the rules, right? We have disaster rules for situations like this. And disaster rules can save us. When I get a situation like that, one of the things I'm going to do is look to the left to see if it's on support. There was no support over here, but there was a 50 MA. There could be buyers there. So I'm going to wait at least 5 minutes to see if it can begin to recover. And that has saved a lot of trades by waiting 5 minutes if it can recover. I don't know what happened on this day, but it did recover by the end of the day. Now, why did it form that red bar? Because it filled the gap. Traders are caught up here. Am I want to short that red bar? No. If it broke the low? No. Because the trend is up. I'm looking for longs. Right? That's not a long, but it exploded higher. I don't know why. There really wasn't a pattern there to support that, other than this was just turned out to be a shakeout when it broke down like that. So one of the things you're going to learn as you look at charts is that things are going to happen that don't make sense based on your method. Now, if you were long and holding on to this and it went up, you're like, wow, that was a relief to see that happen. I have no idea why it happened, but it didn't give us any type of an entry point. But not trading against the trend would at least saved you from making a mistake of looking to short something like this. We're not going to do that. We're looking for continuation patterns. And we're looking for patterns where things are not so erratic. In other words, they tighten up. What does that mean? They tighten up. Well, let's just call this loose, because a lot of overlapping bars, it gaps down, it comes right back up again. It's kind of crazy. And so there was a big disagreement between buyers and sellers for whatever caused that to happen. But when those buyers and sellers, that supply and demand, is in alignment with each other, things tighten up. Meaning the battle between those forces of supply and demand, they begin to coil the spring, and the bars tighten up, and we see clues like bottoming tail bars, some of the things we looked at before. So I'm looking for patterns in alignment with the trend that tell me it's time to act. This is, I would say, just not ready to act upon yet, but it might because the trend is up. I need more information. So we're building this belief system. Right? I look for price support. Is there price support to the left? And let's just start on the left side of the chart here. Prices were moving lower. And you have these opposing forces, pivot highs. That PH means pivot high. We looked at that before. It means that there's 3 lower high bars to the left and right. And pivot low, 3 higher lows to the left and right. So as prices broke down, it looked pretty dire, like it's going to go lower. And it came all the way back up again. This is how I look at retracements. I don't look at Fibonacci retracements. I'm not into the esoteric analysis. For me, it's common sense. It broke down, which wasn't good. And it came all the way back up again to resistance. So buyers took control. Now here is where it starts getting interesting. It gapped up. And it gapped up above these pivot highs. That's positive. The converging moving averages tell me that this transition, multiple time frames are coming into alignment with each other. Not only multiple time frames, traders looking at the daily chart, those that are looking at the weekly chart, and those that are looking at the monthly chart. So the more traders or institutions that are coming together with the similar belief, in this case, it's going to go up, better for us. And we look for patterns like this. So clearing these highs, little consolidations over here, pullbacks toward the 20 MA. But as this develops, over here is where I find is the best setup. It comes into an area of the unfilled gap. I know there are going to be buyers down there. That's just the way the market operates. Right? You're going to be buyers. Institutions are going to be at the 50 MA. That's how the market operates. Now, that's just a belief. That's not an action point. Now, as it comes back up, where's the action point? Right here. I'm going to be talking about this kind of action point on Wednesday. We do what's called an MT Live at 12 o'clock on Wednesdays. This is called a 1, 2, 3 pattern. Been trading it for decades. So here's like this was a retracement. This is a big retracement. Prices had pulled back and it retraced all the way back up to the pivot high. And that was a positive. This is my action point, the 1, 2, 3. Stop's going to be down here. And we continue to monitor. Now, as this runs up, this action point up here. That's a swing trade, trailing prior bar's lows. Out. I said, well, Greg, how can I take advantage of that? Don't sell. You got to be willing to give back profits. That's how you do it. Now, this is what I call a red bar ignored. Right? Meaning the red bar suggested it would come down here, and it didn't. There's another retracement. Scrolling the mouse, another retracement back up. And we continue to do the same thing over and over and over again. So swing trade, this is black and white setup here. This said it was going to pull back and it didn't. And this gets a little messy over here. So this didn't give me any clear entry points. And then it gets a little extended. And I'm not here to talk about options, but I will mention scenarios like this where prices are moving up and you're holding onto a position. This kind of patterns where you'd look to sell maybe a covered call. But we're looking for new patterns again. This is in an uptrend. I'm just waiting for a new pattern to form in a stock that's in an uptrend in multiple time frames. As it says, all MAs are sloped up. So I believe it'll continue to move up. Now I'm just looking for a picture to give me an entry point. Now, this works in anything you're going to trade. And that's how you know it's the truth or that it works, because it doesn't matter what you trade. This is a chart of bonds. If you were trading Forex, if you're trading futures, if you're trading crude oil, if you're trading copper, if you're trading Apple, you're going to apply the same exact thing to this. It doesn't matter. It's all based on trend, support, resistance, and multiple time frames. So we're looking for patterns. As prices break out above resistance, you've probably all heard it before, what was resistance becomes support. Why is that? Because there were sellers here, and now that it cleared it, there should be buyers there. There are sellers up here, and it pulled back from there. You look to the left. Now, when you look to the left, and we believe that there's going to be sellers up here, one of the things to look at is how did it get there? What does that mean? How did it get there? Well, did it get there over the course of 3 weeks with a lot of smaller bars, which it's been traveling for several weeks to get to a destination, meaning resistance? If it's been doing that, that means that buyers have been stepping up for whatever reason they do, meaning on their own method or trading plans. They've been doing that for 3 weeks. As it comes up to a resistance area, it's likely that they're going to sell. That's a belief. But if it gets there in one bar, that means that there was an explosion on that day. And that only happens because of institutions, big money coming in, and it retraced up there in an explosive way. What do I do with that? It makes me believe that there are going to be buyers following up. How is that? How are they going to do that? They may just buy it, put a big stop. Everybody's got different strategies. They're going to be buyers at support. They're going to be buyers at a pivot. They're going to be buyers on some type of a pattern. They're going to be buyers. Some will use a Fibonacci retracement or who knows what, an Elliott wave count. We can't trade all of those things. We have to have our own method. So what I'm looking for is prices coming down to a reference point or creating support. How does it create support? It makes a pivot. What's a pivot? A bar with 3 higher lows to the left and right. So this little down arrow there means it was a pivot. It became a pivot after this day. 3 bars. It's simple. You can count the bars. Most software is going to be able to put some little dot or some marking there to mark the pivot. So it's created support. It comes back up. Before I mentioned to you a 1, 2, 3. This is a 1, 2, 3. 1, 2. It's got to take out the high. Here's your entry point. And you might say, well, Greg, what about those pivots up there? I often get asked this a lot. Hey, well, how's it going to possibly get through that? There's pivots up there. Well, you have to, again, continue to build this belief system. And if you're a swing trader, you have a belief that prices are going to continue to move up based on your analysis of multiple time frames and patterns and support and resistance. So if prices, no matter what they are in an uptrend in multiple time frames, and they've pulled back or they've gone sideways and there's some resistance to the left, I have a belief that it can take out that resistance. Because trend, let's just put it this way, trend trumps a prior high. Common sense. If something's in an uptrend and you buy a pullback, it's going to come up to an area called a prior high. It might stall there, but the probability is it's going to take it out. That's called an uptrend, higher highs and higher lows. We're not buying after it makes a higher high, but some do that. They call that breakouts. I call that a greater than 100% retracement. So I want to get in near some kind of support that allows me to share size it accordingly. Share sizing mean I'm going to calculate how much money I'm willing to risk. And then I'm going to share size that based on where my stop is going to be. Money management and position management are a huge part of being successful. Without that, you're not going to make it. So we have to have a way of managing the position and managing the money, just like any other business. Patterns like this, we're going to have to sit through stuff like that. I mean, sometimes you're going to be in a trade and you're going to give back what you could have had as a profit. And so this reaction had to be because of those pivots. And even though it punched up above it, our stops are going to be down here. Or, look, I mean, a short-term trader, there's nothing wrong with selling half. But if you're going to get a larger gain, you're going to sit through retracements. This right here is what I call a 180 reversal. It's candlestick patterns. It probably has some kind of name. I couldn't tell you what it is. I just call it a 180. It went down and it came back up again. It was a deep retracement. Here's just a 2-bar retracement. It's just 2 bars. But they're wider bars. That's powerful. Above here, it should keep going up. Why? Well, is there anything to the left to stop it? And we don't have that on the chart, but that's what we would have to look at. Is there anything there? Now, groupings of candles. All of this, if we look at this whole grouping here, That's called a rounding bottom. That's bullish. So, as I said, this is bond prices. If it was Apple, if it was PLTR, IBM, SPY, it doesn't matter. It's all the same thing. Support, resistance, pivots, trends, multiple time frames, daily up, right? 20 MA, weekly up, 50 MA, monthly up, 200 MA. Probability it's going higher. This is how you put together the starting point of a trading plan. And as we've been talking about, weekly time frame, your bias, multiple time frame alignment, which we looked at, is the daily up, the weekly up, monthly up, or are they all down? What's the trend? What's the trade setup? What's the trend? What's the price pattern? As we put this together, the patterns tell us when to act. Now, my long entries, I want to be near support. I don't want to be buying after it's up 6 bars in a row or whatever it is. Where am I going to put my stop? If I do that, it doesn't make sense. I have to wait for a new setup, even though you would see things moving, which is what happens. It's called chasing. Right? We've all done that. I'm so convinced at this point because I see it's going up that I press the button. And then you start thinking, probably after the fact, if you just started out trading, did I buy the right amount of shares? What if this thing pulls back? And what do you do when it begins to pull back? What did we all do when we started out? I hit the sell button because now I'm scared that it's going to turn into a big loss, or even worse, you don't, and it becomes worse, and you lose a crazy amount of money. You don't know how to manage it. This is why you need a trading plan with rules on how to manage. And this right here is your beginnings of putting together some basic share sizing. If you learn anything from this presentation alone, this part right here, if you do that and you apply it, you have the chance, very high chance of lasting and learning. Because without this, you're going to blow up your account. And there's so many dead accounts out there because they didn't apply this type of basic thing, meaning, and this just gives you some numbers to start out with. $100,000 account, nice round number. You say, how many trades a day can I break this down? What can I lose in any given day to where I'll say, you know what, it's just not my day. Whatever happened, crazy market, just didn't pick the right things. I lose $1,200. I'm going to stop trading for the day. So maximum loss per trade is $300. That's what I'm going to risk. So now I have to look at the chart and look at what we had looked at. We can go back here and say, if my entry point is down here, I should up here, and my stop is down here, how many shares or how many contracts can I trade that risk $300 with a stop below these bars? Well, if I can't do that, that means I can't trade it. Meaning I can't put a share sizing down there to risk 300. But maybe I could do a smaller amount of shares, right, and get in. This gives you a guideline. So here we're saying if my stop is 40 cents and I'm going to risk $300 times that, I can do 750 shares. Those are pretty simple stuff. $1 stop, right? There's your share sizing. 10-cent stop, 3,000 shares. 10-cent stop, penny stock, whatever it might be. Right? This is what's going to keep you in the game through the learning curve. This is smart, because if you're just starting out or you're trying to figure out what's the best approach for yourself, what's your trading plan going to be, the focus shouldn't be on making money because you don't know enough. Now, some would say, well, ultimately the focus is to make money, but your focus wants to be to execute your plan according to you've designed it. And again, there's going to be mistakes. This keeps you in the game. I mentioned Wednesdays. This Wednesday, we do an MT Live. You can you see it on YouTube. It's on Facebook. You can come into our chat room, register for that MT Live. So this Wednesday, we'll be doing one at 12 o'clock. So you can check that out. You can watch it. And we do pre-market reviews of our open positions and the broader markets every day at 9 o'clock. So you can view that as well. And this is my offer. If you want to learn how to do it yourself, this course will teach you how to do it yourself. It's a new course that I've been developing, and it started out with just being how I view candlesticks. And I've had many asking for a couple of years and just never got to it, a course on intraday trading, which is not today's subject, but this course developed into a very extensive course on candlesticks in multiple time frames for swing trading and day trading, as well as using market internals. And while some of it is a slide presentation, like you just saw, giving detailed explanations, I've created a lot of short videos, anywhere from 2 minutes to 10 minutes or so, explaining concepts as to what's happening in the markets right now. So a little bit different from other things that I've done, but it's turning out great. I'm actually still working on it. I'm on the tail end. This course will be available at the end of this month or the first week of November. But with the course, you get lifetime access, 24/7. So I said before that I used to do seminars in hotels, and people would come to my offices that I had years ago. That's the old way, meaning after you sat there for a weekend, you're saturated. Your head is saturated with all this great information. So now I do a course again in a month or what have you. But here you can watch it 24/7 as much as you want. You could hit the rewind. Oh, that was interesting. Let me back it up and watch that 5 minutes again. And you can do that each day. So I've got students that say, you know what, Greg? I just watch a half hour of your course every single day. And so they're able to digest that and assimilate it on their own time frame to watch it over and over and over again, because repetition is what we need to assimilate this information, because we're building a thought building process, a belief system, and we need to have confidence in that, and we gain confidence through experience. So knowing the information, then you have to actually do it. And you need to do it just like whether you're an accountant, you got to get your calculator out, counting and math. But if you're a doctor, you're a lawyer, you have to get up there and learn how to speak and present properly. If you're a mechanic, there's the theoretical, and then you have to do it, get your hands dirty, so to speak. Well, trading's the same way. You have to do it and experience it. As you see those candles forming, you have to experience those and say, you know what? I know that's a red candle, but the trend is up. My stop is down there. It's not time for me to raise the stop. And you got to sit through that, because there's emotional baggage that comes with it, especially if you started out with no skills or you didn't adhere to stops. That's the psychological part that kind of plays on your head. So you got to work through that. So watching it over and over again and then doing it. And then I do coaching every month. Either I'm doing it or my partner Dan's doing it. We do coaching session each month, and you get to come to that forever. And you ask questions, we reinforce the concepts, we review the broader markets, we look at trade reviews, and that again reinforces that. Now, I created a add-on for Metastock, which is phenomenal. and it does the trend analysis and it gives you setups. And I created some stuff for TC2000 as well. But the meta stock add-on is what it was many years ago, and the trend following part of that, kudos to myself. It's great because visually you can see it puts together what we've been talking about here, what the trend is. And so then it gives you some of these setups, whether it's a 180, so it might have a bull trap. So the different setups that you can scan for, it like with any scanner, it puts you in the ballpark. Then it becomes your job to look at that setup and put together what you learn in this course or what you learned in this webinar and saying, that's a quality pattern. That's the one that I understand. So, and that's a big thing. Do you understand the pattern as you see it? Because it's easy to define the quality patterns from the ones that are like, let's just call them questionable or messy, overlapping bars. And it's just, that's not what I'm looking for. So as you learn to do that, the odds become in your favor and market environments change. And so even the trend following add-on there, you can apply it to the S&P 500. And so as the trend becomes questionable or it's in a bullish uptrend or downtrend, it'll define it for you. So software can help us by showing us what we already know. And that's how I view software like that. I've already created my trading plan and what I'm looking for. Now the software will show me what I already know. And that's huge because it's a huge time saver. So I don't know if there's any questions. I don't know where they are in this platform, Jeff.
We had a couple questions, and I answered one of them. One wanted to know how you look at the daily, the weekly, and the monthly trend all in the same chart. And my answer, you can correct me if I'm wrong, because sometimes I am, is to use the 20, the 50, and the 200 simple moving average.
Right. So
Okay.
I explained that the 50 MA on the daily time frame is equal to the 10 MA on the, if you looked at a weekly time frame and you put on a 10 period moving average, it's going to hug those prices relatively close. So if the 50 is pointing up and the 20 is above the 50, that means the daily and the weekly are in an uptrend or vice versa. It's really simple. So without looking at, I don't need to look at the weekly chart. That isn't to say you can't trade from the weekly chart. You can, but my action points come from the daily time frame. I just want to know that the weekly is in an uptrend. I don't have to look at it. And the 200 is equal to the 10 MA on the monthly time frame, right? 20 trading days make up a month. 10 period moving average on the monthly. To multiply that by 20, it's a 200-day moving average on the daily. More time frames in alignment, the greater the odds are it's going to continue. Common sense. Now, buy pullbacks to support, buy breakouts, look for a confirming pattern with your bias. And so this course is going to go up and it's going to double in price at the end of the month because that's what I promised. And, for those that many have already purchased it at the discounted price, and many of them have some of my other courses, but it's about repetition over and over again. And it just has to get to the point where second nature. It's got to be second nature. You look at the chart and it's like, that's what I'm looking for. That's not what I'm looking for. And the software puts you in the ballpark. That's the advantage of it. So if you have questions, email me, Greg at Master Trader. Happy to answer any questions.
Hey, Greg, I don't know what happened to Jeff. Jeff, are you there?
Yeah, I thought I'd actually turned on my mic. Can you hear me now?
Yeah, we can hear you now.
Okay, well, maybe I muted it instead of unmuted it. Mike wanted to know, Greg, and I'm not sure I understand this question, but I'm going to ask it as is. Do you incorporate expected move when finding support and resistance levels?
That's a good question. So, and expect where price is going to go to. One of the things that I didn't have time to talk about is what I call a price void, meaning how far away is resistance from my entry point. Now, right, it's likely if there's a swing high, a pivot up above, it's likely to go through it. But there's going to be sellers there. So when we look at, say, stocks that are bottoming out, that have gone down for a while and they've gone sideways for a while, that sideways correction through time moves prices further away from any resistance area. So that increases the probability that it could make a larger move. Now, bottoming stocks by definition will have a lot of people holding losses because it had come down. So we have to look at where's the probability where prices are going to go. So I want to see that there's a reasonable distance from my entry point to where it's likely to stall. As I said, in an uptrend, I'm assuming it's going to take out the prior swing high. So that would be in where I think it's going to go. But from there, you have to manage it. And one of the ways of managing it is just trailing prior bars lows. So every day, at the end of the day, as it goes up, especially as it starts to become extended, is to raise the stop under a prior bar's low. And then from there, we let it pivot. I explained to you what a pivot is.
That's all the questions, Greg. Do you mind if I spend some time talking a little bit about the add-on?
All right, cool.
All right. Thank you very much for joining us and spending some time with us. I appreciate it.
Okay, Jeff, thank you.
You bet. I'm going to share my screen. All right. Say share. All right. A big thank you. I want to talk a little bit about the Greg Capra, and then we can close out. But in it, it's broken down into two setups. There's the trend following set. Oh, not two types of setups, really. You've got your trend type following setups and your gorilla setups as well. I actually put all of them in a matrix, and it fits into two sides. But here it's going to kind of show you what the setup is, what type it is, what the purpose is, the market conditions that you're looking at, and what the key benefits are. But these are all kind of programmed in to the Metastock add-on that we've created for Greg. And here's the second screen. I'm not going to kind of read through them, like I said, but you can kind of see there's a lot of different buy and sell setups that are actually put in here for different market conditions, depending on kind of where you think you're at. And looks like any of the add-ons. So that's about, I don't know, it's a good number of different marketplace or different setups that's included. Each one of them are going to come with clearly identified entry triggers, stop loss placement plans, target setting, a trade management plan. All of that's going to kind of be included as part of it. So in total, there's 17 different explorations to kind of help you look through them. Allows you to scan through the markets, find the opportunities that exist there. All of the setups include the master trend indicator, so you can very easily see whether it's bullish or neutral or bearish. And as a bonus, if you get his add-on, you're going to get the master mentorship, the master swing and options. You get 2 months of his mentor advisory letter. That includes his advisory letter, swing trading options with intraday uptrades, premium video, access to the Facebook group, all of that kind of stuff is included with it. And we also did record a class. This needs to be updated because it's a recorded class. That means it's available instantly as soon as you subscribe, add the program to your account, if you would. And in the first part, Greg sits down and he discusses the setups, how to apply them, how to work with them. And then in the second part, I actually go in and talk about how to use those on the charts. And they actually worked really, really well. So in total, As part of the add-on, you get 16 price and volume setups. They're designed for swing and day trading. Includes complete documentation designed to help you scan, find those setups. And normally this is $19.97 for this add-on. At the event today, we're going to do $9.97. We'll give you a money-back guarantee, of course. We'll back it with our 30-day money-back guarantee, just like all the other products we've talked about today, with the exception of Sunny Bands, which we'll just give you for free for 7 days. If you don't have Metastock, we'll give you access to Metastock as a free trial. So you really have a no risk kind of opportunity. If it works for you, that's great. If it doesn't work for you, you can return it and get a full refund. So you can do this at metastock.com/mastertrader. You can give us a call at 800-882-3040, or you can go to metastock.com/saleschat. This is also included as part of the whole big package that includes all of the add-ons that we've talked about today. I've got them all listed here. But normally those would be $9,532. It also includes all the bonuses that don't even go into the calculation of that price. It's $3,636. Again, 30-day money-back guarantee. You can try them all out, see how they work for you. To do the special package, because of all the discounts involved, you need to call us at 800-882-3040. Or you can chat with us at metastock.com/saleschat. I do want to say thank you to Stocks and Commodities Magazine for sponsoring all of our events. They're such a great sponsor. Also want to say thank you. If you haven't joined the Traders Forum yet, go to thetradersforum.com and sign up. It's free. It doesn't cost you anything. Tons of really good stuff going on up there, and I enjoy it. I've actually also got a ton of really good stock picks just from the room. So I'd say I've also learned a lot, and that's the whole point. It's a room that's designed to be traders helping traders. So join us, come chat with us. We'll happily talk about like what we're doing. Thetradersforum.com. Again, the action pack, Metastock. If you want to get anything today, you can go to metastock.com/summit deal. I think that's the right offer. If you want to get the big package, give us a call, 800-882-3040. or metastock.com/saleschat. Mike says, I had a great day. Thank you. Thank you for being here. Mike, appreciate it. Thanks to all of our speakers, our sponsors, all that kind of good stuff. A great deal. There's some great offers here. If there's something that's interesting to you, give it a go. We'll let you try it. We'll give you that money back guarantee. If you haven't just tried Metastock before, where's that slide? Do that. That's a great place to get started. For $75, you can use Metastock, the software that's been rated #1 in its price category for 32 years straight. Get going. Metastock.com/summit deal. Metastock.com/saleschat. 800-882-3040. That's it for me. Thank you, Greg, for the help. Thank you, everybody, for being here. We'll see you again at the next one. Take care of yourself.